Okay. In our previous lecture, we completed about exemptions and liability to pay GST. In today's class, we are going to discuss input tax credit chapter, and hope you have read it once. Yes? Okay, fine, we'll discuss this. Look into this. First, the concept of input tax credit already I explained in the basic concepts itself, that there is a registered person and that registered person is having some inward supplies and outward supplies. On the inward supplies, he need to pay price plus GST, that is 1 lakh plus 12,000, and this 12,000 is known as input tax, which can be availed as credit and adjusted against the GST payable on outward supplies. Whereas on outward supplies, he will be getting some price plus GST, say that is 1 lakh 50 plus 18,000. This 18,000 is known as output tax or gross liability, and this input tax credit will be set off against the output tax liability. So that is a net GST payable. So literally the value addition is what they are paying GST. That's what I told you, 1 lakh and 1 lakh 50, the difference is 50,000, and the rate of GST is 12%. So 50,000 into 12%, 6,000 is the net GST payable, 18,000 minus 12,000. Now journal entry wise, if you see, what is the entry for this purchases? Purchase account debit 1 lakh, ITC account debit 12,000, to supplier account 1 lakh 12,000. So on purchase, please concentrate on purchase, whatever GST you paid either to your supplier or to the government, on your purchases, whatever GST you paid to whom? You paid to supplier or you paid to government. So that can be taken as ITC. So 12,000 we will take as ITC. Then what is the entry for sales? For sales, the entry is debtor, that is recipient account debit 1 lakh 68,000, to sales 1 lakh 50, to GST payable 18,000. So that is the sales entry. Now we have recognized the credit 12,000, which is our input tax credit. That's an asset, correct? So this is an asset, whereas this 18,000 rupees is our liability. So GST payable, usually asset shows what balance? Debit balance, and liability shows what balance? Credit balance. So GST payable is showing a credit balance liability. Now liability you need to cancel. How to cancel the liability? You will make a debit. So GST payable account debit 18,000, to ITC account 12,000. So the difference amount is what you need to pay, that is nothing but to bank account. This GST payable account is nothing but to bank account. So that is 6,000, because cash outflow, you have to make the payment. And here there are three words that we need to understand: availment of ITC, utilization of ITC, and reversal of ITC. Availment of ITC means what? Taking credit. Where we will take credit? In GSTR 3B. So every registered person, while filing their GSTR 3B, so they will be taking the credit, that is how much ever purchases they made, on that whatever GST they paid, that they will enter in the GSTR 3B. That is known as availment of ITC. Second, utilization of ITC means this. So whatever ITC that is availed will be set off against the liability. This set off is known as utilization of ITC. Again that will happen through GSTR 3B. Then reversal of ITC. Reversal of ITC means when the credit is already availed, that will be reduced. Reduction in ITC is known as reversal of ITC, and that will also be done through GSTR 3B. So availment of ITC, utilization of ITC, reversal of ITC, all these three things will be done in one statement. What is that statement? GSTR 3B, and that will be filed by every registered person. Availment of ITC is recognizing the input tax credit. Utilization of ITC set off with the liability. Reversal of ITC is reducing the ITC balance. Here logically if you see, 18,000 rupees is the credit, 18,000 rupees is the liability which we recover from our customer. Now you are the registered person. you make a sale of 1,50,000. Now from your customer you got 18,000 rupees. But this 18,000 rupees you collected towards the liability, GST liability. But this 18,000 you don't have to pay fully to government. From this 18,000, initially at the time of purchase, we paid 12,000, correct? Initially at the time of purchase, we paid 12,000 to our supplier. That we will recover. Now what is left? 18,000 I collected from my customer. In that 12,000 already paid at the time of purchase, I recovered. Okay. Now what is left with me? 6,000. That is what I remit to the government. That is the logic behind it. Is it clear? So 12,000 already I am paying at the time of purchase. Now from the GST which is recovered from the customer, we are adjusting. Means we are recovering our investment. Initially we paid, now we are recovering the balance amount we paid to the government. That is the logic behind it. Then GST paid on inward supplies can be availed as ITC and utilized for payment of GST on outward supplies. Therefore, what will be the net GST payable? Gross GST payable minus input tax credit is the net GST payable. Already yesterday we discussed how to compute the net GST payable, etc. and all. Now, in this regard, we need to understand that there are 3 ledgers which are maintained by GST network on behalf of every registered person. The moment you are registered, in your name there will be 3 ledgers which are opened by the GST network. What are they? Electronic liability ledger, electronic credit ledger and electronic cash ledger. Electronic liability ledger will contain your liability. So liability, when it will arise? Whenever you make sales, you will have some liability. That liability will be posted in electronic liability ledger, GST payable by you. Then whenever you avail the ITC, that ITC availed on inward supplies. On your purchases, whatever GST paid, you will avail as ITC. That will go to electronic credit ledger. Now, liability ledger and credit ledger will be set off. The balance amount will be paid through cash ledger, which means you have to deposit money into cash ledger. Through that we will make the payment of liability ledger. Coming back to this example, the moment you recognize a liability of 18,000, this 18,000 will go to liability ledger. The moment you recognize ITC of 12,000, that 12,000 will go to credit ledger. Now the difference is 6,000. That 6,000 you need to deposit into cash ledger, and that 6,000 will be utilized for payment of your liability. That is the logic behind it. So gross GST payable minus ITC, the difference amount you need to deposit as GST into cash ledger. Then how do we avail ITC? How do we avail ITC in GSTR 3B? Can I enter any number according to my whims and fancies? GSTR 3B, whatever GST paid on purchases, I need to enter. But that randomly can I enter? For example, 30 lakhs I want. Can I enter 30 lakhs? No. There is a logic behind it that if you are availing the ITC, your supplier should have reported it as liability. If you are availing ITC, your supplier, actually if you are ITC, if you are having ITC, means that is liability of your supplier, correct? So supplier will report his liability in GSTR 1. That is the first step. So there is a supplier, that supplier will add the invoice, B2B invoice, sale to registered person. See, B2C, there is no question of ITC na. If I am making sale to unregistered person, why the unregistered person will take ITC, only registered person will take ITC. So this B2B invoice will be added in GSTR 1 and that will be filed. By whom? By whom? By your supplier. Now in input tax credit chapter, you see everything from the recipient point of view. Got it? You are the recipient and you are having some inward supplies. Like that you see. Okay. So you have some inward supplies. Your supplier reported that liability in GSTR 1, and as soon as he report that liability in GSTR 1 and files the GSTR 1, from there it will travel to your GSTR 2B. His GSTR 1 data will be reflected in your 2B, GSTR 2B. In that GSTR 2B, from whom and all you have purchased, all those details will be there in 2B. But what is the source document for 2B? What is the source document for 2B? GSTR 1 filed by your supplier. Suppose if you are making purchase from 10 different suppliers, all those 10 different suppliers will be filing GSTR 1. and all this data will be accumulated into GSTR 2B. So the moment it comes into GSTR 2B, now you know, okay, what are the cases where your supplier filed GSTR 1? That credit which is coming into GSTR 2B is known as matched ITC. That matched ITC only can be availed. Suppose if there is a mismatch. Why will there be a mismatch? Because supplier not filed GSTR 1 or supplier filed GSTR 1 but he forgot to add this invoice, or he filed GSTR 1 and he added incorrect invoice. Because of that reason, in 2B there will be a mismatch. For example, your supplier did not file GSTR 1 at all, means that invoice will never come in 2B, or he filed 1 but this particular transaction he missed, or he filed 1 and he added your invoice also, but instead of mentioning it as 12,000 he mentioned it as 10,000, which means only 10,000 will come, so 2,000 rupees will not come. But finally, what is the evidence that this is your ITC? 2B is the evidence. Got it? Means whatever is there in 2B, that much only can be taken as credit. So that is called as matched ITC. So supplier will add the invoice in GSTR 1 and it is filed, then it will be reflected in 2B, that is known as matched ITC. So between this matched ITC and ITC as per your books based on invoices, why will there be mismatch? That's what I gave you. GSTR 1 not filed by supplier, or GSTR 1 filed but invoice not reported, or GSTR 1 filed but reported incorrect details. Got it? Now, this matched ITC is the basis, and to this you have to, you are the recipient, you have got matched ITC in 2B, that you will take and make some adjustments. Now you will get the adjusted ITC. That adjusted ITC you will avail in GSTR 3B. That is called as self-assessed ITC availed. You need to make some adjustments. What are the adjustments that you are required to make? What are the adjustments that you are required to make? That is, to this ITC which is in 2B, what adjustments you need to make? There are 3 ITCs which you should not take even though it is coming in 2B. Even though it is reflected in 2B, you should not take. What are they? Number 1, blocked ITC. There are certain inward supplies which are regarded as blocked credits that should not be taken. So blocked ITC, but it will come in 2B, but you should not take. Number 2, inward supply used for non-business purpose, personal purpose. You are buying something for personal purpose, but you gave your GSTIN because of which it comes in 2B. For example, you went to one showroom for purchase of mobile for your business and you gave your GSTIN. When you gave your GSTIN, that mobile is used in the business, no problem. Next time, same shop, say for example Purvika Electronics, same shop, you went and purchased a refrigerator for your home and you gave your mobile number. So what supplier thought? That it is registered B2B, so he raised a GST invoice. So it came in 2B, but is it used for your business? No, it is not used for your business, but it is used for your personal purpose. So but it is there in 2B. Can you take ITC or you should not take ITC? Should not take ITC, so you need to reduce it. Got it? But practically lot of people will take ITC. Got it? So some other friend who is purchasing mobile also, they will be telling, you know, like can you give your GSTIN? Lot of times, no, my friends and all will be asking me, give your GSTIN, because all of them are employed, so they don't have any GSTIN. So they will be asking my GSTIN, so we will purchase in your name. Whatever credit you get, in that just 50% you give, that is sufficient. 18% GST, just 9% you give, remaining 9% you keep like that. So I'll tell, no, I don't want. So I don't want your 9%, because tomorrow when department comes for audit in my premises, so they will be asking, okay, you purchased this mobile, where is this mobile? Sir, this mobile is not with me. Then where it is? It is with my friend. Then why are you taking ITC? At that time, they will reverse my ITC and they will put penalty also on me. Got it? Interest and penalty also. Who will face that consequences? That's the reason why it is always risky. You can take, see, stealing also, till the time you are caught, it's okay, good money only. You can steal money, you can do all the scams, everything. But the day you are caught, finished. Correct? So like that, you can take, nothing wrong, you can take. But the problem is that the moment audit happens, when department visits our premises and conducts the audit, at that time we will be caught and we are ending up paying the huge penalty, and even this will lead to imprisonment also. Wrong availment of ITC is offense and that leads to imprisonment also. Got it? So that is about this. Non-business purpose, even though it is there in 2B, but you should not take credit. Number 3, inward supply used for exempted outward supply. So for example, you are making a product which is exempted. For that exempted product, you purchase the raw material, and that raw material when you purchase, you have given your GSTR, so it came in 2B. But can you take ITC? No, because you are using it for what purpose? Exempted finished goods, so you should not take ITC. So 3 ITCs which will come in 2B, but you should not take. What are they? Blocked ITC, non-business purpose, and exempted outward supplies. These 3 should not be taken. Then 3 which is not reflected in 2B, but still you can take. General rule says only that credit which is there in 2B, that much only can be taken. But there are 3 exceptions to it, that even though it is not there in 2B, still you can take ITC. What are those 3? Number 1, GST paid under RCM. So that is on your inward supplies, you only require to pay GST. So your supplier may not add it in the GSTR one. Got it? Sir, you are purchasing something, and when you are purchasing something, for your supplier there is no liability, you only have liability, so he may not add in GSTR 1, correct? When he is not adding in GSTR 1, definitely it will not be coming in GSTR 2B. If it is not coming in GSTR 2B, then you cannot take ITC, but logically you should take ITC on GST paid under RCM. That's why they have given the relaxation. Even though it is not there in 2B, still you can take ITC. That is GST paid under RCM. Next one, that is tax, that is ITC pertaining to earlier tax periods. For example, you made purchases in July month. You made purchase in July month, but in that month you have not taken ITC. Maybe you thought you are not eligible for ITC, like that you have not taken ITC. Somewhere in the December month, you came to know that your internal auditor has said that you are eligible for ITC, so in December month you wanted to take ITC. Time limit is there, and now we are taking the ITC in December, but it is not coming in December month 2B, correct? It was there in which month 2B? July month 2B, but you are availing ITC in December, but it is not there in December 1 2B, still can we take ITC? Yes. So because it is pertaining to earlier tax period, not availed at that time, now we are availing, so we can. But there is a time limit for availment. Within the time limit we can avail the ITC. Next, number 3, that is reavailment of ITC reversed earlier. First we avail the ITC and we reversed it for some reason. We reversed it. Reversed it means what? Reduced it. We reduced it, and again we are reavailing it. Maybe there is one condition, you would have studied that. If you have not made payment to your supplier within 180 days from the date of invoice, if you are a recipient, you have not made payment to your supplier within 180 days from the date of invoice, so much of the ITC that you have availed needs to be reversed, because you have not made payment to your supplier, you cannot enjoy the ITC, reverse the ITC. Again, as and when you make payment to your supplier, you can reavail the ITC. Now when you are reavailing, it will not be there in 2B, correct? It will be not there in 2B, but still can we take? Yes, still we can take ITC. So there are 3 ITCs, even though not reflected in 2B, but still we can take. What are those 3? GST paid under RCM pertaining to earlier tax period, reavailment of ITC reversed earlier. Now in question, you need to check for these adjustments. Sometimes they may give, sometimes they may not give, but definitely you check out for this, and mainly in that first question, that compulsory question is there, a 10 marks question, there you need to check for this. Okay, so they will tell this is reflected in 2B, this is reflected in 2B, or this is not reflected in 2B, like that something will be given. So accordingly you need to make the adjustment. Okay, then look into the next one. When ITC as per 2B is less than ITC as per books. Just now I told you why will there be difference. That is because supplier not filed 1, or supplier filed one but missed the invoice, etc. So, but which will be taken? Books are 2B. Only ITC as per 2B is relevant for availment. Then in future, when your supplier files GSTR 1, but today he did not file GSTR 1, you made purchase from 10 suppliers, 9 suppliers filed GSTR 1, 1 supplier did not file GSTR 1, so therefore that will not come in your GSTR 2B, so you have not taken that ITC. Now what will you do? It's okay, my fate, like that you will think, definitely no. Only CA exam result you should think like that in your life. Remaining and all is in your hands. Is it clear or not? Don't leave everything for fate, because the problem with CA students is that the moment they undergo this CA course, failure, etc. and all, in life everything they will take like that only. That anything happens to them also, okay, my fate, like that and all. You will become like saint, monk, etc. and all. You don't have to be like that, okay? So only CA exams is like this, but in reality when something is happening, take that in your control, possible, okay? So therefore what will you do when your supplier is not filing GSTR 1? You will call your supplier, okay, all the bad words, whatever you know, you will tell him, because it's your money, it's your money, so why will you leave it, correct or not? So you will scold him, left, right, center, what is that you are plucking without filing GSTR 1 like that and all, so you will ask them. So now what your supplier will do? Definitely he will file, correct? When he files the GSTR 1 at a later point of time, now it will come in your 2B. Yes. Can we take ITC now? Yes. Not that it is gone forever. Whenever supplier files GSTR 1, or whenever supplier adds the invoice in GSTR 1, or whenever supplier rectifies GSTR 1, because he made a wrong information, rectifies GSTR 1, all these things he can do upon our follow-up, okay? The moment you complete your CA intermediate, you will go for articleship. In your articleship, you will be asked to do this work only, okay? So that you need to follow up with the supplier of the client. The chartered accountant firm will have one client, and that client will have some mismatched ITC. For that you don't have to worry, there will be lot of tools available, softwares available. That softwares only will tell, as per 2B these are the invoices, but as per books these are the invoices, these are the invoices not there in 2B, like that one list will come. So based on that list, now you need to work like a marketing representative. So make a call to the supplier's accountant and ask them to file GSTR 1 or rectify the GSTR 1, all these things you will be required to do, because you are bonded labor na. The moment you complete CA intermediate, till the time you clear CA final, so that 2 years of articleship, and for your information, somehow clear CA intermediate now, because next year they are going to announce 3 years articleship. So next year 2027 they are going to announce 3 years articleship. Somehow hook or crook, take some slippery, etc. and all also, but clear. You understood or not? So this attempt somehow you need to clear, because next you need to ensure that you are registering for CA final by end of 2026. Okay. So by end of 2026 you are registering for CA final. Keep that in mind. 2027 and all torturous, because 3 years articleship. And again they are going to make it as 8 papers in CA final, okay? So now it is 6 papers, that is SPOM. SPOM and all, lot of students easily they are clearing, because it's an online exam and MCQ only, whereas 6 papers, in that 6 papers IBS like that one open book paper is there. But in next year their plan is that they want to make it as 8 papers, remove IBS and bring in law and costing in CA final, which is not there now, so they will be bringing that. So 8 papers and all torturous. For 6 papers itself, backfire is coming. So then, so if it is 8 papers, very difficult, okay? Somehow register, because for those students who newly register in 2027 only, that will be made applicable. They will give transition. That's why somehow, okay, whatever you can do, you do. But 2026 should be the year in which you need to register for CA final. Keep the target, okay? Coming back to this, so that what will happen? whenever your supplier, so you will call that client's ka supplier and ask them to rectify the information. As and when that suppliers rectify the information in GSTR1, it will be reflected in the to be updated. So at that time we can take ITC. See this. So as and when supplier files GSTR1 or rectifies GSTR1, ITC shall be reflected in GSTR2B and that can be availed in GSTR3B. Then if ITC in 3B is greater than 2B, that is, first you have to be something, and in 3B you make some adjustments and you will take extra ITC. When you do that, immediately you will get a notice. That notice is in Rule 88D. Rule 88D, you will get one notice stating that in your 2B this much only there, but in your 3B you have taken excess credit. Explain the reason or pay the difference. Explain the reason why you have taken, show the proof, or you pay the difference. Okay, what is the reason? Just now I told you, GST paid under RCM, or it pertains to earlier tax period, or it is reavailment of ITC. That evidence you need to show. If ITC in 3B greater than 2B, a system generated notice shall be given under Rule 88D and accordingly reply to be furnished. Then see the next page. What are the various returns connected to input tax credit chapter I have given? GSTR1. What is GSTR1? GSTR1 is a return that will be filed by supplier containing the details of what? Outward supplies. Only sales data will be there in GSTR1. Then GSTR 2A and 2B, both will have inward supply details. Purchase details will be there in 2A and 2B. But the difference between 2A and 2B is that 2A is a dynamic document, which means whenever supplier rectifies, immediately whenever supplier files GSTR1, whenever supplier adds invoice in GSTR1, it will come in 2A. So 2A is like your Google sheet. So you have a Google sheet. I share the Google sheet with you. If I modify anything here, automatically it will be reflected there like that. But 2A is not for ITC, it is just a reference document. But for availment of ITC, we need 2B. So 2B is a static document. If the GSTR1 is filed by the due date, then only the data will be reflected in 2B. But even if the GSTR1 is not filed, just if the invoice is added, it will come in 2A. But for availment of ITC, 2B is only the document that is relevant. So 2B is a static month-wise inward supply statement. For regular taxpayers introduced on GST portal, it is like 2A but remains static. Then 3B contains the consolidated details of all outward supplies, inward supplies, GST payable and GST paid. So all consolidated details, final numbers will be available in GSTR 3B. So see this can be tested as a short note question, distinguish between GSTR 2A and GSTR 2B. So 2A is a dynamic document, but 2B is static. TDS, TCS details will be there in 2A, yes, but in 2B it will not be there. Details of invoices if GSTR1 filed after due date. GSTR1 filed but after due date. It will come in which statement? 2A or 2B? 2A, but in 2B, this month 2B it will not be reflected, it will be reflected in next month 2B. So not reflected, however it is reflected in subsequent 2B. What is the purpose of 2A? Just for reference. And 2B is for availment of ITC. And there is one amendment now. Just now I discussed that supplier files the GSTR1, adds the invoice in GSTR1 and files the GSTR1 by the due date. As and when supplier files the invoices in GSTR1, it will be reflected in 2B, correct? This is what I said. But now in between there is one system called as IMS, Invoice Management System. Every invoice that is added by supplier, will be reflected in GSTR. If every invoice added by supplier in GSTR1 will be reflected in IMS of the recipient. So the moment you open your IMS dashboard, Invoice Management System dashboard, every invoice filed by your supplier will be reflected. Now you have three options: accept, reject, pending. Three options will be there. If you accept, all those invoices which you accept will go to GSTR 2B. All those invoices which you have rejected will not go to GSTR 2B. Pending will be carried forward to subsequent GSTR 2B. Is it clear? Means pending, this month you have not taken, maybe in future you will take, that's why it will be carried forward to next month. Means again next month IMS, these details will be, the pending invoices will be reflected. Is it clear? This month pending invoices will come in, next month IMS. Got it? So this is optional, not mandatory, because if there is a small trader who is having some 100 invoices, he can do. But just imagine a company which is having some 1000, 2000 invoices. Practically it is not possible to check one by one. That's why they have not mandated it. They have made it optional, and maybe in future they will be making it mandatory. But right now for your May exam as well as September exam, it will be optional. It is not mandatory. Okay. And this thereafter we have seen this. That is 3 adjustments. Reflected in 2B but ineligible. These 3 not reflected in 2B but eligible. Clear up to this? Next. Say this. Reversal of ITC, Rule 37A. So far we discussed one section and one rule. One section which we discussed is section 41. Availment of ITC is in section 41. You can just turn the pages before. You can turn the pages before. Availment of ITC we have discussed now. That concept of availment of ITC is in section 41. And Rule 36 sub Rule 4. These numbers you have to remember, because in exam when you are writing all these things, definitely that will make a good impression. So section 41 talks about what? Availment of ITC. Rule 36 sub Rule 4 says what? Only matched ITC can be availed, unmatched ITC cannot be availed. Then Rule 88D. What does Rule 88D says? If you take more credit than 2B, you will get a notice. Okay. So section 41 is what? Availment of ITC. Rule 36 sub Rule 4 is what? Only matched ITC can be availed. And Rule 88D is what? If you avail more ITC than matched ITC, you will get a notice in GST, that notice as per Rule 88D. Then next. Now we are looking into third rule, that is Rule 37A. What does this Rule 37A says? Please concentrate. Your supplier filed GSTR 1. As your supplier filed GSTR 1, it came in your 2B and you availed the ITC also. Step 1, step 2, step 3. Step 1, your supplier filed GSTR 1. Step 2, it reflected in 2B. Step 3, you availed the ITC. Just because he filed GSTR 1 does not mean he paid the tax. Who? Supplier. Because at the time of filing GSTR 1, we don't have to pay the tax. GSTR 1 is just the details of outward supplies. We don't have to pay tax. But when the tax will be payable at the time of filing 3B. At the time of filing 3B only tax will be payable, not at the time of filing GSTR 1. So please listen. Your supplier filed GSTR 1 but not filed GSTR 3B. Means what? He did not pay tax. Got it? When he did not pay tax, what is the consequence to you? You have to reverse the ITC. Why you have to reverse the ITC? Sir, he filed 1 but he did not file 3B. Means he did not pay tax. How can you enjoy the ITC? You should not enjoy the ITC, so you should reverse the ITC. But when? Up to when? Is there a time limit? Yes, there is a time limit. Your supplier should have filed the GSTR 3B by when? By when? Maximum by when? 30th September of succeeding financial year. Who? Your supplier should have filed GSTR 3B by 30th September of the succeeding financial year. If he is not filing 3B for a particular month by 30th September of the succeeding financial year, then you need to reverse the ITC by 30th November. Means you have how many months? 2 months. By 30th September, he should file 3B. If he has not filed 3B by 30th September, you have to reverse by 30th November. How do you know whether he is filing or not by 30th September? That data will be available in the portal itself. The portal itself will tell, boss, your supplier did not file GSTR 3B, so come on, you reverse it. Like that portal will tell us. and we should reverse it by 30th November. If you are not reversing by 30th November, what will happen? You have to pay interest. Interest at what rate? 18% per annum from the date of utilization till the date of reversal. Okay. So that is this. Supplier files GSTR 1 within the due date and it is reflected in 2B, and in the middle there is something called as IMS, which is optional, and thereafter recipient will avail the ITC in GSTR 3B, that is self-assessed ITC, and supplier not filed 3B by September 30th of next financial year. Supplier not filed GSTR 3B by September 30th of the next financial year. Step number 5, recipient should reverse the ITC after September 30th but before November 30th of the next financial year. If not reversed by November 30th of next financial year, interest will be at the rate of 18% from the date of utilization till the date of actual reversal or payment. Okay. So if you reverse it by 30th November, no interest. If you are not reversing by 30th November only, there will be interest. Next. So is it the end? No. Now what you will do? Unnecessarily you are reversing the ITC. Because of your mistake or your supplier's mistake? Supplier's mistake. You made payment to the TDS. Okay. But they did not file 3B. So therefore it is not your mistake or supplier mistake. So therefore you will follow up with your supplier. Now your supplier will file 3B in future. When he files 3B in future, at that time whatever ITC that you have reversed, you can reavail, but interest if you have paid, that you cannot reavail. Actually interest is not there if you reverse it by 30th November. But suppose if you reverse it beyond that, you have to pay interest now. That you cannot reavail, but whatever ITC that you have reversed, that you can reavail. Say this, step number 6. Suppose in future your supplier has filed GSTR 3B after September 30th of the next financial year. Then ITC reversed earlier can be reavailed without any time limit. Without any time limit, it can be reavailed. Okay. If not reversed by November 30th, then interest will be payable. And sir, reavailment, there is any time limit? No, no time limit for reavailment. Understood these 7 steps? Yes. So can you tell me without seeing the book, what are the 7 steps? First, what will happen? Supplier will file GSTR 1. Step number 2, it will be reflected in GSTR 2B of the recipient. Step number 3, recipient will avail the ITC in 3B. Step number 4, supplier not filed GSTR 3B by September 30th of next financial year. Now step number 6, what you should do? Step number 5, what you should do? You should reverse the ITC by November 30th of next financial year, otherwise you need to pay interest. Then next step, step number 6, what supplier will do now? He will file 3B. Whenever he files 3B, then at that time what you can do? Last step, you can avail the ITC. Any time limit you need to check? No time limit. It can be 10 years, 20 years also, you can happily take the ITC. Now related to that interest computation, if you see, interest will be computed at the rate of 18% from the date of utilization till the date of reversal. Reversal is the date when you actually reverse it or pay. But what is the meaning of date of utilization? For that they gave a meaning. Date of utilization means, see the month in which the balance in ITC falls below the availed ITC. So I am just explaining you this with some numbers. See here, ITC with respect to invoice from A Limited, ITC with respect to invoice, this is illustration on rule 37A. If you want, you make note of this. You please make note of this, because high time they have not asked any question on rule 37A so far. There is a high chance that they can make a question. Invoice with respect to invoice from A Limited. This invoice is 20th August 2025. This is for 1 lakh excluding 18% GST. ITC with respect to invoice from A Limited, or directly we can take ITC is given, so directly 18,000. 18,000 is the ITC. ITC with respect to invoice from A Limited dated 20th August 2025, 18,000. Okay. Then A Limited not filed GSTR 3B for August 2025. A Limited not filed GSTR 3B for August. This is August month only, na? They have not filed GSTR 3B for August 2025 till 30th September, till 30th September 2026. Till next financial year, they have not filed 3B. You got it? And consequently, recipient B Limited, recipient B Limited is the recipient, reversed ITC, consequently recipient B Limited reversed ITC in GSTR 3B of December 2026 filed on December 2026 filed on 19th January 2027. Please try to understand the question properly. ITC with respect to invoice from A Limited is 20th August 2025, 18,000. A Limited not filed 3B for August 2025 till 30th September 2026, means next year 30th September they have not filed to GSTR 3B. So as they have not filed, A Limited has not filed, what B Limited should do? They should reverse the ITC. So they are reversing the ITC, but when they are reversing, by when they should have reversed the ITC? By November they should have reversed the ITC, but they are reversing on December, which is filed on 19th of January 2027. Means, are they required to pay interest? Yes, they are required to pay interest. And we need to know date of reversal, we know, but we need to know what is the date of utilization. For that purpose, we have some information. Month, opening balance of ITC, ITC availed, ITC utilized, closing balance. Month August, opening balance 2000, ITC availed 40,000. Means in this 40,000, this 18,000 also will be there. You got it? In this 40,000, this 18,000 also will be there. Is it clear, pa? For August month, opening balance 2000. This for whom? B Limited. This is for B Limited ITC table we are seeing. B Limited opening balance 2000. They received invoice in August month, na? Means August month they would have availed ITC. Along with 18, some other ITCs also will be there. So total 40,000 and 20,000 utilized. Closing balance is how much? 22,000. Then September, 22,000 opening balance. ITC availed is 12,000. ITC utilized is 25,000. What is the closing balance? 22 plus 12 minus 25. 22 plus 12 minus 25. 9,000 is the closing balance. And thereafter, October month, 9,000. ITC availed is 21,000. ITC utilized 10,000. So closing balance is 20,000, and thereafter till December 2026, this is August 2025, September 2025, October 2025, thereafter till December 2026, the balance in ITC has not fallen below 9,000, has not fallen below 9,000. Understood the question? So now what happens is that, how much is the ITC availed? How much is the ITC availed? Please focus, please. How much is the ITC availed? 18,000. When 18,000 is the ITC availed, what is the balance in ITC for first month? 22. Whether the balance has fallen below? No. Next month, whether the balance has fallen below? Yes. To what extent the balance has fallen below? To the extent of 9,000. So that particular 9,000 rupees is what ITC is utilized. Again, October 2025, it is 20,000. So which means thereafter the balance did not fall. So the 9,000 only, which means how much is the ITC utilized? Only 9,000. Sir, but balance increased, sir, that is irrelevant. Balance decreased is only relevant. If the balance has increased, that is irrelevant. So whether the balance has maintained at 18, no. The balance has fallen below 18. To what extent? 9,000, which means we utilize 9,000. So 9,000 we utilize which month? September month. For September month, whichever month we file, that is September month, when we will file 3B. So that is 20th of October, that will be taken as the date of utilization. Is it clear? So say this. Write down the answer. The balance in ITC, falls below rupees 18,000. The balance in ITC, that is the closing balance in ITC, falls below 18,000. Why 18,000? Because here the ITC availed is 18,000. With respect to A Limited's invoice, the balance in ITC falls below 18,000 in September 2025 to the extent of how much? To the extent of 9,000. Therefore, ITC utilized is rupees 9,000, and the date of utilization is, we don't know now when September 3B they are filing. So we will take due date of 3B. If you know, then due date or actual date, whichever is earlier. If you don't know, then the due date. So what is the due date of 3B for September? What is the due date of 3B always? 20th of next month. So utilization is 20th October 2025. 20th October 2025 is the date of utilization. Got it? Now that is what I have given. First see the month in which balance in ITC falls below availed ITC. So what is the month in which the balance in ITC falls below availed ITC? September 2025. For that you see due date of 3B or actual date of 3B for that month, whichever is earlier. So that is due date or actual date of 3B for that month is 20th October 2025. Got it? Now what is the date of reversal? Date of utilization we got. What is the date of reversal? Date of reversal is 19th January 2026 is the date of reversal. 27. 19 January 2027 is the date of reversal. So we need to compute interest. Okay, we need to compute the interest from when to when. Interest at the rate of 18% from which date to which date? From 20th October 2025 till 19 January 2027, that is how many days? 20th October 2025 to 20th October 2026. If you see, it will be 365 days, correct? 20th October 2025 to 20th October 2026 will be 365 days, 1 year. Thereafter, 365 days plus. In October, it will be 6 days, November 30 days, then December 31 days, January 19 days. So, how many days? 450. Properly calculate and tell me, 450. October will be 11 days. October will be 11 days because 20th October to 20th October. 20th October to 20th October is 365 days. Then in October we have 11 days, November 30 days, December 31 days, January 19 days. How many days? 456 days. For this 456 days, we need to compute the interest. What is the ITC utilized? What is the ITC utilized? 9,000. So, we need to compute interest on 9,000 into 18% into 456 divided by 365. 2025, 26, 27, we don't have any leap year and all here. Okay. So, therefore, 365 only. 9,000 into 18 into 456 by 365. How much will be taken as the interest? 2024 will be the interest that is payable on reversal. Got it? Interest payable will be 9,000 into 18%. Interest payable will be 2024. Note, if ITC reversed by 30th November 2026, then interest payable or interest not payable? Interest not payable. Interest not payable by B Limited. Interest not payable by B Limited. So, just because they are not reversing by 30th November of the next financial year, because of which they will be paying interest. Okay. Then next, can I proceed? Say this. ITC wrongly availed with respect to invoice issued by supplier for which supplier not filed 3B is 12,000. So, I have given one more example also in the book. 12,000. Invoice date is 4/5/2024. First we need to see the month. So, that is May month. For the month of May, opening balance 40,000, ITC availed 32,000 including above 12,000, ITC utilized 50,000, balance is 22. Whether the balance falls below 12,000? No, which means we have not utilized for May month. Again June month, opening ITC availed, ITC utilized, closing balance 10,000, which means we have utilized 2,000 because the balance falls below 12,000 to 10,000, which means 2,000 we have utilized for June 2024. Again July 2024, opening balance 10, ITC availed 15, ITC utilized 5, 20. So, balance increase. Balance increase means reversal? No. Balance increase is not reversal. Balance decrease is utilized. Balance increase means not reversal. Then again August, opening 20, ITC availed 20, utilized 36, closing balance 4,000. Means how much we would have utilized? 6,000. How? 12,000 came down to 10,000. Now 10,000 came down to 4,000. Means we have utilized 6,000 rupees for August, which means there are two utilization. So, two interest computation will come. One is 2,000 rupees utilized in June and 6,000 utilized in August. Accordingly, GSTR 3B due date or actual date of such month relevant for computation of interest. So, there will be two interest computation in this case. Got it? Next. So, we discussed so far section 41, three rules. Rule 36 sub rule 4, only matched ITC can be availed. Rule 88D, That is, if you avail more ITC in 3B than in 2B, you will get a notice. Then rule 37A, supplier not filed GSTR 3B by September 30th of next financial year, you need to reverse the ITC. Now look into rule 88C. That is, if you have liability in one, that is you are supplier now. You are not recipient, you are supplier. What you did, you added more invoices in your GSTR 1, but paid less liability in 3B. Means your liability in GSTR 1, means you have reported some liability in GSTR 1. That is more, say 10 lakhs. But you have paid the liability in 3B, that is say 6 lakhs. Means you have short paid by 4 lakhs. What will happen in that case? You will get a notice in rule 88C. Look into this. Supplier filed GSTR 1 and GSTR 3B, but liability in 1 is greater than liability in 3B. Recipient not required to reverse ITC as per rule 37A, because supplier filed 3B na. Yeah, when recipient should reverse the ITC? If supplier not filed, but supplier filed 3B. So, but there is a mismatch. For recipient, no problem. Recipient is happy now. Why recipient is happy? Because supplier filed 3B. But the problem is to the supplier. What will happen? They will give notice to the supplier stating that, boss, you have reported more liability in 1 than 3B. So, pay the difference or explain the reason for difference. So, one notice will be given in DRC 1B. Within 7 days, either he need to pay the difference along with interest or explain the reason for difference. Suppose if he did not pay or he did not reply within 7 days, then that recovery will be made along with interest and penalty. From whom? Supplier. That is rule 88C. Then next page you see, what is the difference between 88C and 88D? Come on, tell me. What is the difference between 88C and 88D? When 88C will come into picture? 88C is to supplier. 88D is to recipient. When 88C will come, if supplier shows more liability in 1 than in 3B, then when 88D will come, if recipient avails more ITC in 3B than in 2B. In both cases, they will get a notice. Here notice DRC 1B, here DRC 1C. How the notice will be given to them? It will be uploaded in the portal plus email, common. And what is the response time? 7 days. Within 7 days, they need to either pay the difference or explain the reason for difference, partially pay and explain the reasons for difference. Suppose if they have not done anything, if they have not paid or given reason for difference, then what would have happened? It will be recovered from them. So, in case of rule 88C, recovery of tax, and here a notice, another notice will be given for recovery. Now, till the time they pay the difference, this is common between both. They cannot file GSTR 1, means GSTR 1 will be blocked. Got it? Whose GSTR 1 will be blocked? Supplier or recipient, they will have to file some GSTR 1 na, that will be blocked. If GSTR 1 is blocked, GSTR 3B will be blocked, means they cannot file 3B. If 1 and 3B not filed for 2 periods, already I told you, their e-way bill will be blocked, and this will also lead to cancellation of registration. So, what are the 4 consequences, pa? Number 1, GSTR 1 will be blocked, GSTR 3B will be blocked, e-way bill will be blocked if they have not filed returns for consecutive 2 periods, and even this will lead to suspension of registration. Understood these 4 points? So, this can be asked as a question. Either they can ask rule 88C as a separate question, or rule 88D as a separate question, or distinguish between 88C, 88D also they can ask. Mark this as very, very important for theory. Then, so we completed section 41 with 4 rules. What are those 4 rules? Rule 36 sub rule 4, only matched ITC can be availed. Then rule 88C, 88D. 88C, liability in 1 greater than liability in 3B. And next 88D, ITC in 3B greater than ITC in 2B. Then rule 37A, that is supplier not filed GSTR 3B. So, we need to reverse the ITC. Manner of utilization, section 49 subsection 5, that already yesterday we discussed. 49 subsection 5, manner of utilization of credit. Now, look into condition for availment of ITC, section 16. Section 16 says that there are certain conditions for availment of ITC. Total 8 conditions are there. First, only a registered person can avail ITC. Of course, unregistered person cannot avail ITC. Number 2, the inward supply should be used or intended to be used in the course or furtherance of business. Used means used for the existing business. Intended to be used means to be used for some business in future. Means even if you have not used now, but you can use it in future, still you can take ITC now. But this is opposite to section 32 depreciation under Income Tax Act. Section 32 of depreciation Income Tax Act says only when the asset is put to use, you can take the depreciation. That too, if it is put to use for less than 180 days, you can take only half depreciation like that. But ITC is not like that. Even if you have not put to use, you can take full ITC. You got it? Full ITC we can take. That's what. Used or intended to be used in the course or furtherance of business. And recipient should be in possession of tax paid document. What is a tax paid document? Tax invoice or debit note or ISD invoice or bill of entry. These are the tax paid documents. Only on that they can take ITC. What are the 4 tax paid documents? Tax invoice, debit note, ISD invoice. ISD invoice means input service distributor invoice. Input service distributor means a head office which will take the credit and distribute the credit. For example, there is a head office. Below 4 branch offices are there. First, the head office will take the credit and distribute the credit to the branch offices. That is called as this ISD invoice. ISD means input service distributor. Okay. Then bill of entry. These are the tax paid documents. And next, recipient should have actually received the goods or services. For example, if the invoice is January month, but the goods are received in March month, when they can take ITC? January month or March month? March month. So only when the goods are actually received or service actually received, they can take ITC. Then look into 7th point, recipient should have filed the returns in GSTR 3B, because without filing 3B we cannot take ITC. So because availment of ITC means what? Taking credit in 3B. So without filing 3B, the ITC cannot be availed. Now first 2 basic conditions are what? First 2 basic conditions. Only a registered person can avail ITC and the inward supply should be used or intended to be used in the course or furtherance of business. Then 3 conditions, 3 additional conditions to be satisfied by recipient. What are the 3 conditions to be satisfied by recipient? Recipient should be in possession of tax paid document, they should have actually received the goods or services, and they should have made, that is, they should have filed the GSTR 3B. They should have filed the return in GSTR 3B. Next, 3 conditions in the point of view of supplier. Supplier should fulfill that conditions. Number 1, supplier should have furnished the details in GSTR 1, because if supplier is not filing GSTR 1, it will not come in 2B. If it is not coming in 2B, he cannot take ITC in 3B. So supplier should have filed GSTR 1, and that details which are filed in GSTR 1 should be reflected in 2B under ITC available, not ITC not available, because in 2B we have 2 columns, ITC available and ITC not available. If it is in ITC not available column, we cannot take credit. It should be in ITC available. Why it will be reflected in ITC not available? Any reason? Already I told you. CGST, SGST paid in the another state. For example, you are in Tamil Nadu, you are registered in Tamil Nadu. You go to Karnataka and there you stay in a hotel, and there the hotel will raise you CGST and Karnataka SGST invoice. Why? Because the location of supplier is Karnataka, place of supplier also Karnataka. Yesterday we discussed in one MCQ. Location of supplier also Karnataka, place of supplier also Karnataka. So they will raise CGST and SGST invoice. Now where are you located? In Tamil Nadu. You cannot take this ITC. CGST, SGST paid in another state cannot be taken as ITC, even though they filed GSTR 1, even though it came in 2B. But in 2B where it will come under ITC? Not available. So consequently you cannot take ITC. See this. So GST paid on inward supply should be reflected in 2B under ITC available, and it should not be restricted. There are few cases where ITC will be restricted, that is given in section 38. Then supplier should have paid the tax with respect to the supply. By when? By when supplier should pay the tax? By 30th September of the succeeding financial year. So total we have 8 conditions. 2 basic conditions, 3 additional conditions to be satisfied by recipient, 3 additional conditions to be satisfied by supplier. First 2 basic conditions, only a registered person can take ITC, inward supply should be used or intended to be used in the course or furtherance of business. Then 3 additional conditions from the point of view of recipient. Come on, explain, what is that? He should be in possession of tax paid document, he should have actually received the goods or services, and he should have made payment to the, and that means he should have filed the return, GSTR 3B. Then 3 conditions from the point of view of supplier. What is that? Supplier should file GSTR 1 and you should have paid tax by September 30th of succeeding financial year, and that details added by supplier should not be restricted in GSTR 2B, means it should come under ITC available. Then next, so this already in one exam they have tested as a theory question. What are the conditions to be satisfied for availment of ITC? Like that they have asked one question. Next, what is the meaning of input tax? Input tax means tax paid on inward supply. What tax? Either CGST, SGST, IGST, UTGST, either under FCM or under RCM. That's what I told you. Whether you have paid tax on your inward supply to your supplier or you paid tax under RCM to government, both are your input tax, you can take credit. Input tax means CGST, SGST or UTGST charged on supply of goods or service are both made to registered person. It also includes tax paid on reverse charge basis and IGST charged on import of goods. So even IGST on import of goods also can be taken as credit, but it does not include tax under composition scheme. Why? First of all, a person under composition scheme cannot charge GST to recipient. Even if they charge GST to recipient, the recipient cannot take ITC. So it does not include tax paid under composition levy. Then when you got a document called as invoice, what are the minimum details that it should be present to be called as a valid invoice? If you are availing ITC, one of the condition is what? You should be in possession of tax paid document. So when is it called as a tax paid document? That is tax invoice. There are some minimum details that should be present. Then only it will be called as invoice for availment of ITC. What are those minimum details that it should be present? Apart from date, what detail should be there? GSTN of supplier, GSTN of recipient, your GSTN, then description, what goods or services you purchase, value, tax, and place of supply if it is interstate supply. These 6 details should be there. Description, GSTN of supplier, GSTN of recipient, value, tax, and place of supply. If the invoice does not contain all the specified particulars but contains the following details, ITC can be availed by such person. Then next, what are the inward supplies on which ITC can be availed? Inward supply means what? Inward supplies can be either capital goods or inputs or input services. What is the difference between capital goods and inputs? If you buy something and charge it to P&L, that is inputs. If you buy something and capitalize in the books, that is capital goods. So any service received will be input services. Then listen, there is a concept of deemed delivery, that is, I have made a bill to ship to transaction. You purchased a product from me, I raised invoice to you, but you asked me to deliver the product to a third person. So I will raise invoice to you, so you have my billing address, and the third person to whom you asked me to deliver, that is my shipping address. You have the invoice, but you have not received the goods. But one of the conditions says that you should have actually received the goods. So you cannot take ITC. Again, the third person has got the goods, but there is no invoice. Without invoice, they can also take ITC. That's why they created a deeming fiction. That is, if the third person has received the goods or services on your behalf, please listen. If the third person has received the goods or service on your behalf, the day on which the third person has received the goods or services, you have received the goods or services and you can take ITC. Is it clear? That is the concept of deemed delivery. On your behalf means on the behalf of registered person. If the goods and service are given to some other person, the date on which it is given to some other person, the registered person can avail ITC. And this is not only for goods, even for services. Now, tomorrow when you complete CA intermediate and go for articleship, so you ask your principal to sponsor your CA final coaching fees. and you tell, sir, whatever stipend you are giving, that is for my regular work, sir, but extra work I will be doing now, sir. For that, you please sponsor my CA final coaching fees. And there are nowadays some good principles also, like this boomer uncles will be there, old people. They will not listen to you. They will tell, no, no, no. So as if, you know, they have done some favor to you, like that they will feel. Actually, you guys are only doing favor to them by working like this. So therefore, you be clear, youngsters and all are there. So they will understand, yes, we are exploiting their work, so we should give some benefit to them. So you ask that, you know, any 1 or 2 subjects CA final coaching fees. Suppose if they agree and they have paid the fees to me for your CA final indirect tax and you are attending the coaching. Now I will raise invoice to your CA firm. I will raise invoice to your CA firm, but I have not rendered services to your chartered accountant. To you only I rendered services. Can your CA firm take ITC? Yes. How they can take ITC? On behalf of the registered person, the service is rendered to a third person. You will become third person. So the day on which you receive the services, it is deemed that they received the services and they can take ITC on that. Is it clear? That is this. When goods are delivered to any person or service are provided to any person on the instruction of the recipient, the date on which such person has received the goods or services, it is deemed that recipient has received the goods or services. That is, in case of bill to ship to transaction, the billing address can avail ITC. Then next, availment of ITC on the date on which goods are handed over to transport in case of Ex Works contract. What is this? Whenever the goods are handed over to the transporter on your behalf, then also the deemed delivery will be applicable. The goods are handed over to one transporter. For example, you are my recipient and the contract is Ex Works contract, means at my factory gate itself I will do delivery. Now you will send your lorry, you will send your transporter to my place to load the goods. The moment I load the goods in your transporter's vehicle, means it is deemed that you have received the goods, correct? Because of the deemed delivery. On your behalf, when the goods are handed over to a third person, here who is the third person? Transporter is a third person. It is deemed that you have received the goods and you can take ITC. For example, there is a factory of a manufacturer, OEM means original equipment manufacturer, and the dealer is a car dealer, and car is loaded on the truck on 10/8/2025. Car is loaded in the truck on 10/8, but the truck is bringing the car to the dealer on 5/9. Now tell me, in which month the dealer can take ITC? August month or September month? August month. Because the day on which goods are handed over to a third person on behalf of the recipient, it is deemed that the recipient has received the goods, which means I have received the goods on August itself, so they can take ITC for August. ITC can be taken by dealer when OEM hands over the goods to the transporter at the factory gate, that is on 10/8, even though the goods are received by the dealer at a later date. Understood? Then this clarification is applicable in case of all types of goods, even though here I gave an example of automobile sector, but everywhere this is common, all types of goods. Suppose during this transit, if the goods are lost or destroyed, August month the dealer has taken ITC pa, and by the time he received it in 5th September, if in the midway the goods are lost, destroyed, etc. and all, now what he should do? He should reverse the ITC. See that second point. If the goods are lost or destroyed or stolen or disposed as gifts or free samples during the transit, it is blocked ITC, and ITC availed if any needs to be reversed. Then, if goods are received in lots or installments, when they can take ITC? For example, you have placed an order for 100 units, first month 40, second month 40 and third month 30 I delivered. So when you can take ITC for all these 100? In the last month. ITC shall be availed only in respect of last lot of installment. If I am raising single invoice, what if I raise multiple invoice? accordingly you can take ITC. For example, first month I delivered 40 and raised invoice for 40, means you can take ITC for 40 in the first month itself. For single invoice, if the goods are delivered in lots, only on receipt of last lot you can take ITC. Then look into Rule 37. Rule 37 is about that 180 days payment. If the recipient has not made payment to supplier within 180 days from the date of invoice, so much of the ITC availed by recipient needs to be reversed along with interest. Here interest will be there. Here interest will be there. So look into this. If recipient has not made payment to supplier, what payment means? Both value and tax. You have to make payment to me within what time? I am supplier, you are my recipient, I raised invoice to you. As I raised invoice to you, I have reported it in GSTR 1, it came in your 2B, you took the ITC, everything over. But what happened? You should have made the payment to me, you did not pay money. What is the time limit? 180 days. You have not made payment to me within 180 days from the date of invoice. Then, whatever ITC that you have availed needs to be reversed. ITC proportionate to the amount not paid to supplier, availed by the recipient reverse along with interest at 18% per annum. From when to when? From the date of utilization till the date of reversal. From the date of utilization till the date of reversal. However, interest not payable if the availed ITC is not utilized. Okay. If the availed ITC is not utilized, then the interest is not payable in this case. Is it clear? So next, interest not payable if the availed ITC is not utilized, means you maintain the balance. Now, suppose within 180 days you paid 60%, 40% only you did not pay. So to what proportion you should reverse? 40%. You paid 60, so 40% only you did not pay. So to the proportion of 40% you should reverse. Okay. Suppose you did not pay full, you did not pay full, you reversed it. Thereafter you paid 75%. How much you can re-avail? 75%. Whatever you have made payment, that much you can re-avail. ITC can be re-availed as and when payment is made to supplier after 180 days, but the interest paid cannot be availed as ITC, and there is no time limit for re-availment. And this provision is not applicable in 3 places. What are the 3 places where this provision is not applicable? Supply covered under RCM. Whenever my outward supply is covered under RCM 9 subsection 3, this is not applicable. And supply without consideration under 7(1)(c). So whenever the tax is payable under RCM, whenever supply is 7(1)(c), first of all consideration itself is not there, wherefrom you will make payment to me within 180 days. Then third, you have made payment to some other person on my behalf, 15(2)(b). Recipient incurs the expenditure on behalf of supplier, means already you paid it to some other person. So again you don't have to make payment to me within 180 days. Supply is covered under RCM, supply without consideration, payment to third party on behalf of supplier. Then look into 16 subsection 3. ITC not available if the depreciation is computed on tax component under Income Tax Act. For example, you purchased the asset for 10 lakhs excluding GST 1,20,000, and in income tax block of assets method you will take opening WDV, add purchases. In that purchases, how much you need to add? 10 lakhs or 11,20,000? 10 lakhs. If you add 10 lakhs, then this 1,20,000 can be taken as ITC. Suppose in the block of assets, if you add 11,20,000, then ITC with respect to 1,20,000 is not available. Then next, time limit for availment of ITC under section 16 subsection 4. What is the maximum time limit by which we should avail the ITC? Ayya, listen, please listen. This is the time limit for availment, not utilization. For utilization, there is no time limit. Once you took the credit in your GSTR 3B, you can utilize it for any number of years. There is no limit. You can carry forward and utilize, but the time limit is only for availing the ITC, taking the credit. What is the time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. With respect to an invoice of a financial year, by 30th November of next year or date of filing annual return, whichever is earlier is the time limit. However, time limit is not applicable for reavailment. Already I told you. When you reverse it and again reavail it, the time limit is not applicable. Got it? Next. In case of debit note, the availment of ITC depends on the debit note date but not the date on which invoice related to such debit note is given. For example, say invoice is dated 15th August 2025. For this invoice, a debit note is issued. When debit note is issued, whenever there is an increase in the invoice value, for example, we are collecting interest on account of delay in receipt of consideration, one debit note will be issued. That debit note is dated somewhere like 4th May 2026. Now, for invoice, it is which financial year? 2025-26. For debit note, it is which financial year? 2026-27. Accordingly, you need to determine the time limit. So, what is the time limit for ITC? Time limit for ITC in this case will be 30th November 2026 or date of annual return, that is GSTR 9. Date of annual return is GSTR 9, whichever is earlier. Whereas here also time limit for ITC will differ. Time limit for ITC, don't check the invoice date. For ITC on debit note, see the debit note date only. Time limit for ITC, so the time limit for ITC is A, 30th November 2027 and B, date of GSTR 9 for this financial year, whichever is earlier. Like that, for debit note, you see the time limit based on debit note date. Don't see the invoice date. Okay. That is the first point. In case of debit note, availment of ITC depends on the debit note date but not the date on which invoice related to such debit note is given. In case of RCM, so there is a concept of self invoice that we will try to understand. So this point you got the clarity now, this point. Now look into self invoice. What is that self invoice? When the supplier is unregistered, when the supplier is unregistered person and the recipient is registered person and the supply is covered under 9(3), supply under section 9(3) or 9(4), means it is RCM, correct? It is RCM. So who will pay GST to government? Recipient. Supplier will not give invoice to the recipient because he is unregistered. As supplier is not giving invoice, the recipient has to give self invoice. Generally, who will give invoice to whom? Supplier will give invoice to recipient, but this is a case where the recipient will give self invoice to the supplier. And suppose if the supply is made on 10th September 2026. 10th September 2026 is the date on which supply happened. Now, what is the time limit by which self invoice to be issued? What is the time limit by which self invoice to be issued? What is the due date by which self invoice to be issued by recipient to supplier? 30 days from the date of receipt of goods or services. What is the date of receipt of goods or services? 10/9/2026 plus 30 days. What is 10/9/2026 plus 30 days means? In September 20 days, October 10 days. By 10th October 2026, they need to give the self invoice. Is that clear, pa? Again I am repeating, please concentrate. There is a supplier, that supplier is an unregistered person and there is a recipient who is a registered person, and this particular transaction is covered under 9394, that is RCM, and the date on which supply is made is 10th September 2026. As the supplier is unregistered, they cannot give invoice, therefore the recipient has to give invoice to the supplier, that is called as self invoice. What is the time limit by which that self invoice should be given? So within 30 days from the date of receipt of goods or services, by 10/10/2026 the self invoice needs to be given. Now suppose if the self invoice is issued on if self-invoice issued on 5/10/2026. If self-invoice is issued on 5/10/2026, what is the time limit for ITC? Time limit for availment of ITC. Time limit for availment of ITC. Okay. See, it can be given before this also, na? But this is due date, pa. Due date does not mean that is the date on which it should be given. It can be given before also. So therefore, if self-invoice is issued on 5/10, what is the time limit for availment of ITC? A? 30th November 2027. Very good. Because the financial year you need to see, financial year is 2026-27. So 30th November 2027 or date of filing GSTR 9, whichever is earlier. Got it? So you see the date on which the self-invoice is given. Suppose if the self-invoice is issued on, if self-invoice issued on 25/5/2027, is the due date, 10/10/2026 is due date. It can be given late also, na? It can be given late also. If it is given late, what would have happened? If it is given late, what is the time limit for availment of ITC? Time limit for availment of ITC. Time limit for availment of ITC. Now we need to see this date for the financial year. What is the financial year? 2027-28. What is the time limit? 30th November 2028 or date of filing GSTR 9. Date of filing GSTR 9, whichever is earlier, and note there will be penalty. Why penalty? Penalty for late invoice. They have to pay penalty, that is there. But the ITC will be dependent based on the date on which invoice is given. You got it? This penalty is how much, sir? That you will learn in CA final level. But right now you know that there is a penalty because of this. However, the time limit for availment of ITC depends upon the date on which we are actually giving the self-invoice. So the due date is 10/6. But if you give self-invoice before that date is relevant. If you give after that date is relevant. So means what is the conclusion we can draw from this? In case of RCM, where registered recipient issues invoice to unregistered supplier, the date on which recipient issues invoice is relevant for determining the time limit for availment of ITC. Is it clear? The date on which recipient issues invoice, is relevant for determining time limit for availment of ITC. Then there is one more subsection, section 16 subsection 6, say this: time limit for availment of ITC in case of revocation of cancellation of registration. This concept, again there is a high chance that it can be tested. Okay, so look into this example, you will get an idea. First we will learn through this example. Financial year 24-25, you have got some inward supplies. You are the recipient, you are a registered person. Financial year 24-25, you have got some inward supplies. And what is the time limit by which you should have availed the ITC? What is the time limit by which you should have availed the ITC? 30th November 2025. 30th November 2025. 30th November 2025. 30th November 2025 or date of filing annual return, whichever is earlier. Say the date of filing annual return is 31st December 2025, whichever is earlier is what? 30th November 2025 is the time limit by which you can avail the ITC. Correct? Respond, yaar. Sir, financial year 24-25, so you have to avail the ITC by 30th November 2025. But you have not availed ITC in this financial year. next financial year, somewhere on 1/9/2025, your registration got cancelled. Until that point of time, you have not taken ITC. Your registration got cancelled on 1/9/2025. Until that point of time, you have not availed ITC. But whether the time limit to avail ITC is expired or not expired? Not expired as on the date of cancellation of registration. Correct? What is the time limit for availment of ITC? 30th November 2025. But we are on 1st September 2025. So as on 1st September, the time limit for availment of ITC is not expired. Now, after cancellation, you have made a request for revocation and they gave a revocation order. That revocation order is on 31/1/2026. That revocation order was given on 31/1/2026. Now, in this case, means what? Your registration cancelled got withdrawn. Revocation means withdrawn. Okay. So, your revocation, I mean your registration cancellation got revoked. This period, you could not avail ITC. Why you could not avail ITC during this period? Because your registration is cancelled. Your registration is cancelled, so ITC cannot be availed as registration is not active. Now, after revocation order, within 30 days, you can avail the ITC, even though the time limit is over. Got it? 30 days from 31/1/2026 is what? 2/3/2026. Yeah, 31/1/2026, 30 days is what? 28 days February, 2 days March. So, by 2nd March also, you can take ITC in this case. Okay. So, what is the time limit for availment of ITC? Regular time limit or 30 days from revocation order, whichever is earlier or later. Later. ITC can be availed by regular time limit, that is 30/11/2025, or 30 days from revocation order, that is 2/3/2026. Whichever is later, that is 2/3/2026, they can avail the ITC. But what is the condition? What is the condition? What is the condition? As on the date of cancellation of registration, the regular time limit should not be expired. Got it? As on the date of cancellation of registration, the regular time limit for availment of ITC should not be expired. Now see the provision. Registered person can claim ITC on such invoice or debit notes in any return filed within regular time limit under 16(4) or 30 days from the date of revocation order, whichever is later. But what is the condition, pa? What is the condition? You just write down there, condition. What is the condition? Regular time limit should not be expired. Regular time limit should not be expired. As on the date of cancellation of registration. As on the date of cancellation of registration, the regular time limit should not be expired. The regular time limit should not be expired as on the date of cancellation of registration. Clear? Next, say this. We completed section 16. Related to section 16, there is one question which is at the end. You can see page number 114. Page number 114 in this book itself. You can see one question is there, one illustration is there. XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2023 from the following particulars. Inward supplies input A 1 lakh. So, one invoice on which GST payable 10,000 is missing. Invoice is missing. Can we take ITC? No. Why? I need reason. As per section 16, the person availing ITC should be in possession of tax paid document. In the present case, as the tax invoice is missing, so due to that reason ITC is not available, which means he can take ITC only on 90,000. Next, inputs B 50,000. Inputs are to be received in 2 installments. First installment has been received in October 2023. Right now we are in which month? October. Right now we are in October month. So therefore for October month we should have received it. Correct? But we received only first installment in October. Means whenever we receive the last installment, at the time only we can take ITC. So can we take ITC now? No. What is the reason that you will write? As per section 16, subsection and all not required, leave it. Okay. Section 16, remember enough. As per section 16, if the goods are received in lots with respect to an invoice, ITC can be availed only on receipt of last lot or installment. In the present case, first lot is only received in the current month, therefore ITC cannot be availed in the current month. Next, capital goods 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST, as it will avail depreciation on the full invoice value. They will avail depreciation on full invoice value including GST. Can they take ITC? No. So what is the reason that you will write? As per section 16, if depreciation under Income Tax Act is computed on GST component, ITC not available. In the present case, they capitalize the capital goods at full invoice value inclusive of GST, therefore ITC not available on this. Next, look into input services 2,25,000. One invoice dated 21/2023 on which GST payable was 50,000 has been received in October 2023. What about this? First, invoice dated 21/2023 means which financial year? 2022-23. Financial year 2022-23. For the financial year 2022-23, we need to see first the time limit for availment of ITC 30th November of next financial year, that is 2023, or date of filing annual return. What is the time limit for filing? What is the date on which annual return for 22-23 they are filing? 15 September 2023. So 15/9/2023, whichever is earlier. Which is earlier? 15/9/2023 is the earlier time limit. By that time they should avail the ITC. Correct? So here, are they availing the ITC by 15/9? No. They are in October month. So therefore they cannot take ITC on this 50,000. Only 1,75,000 they can avail ITC. Are you understanding? So time limit is over. The maximum time limit is 15/9, but we are in October, so we cross that time limit. So 90,000 plus 1,75,000, this only can be taken as ITC. 90 and 1,75,000, so total 2,65,000 is the ITC that can be availed. Understood? And reason you need to write. Time limit for availment of ITC is so and so, and as the time limit is expired, ITC cannot be availed like that. Okay? So we are left with two more sections, that is section 17 and section 18. 17 talks about apportionment of credit and blocked credit, and 18 talks about input tax credit in special cases. Okay? Now, we will see those two sections little later, and we will look into some questions related to this. Input tax credit, whatever we have discussed so far. Say this, question number 34 in page 98. Question number 34 in page 98. This is a RTP September 25 question, very, very important. High chance that this question can come in exam. Muscat Motors Private Limited, hereinafter referred to as MMPL, a dealer of motor vehicles registered in Udaipur, Rajasthan, has given ex-works contract to Messrs Ganesh Traders registered in Ahmedabad, Gujarat for manufacturing 10 units of pickup vans. So basically, ex-works contract means what? So they have to deliver the goods at their factory gate and the recipient should come and collect at the factory gate of the supplier. This is the meaning of the statement. Now, Ganesh Traders manufactured the vans and handed them over to transporter on behalf of MMPL on 29th April. So the supplier has handed over the goods to the transporter on 29th April and the delivery on its part is complete at its factory gate in Ahmedabad. Further, it raised the invoice for all 10 pickup vans on the same day. So there is invoice also on the same day. MMPL has recorded the invoice in its book also on the same day and the price of the vans ex factory was 10 lakhs each excluding GST at 28%. However, the vans were physically received by MMPL at its showroom in Udaipur on 2nd May and the payment was also made on the same date. So now tell me, when MMPL can recognize the ITC? For the month of April or for the month of May? April. Why? Because we have a CBIC circular which says that when goods are handed over to the transporter in case of ex-works contract, the goods are deemed to have been received by the recipient. And as per the concept of deemed delivery, when the goods are received by the third person, the goods are deemed to have been received by the registered person and the registered person can avail ITC. In the present case, on behalf of MMPL, the goods are handed over to the transporter on 29th April. So that is the date on which MMPL is deemed to have received the goods and they can take the ITC for April month even though they have actually received it in May. Got it? That is the first paragraph you need to write. First you need to write the provision, then you need to connect that provision. Then after payment, 2 vans got damaged completely in a fire in the showroom in the first week of May and therefore they were written off in the books in the month of the recipient, in the month of receipt by MMPL. Now in this case what is it you will write? When the goods are lost or destroyed or stolen or written off, then the ITC which is already availed needs to be reversed because as per section 17.5 it is a blocked credit. So they have already availed ITC. So related to these 2 vans, they need to reverse the ITC in May. So how much ITC they will avail in April? 10 vans into 10 lakhs into 28%. 10 into 10 lakhs into 28%. How much? 28 lakhs. 28 lakhs they will take ITC in April. Now 2 vans related ITC they need to reverse. So what is the 2 vans related ITC? So 10 lakhs into 2 into 28%. How much? 5,60,000. They need to reverse ITC in the next month, that is May month. Got it? So this is the answer based on that circular. Next. See question number 27. Question number 27, page 94. Rimjim Sales, a registered supplier receives 100 invoices for inward supply of goods or services involving GST of 10 lakhs from various suppliers during the month of January 2022. Out of 100 invoices, details of 80 invoices involving GST of 6 lakhs have been furnished by the supplier. So how many invoices have been furnished by the supplier? 80 invoices in their respective GSTR 1 filed on the prescribed due date. Therefore, and such details have also been duly communicated to the recipients in GSTR 2B. Compute the ITC that can be claimed by Rimjim Sales in its 3B. How much ITC they can take? Only to the extent of 6 lakhs. only to the extent of 6 lakhs, even though 10 lakhs of invoice is there, but they can take ITC only to the extent of 6 lakhs. 100% ITC can be availed. And what about the remaining 4 lakhs? As and when supplier files a GSTR 1 at a future date and communicate to the recipient in 2B, at that time they can take ITC with respect to that. That is what they need to write. Next. There is one question on Rule 37. Question number 16 you see. Question number 16. This is related to Rule 37. Comfortable Private Limited is registered under GST in the state of Orissa. It is engaged in the business of manufacturing of iron and steel products. It has received IT engineering services from Hi-Fi Infotech Private Limited for rupees 11 lakhs, excluding GST at 18% on 28th October. Invoice for service rendered was issued on 5th November. Okay. So, what is the month in which invoice is given? 5th November. So, which means they can take ITC for the month of November, correct? On what? 11 lakhs into 18%. Comfortable Private Limited made part payment of 4 lakh 20 on 30th November. So, part payment they made within 180 days. Being unhappy with the service provided by Hi-Fi Infotech Private Limited, it did not make the balance payment. Deficiency in service was made good by Hi-Fi Infotech by 15th April of next year, and Comfortable Private Limited made the balance on 6th July of next year. Examine the availability of ITC with Comfortable Private Limited in respect of IT engineering service received by it from Hi-Fi Infotech. First, for the month of November itself they can take ITC, correct? For the month of November this year they can take ITC because they don't have to make payment to supplier for the purpose of availing the ITC. As per section 16, conditions for availment of ITC, they should be in possession of tax invoice, but the payment they don't have to make to supplier to avail the ITC. Consequently, Comfortable Private Limited will avail the ITC on 11 lakhs into 18%. What is that 11 lakhs into 18%? 1 lakh 98,000 in which month? In the month of November. Over up to this. Then next. Now you need to write about Rule 37. What does Rule 37 says? As per Rule 37 of CGST rules, if the recipient has not made payment to supplier within 180 days from the date of invoice, so much of the proportionate amount not paid to supplier, the ITC needs to be reversed. In the present case, what is the proportion ITC to be reversed? Calculate. Why payment is not made within 180 days? Check. First check that. Wait. First check that. What is the date of invoice? Date of invoice, 5th November. Now you start 180 days. You start 180 days from 5th November. So how many days in November? 25 days. Just press 25 days. Plus, then December will be 31 days. And January, 31 days. February, 28 days. March, 31 days. Total how much so far? 146. And then April, 30 days. April, 30 days also you add. How much? 176. So 4 more days in May. So 4th May next year they should have made the payment. Correct? But when the payment is made? 6th July. Means the payment is not made by 4th May. Correct? Sir, 180 days from the date of invoice is 4th May, but the payment is not made by 4th May. So due to that reason, the recipient should reverse the ITC along with interest. Now, second you need to calculate how much is the proportionate ITC to be reversed. Okay. You tell me, calculate and tell me how much ITC to be reversed. Orally, can you tell me how to calculate? 11 lakhs minus 4 lakh 20 into 18%. Brilliant, mind-blowing. Wrong answer. Absolutely wrong answer, because 4,20,000 only you paid, not 4,20,000 plus GST, which means that 4,20,000 is inclusive of GST. So what you should do? 11 lakhs plus 18% you take. First calculate like this. 11 lakh plus 18%. What is 11 lakh plus 18%? Where did you keep calculator? Somewhere fold and kept inside? No, na? Remove. Okay, take it outside. I mean, kept inside your bag means remove it. So take that and calculate. Okay. So how much? 11 lakhs plus 18%. Minus 4,20,000 already paid. Minus 4,20,000. What is the balance? And this is the balance to be paid. In this, what is the GST component? Into 18 divided by 118. Into 18 divided by 118. How much? 1,33,932. Whether you got this? That is the answer. 1,33,932 to be reversed. Understood? So why like that? Because this 4,20,000 is inclusive of GST. So that's why this 11 lakhs also we are taking including GST minus 4,20,000, 12,98,000 minus 4,20,000 into 18 by 118. 1,33,932 rupees is what we need to reverse as ITC. And should we compute interest also? Yes, but we don't have the information about interest as to when they have utilized the ITC. So that's why interest computation is not required. Just this much you need to reverse ITC if you mention, that is sufficient. Suppose if they give information related to utilization of ITC, then from the date of utilization till the date of reversal, you need to compute the interest also. Okay. So this is how you may get a question on Rule 37. Now, come back to this. We are moving on to section 17, apportionment of credit. Apportionment of credit. Say this. Apportionment of credit 17.1, 17.2 and 17.3. That is, you have some inward supplies which is used for taxable outward supplies. Can you take ITC? Yes. You have some inward supplies which is used for taxable outward supplies. You can take ITC. You have some inward supplies which is used for exempted outward supplies. Can we take ITC? No, we cannot take ITC. If we have some inward supplies which is partly used for taxable, partly used for exempted, can we take ITC? Yes, but how much ITC? Proportionate ITC we can take. We have some inward supply which is used for both business and non-business, then proportionate ITC we can take. Can you remember these 4 points? Inward supply used exclusively for taxable or business, we can take ITC. Exclusively for exempted or non-business, we cannot take ITC. And proportionately for both taxable and exempted if you use, then proportionate ITC is available. And if it is used for both business and non-business also, proportionate ITC. Zero rated supplies, where will you keep? Taxable or exempted? For ITC purpose, zero rated you will keep in which place? Taxable or exempted? Taxable. Zero rated supplies will be covered under taxable supplies for the purpose of availment of ITC. Got it? And say this. So there is a omission in your study material related to this. Up to this only they gave. They have removed the remaining portion for your exam. So input tax credits, section 16 fully is there. When it comes to section 17, section 17, subsection 1, subsection 2, subsection 3 they gave, but subsection 4 is missing. Subsection 4 is omitted. So therefore, the subsection 3 is there, that is meaning of exempted supplies. But in the next page, the special provision for banking company, financial institution, NBFC is there na? That is omitted in syllabus, not in syllabus pa. It was there before, now they have removed it, so it is not there. So you don't have to bother about this special provision for bank, financial institution, NBFC. Only 3 subsections we have. Now so far what we have seen is subsection 1 and subsection 2, proportionate ITC. Now subsection 3 is important, meaning of exempted supplies. This can be asked as a short note question also or a theory question also, that what is the meaning of exempted supply for the purpose of ITC? Please concentrate. Generally we have the meaning of exempted supplies, that is notified as exempted, nil rated, non-taxable. These 3 are treated as the meaning of exempted supplies under GST. But for the purpose of ITC chapter, they have given total 8 transactions which are treated as exempted for ITC purpose. What are those 8? You have to remember these 8 points. Number 1, notified as exempted, nil rated, non-taxable. This is common. Apart from that, there are total 4 activities which are excluded from supply but treated as exempted. What is that? Sale of land, sale of building, sale of securities, sale of warehoused goods under customs. Okay, these 4 transactions, even though it is excluded from supply but treated as exempted. Okay, and next, supply covered under RCM. When I have some outward supply that is covered under RCM, that will also be treated as exempted. 8 points. Tell me what are the 8 points? Number 1, notified as exempted. So government from time to time will notify certain transactions as exempted, that is notified as exempted. Number 2, nil rated, means the rate of GST will be nil or 0, that is nil rated. Then non-taxable. What are non-taxable? Alcoholic liquor for human consumption, petroleum products, that one. Then next, sale of land, then sale of building, then sale of securities. Then say this, supply of goods by duty free shop to incoming passengers. There is a duty free shop, that is only called as warehoused goods under custom, that is there is a duty free shop. Where is a duty free shop? In international airport. And they are making sale to whom? Outgoing passengers or incoming passengers? Incoming passengers, even though it is excluded from supply, that is excluded from supply, but for ITC it is treated as exempted supply. Next, supply covered under RCM. These are the 8 transactions. Can you remember these 8 transactions? But notified as exempted other than interest on loans, advances, deposits. Interest on loans, advances, deposits, even though generally exempted, but for ITC it is not treated as exempted, it will be treated as taxable. That's it. This is what you need to remember. Mostly theory only. You will not get any practical question on this. Just this theory, if you remember 8 points, that is sufficient. With that, these 3 sections over, 17.1, 17.2 and 17.3. And so this special point is there now, that you don't have to remember, already I told you. That is other than interest on loans, advances, deposits. Generally interest on loans, advances, deposits is exempted, but it will be treated as taxable for ITC purpose, but this is not applicable for banking company, financial institution or NBFC. Means for a banking company, financial institution, NBFC, it will be treated as exempted for ITC purpose also, but that is irrelevant now. Why it is irrelevant now? Because we don't have 17.4. Due to that reason, this point is irrelevant now. You don't have to bother about it. Just these 8 points, if you remember, that is sufficient. Okay. Then we have blocked credits. Look into blocked credits. That is in 17 subsection 5. So we have totally 3 blocked credits. One is motor vehicle blocked credit, then we have construction related blocked credit, and finally other blocked credits. These are the 3 broad categories of blocked credits. Very, very important chapter, because if at all there is a question on input tax credit, 90% probability that they will be touching this 17 subsection 5 blocked credit. Definitely they will touch this section. Okay. So for 17 subsection 5 motor vehicle related block credit, you see motor vehicles is divided into 3. Motor vehicles for transportation of persons, vessels and aircrafts and others. What are other motor vehicles? Motor vehicle for transportation of persons, vessels and aircrafts. What is other motor vehicles? Transportation of goods, lorries, trucks, bulldozers, JCB, etc. like that. All these are other motor vehicles. Whether ITC available or not? Yes, there is no restriction. Example, trucks, lorries, etc. Motor vehicle for transportation of persons means what kind of motor vehicles will come? Two-wheelers, cars, bus, etc. will come. In that, if the capacity exceed 13, always ITC available. Capacity exceed 13 including driver or excluding driver? Including driver. Including driver capacity exceed 13 because it is not 13 passengers. 13 means including driver. If it exceeds 13, ITC always available. So what is the capacity exceed 13? Which type of vehicle? Bus. So stage carriage, contract carriage, buses, etc. for transporting employees, they can take ITC. But where is the blocked credit? Where is the block credit? Does not exceed 13. In that does not exceed 13, we have 3 cases, exceptions we can take ITC. Generally, motor vehicles for transportation of persons, capacity does not exceed 13 is block credit. But 3 exceptional cases we can take ITC. What is that? If it is used for further supply, if it is used in the business of transportation of passengers, if it is used for imparting driving skills. So further supply means what? Sale. I am buying and selling motor vehicles, I can take ITC. Or renting, I am buying the motor vehicle and giving it on rent, I can take ITC. That will come under further supply. Used in the business of transportation of passenger means I am operating travels, okay, travels or Ola, Uber transportation like that. I buy a car, I can take ITC. Last, I am running a driving school. For that I purchase a car, can I take ITC? Yes. So these 3 exceptions ITC available, other case ITC not available. Then next, vessels and aircraft is also blocked credit. However, for vessels and aircraft we have 4 exceptions. First 3 exceptions are same as this. What is that? Further supply, used in the business of transportation of passengers, imparting driving skills, and extra used for transportation of goods. For example, if I buy an aircraft and use that aircraft for transporting the passengers like Indigo Airlines or SpiceJet, etc., can they take ITC? Yes, they can take ITC with respect to that because it is used in the business of transportation of passengers. Suppose if I am buying the aircraft and renting it or selling it, can I take ITC? Yes, because that will come under further supply. Then suppose if I am running a courier agency, then I have to transport the parcels for which I purchase a aircraft or vessel. Can I take ITC? Yes. And suppose if I am not into the business of transportation of goods, for example, I have a jewelry shop and jewelry I need to transport. I don't want to transport by roadways because that is risky. So I want to transport the jewelry by airways. Now I purchase an aircraft. Can I take ITC? Yes. If I am into the business of transportation of goods or not in the business of transportation of goods, if I am using aircraft and vessel for transporting goods, I can take ITC. So what are the 4 exceptions per? Number 1, further supply, used in the business of transportation of passengers, imparting driving skills, and used for transportation of goods, ITC available. Other cases ITC not available. Understood this chart? Clear? Now I will give you some questions, you interpret and tell me whether ITC available or not. There is a school which purchased a bus that can carry more than 13 people. So they purchased a bus, and on that bus can the GST paid be taken as ITC? Yes or no? Yes or no? No. Why? Even though capacity exceed 13, ITC available, but school outward supply is exempted. Transportation of students is service provided by educational institution, so therefore they cannot take ITC. Is it clear? Then next, A chartered accountant purchased a car which is used in his business. Can he take ITC on the car purchased? No. Why? So it is not used for further supply. Correct? He is not selling and he is not using it in the business of transportation of passengers. He is running a share auto. No. And he is not imparting driving skills. So therefore he cannot take ITC. Got it? Then a company purchased a bus for transporting its employees. Can they take ITC? Yes. Why? Bus capacity more than 13. Always ITC is available. Then Reliance Industries Limited purchased an aircraft for transporting its directors. Can they take ITC? Why? Aircraft, not for further supply, not in the business of transportation of passenger, not for imparting driving skills, or not for transportation of goods. Directors are not goods. Therefore, ITC is not available. Got it? Then, so next there is one, this Maritime Training Institute. That Maritime Training Institute will train the people, that is this marine engineers, as to how to operate the ship, etc. and all. So that Maritime Training Institute purchased a vessel, that is ship, to train its students. Can they take ITC? Why? Imparting driving skills. Okay. So these are the questions. So based on this, suppose if you get any other question also, you need to just apply this chart and arrive at the answer. Now second one you see. You have 4 services in relation to motor vehicles. What are those 4 services? Repair and maintenance, insurance, servicing, hiring, renting and leasing of motor vehicles. Repair services for motor vehicles, insurance service for motor vehicles, and servicing means authorized service center, then hiring, renting and leasing of motor vehicles. If the motor vehicle purchased is eligible for ITC, these 4 services also eligible for ITC. If the motor vehicle, vessel or aircraft purchased is not eligible for ITC, on these 4 services also you cannot take ITC. For example, the chartered accountant who purchased the car could not take ITC. For that car, if he takes insurance, on that insurance can he take ITC? No. Then a company purchased a bus for transporting its employees, can take ITC. On that bus, if they incur repair expenditure or service expenditure, can they take ITC? Yes. Then suppose if there is a Ola driver or a travel agency which is buying a car, they can take ITC because they are into the business of transportation of passenger. Instead of buying car, if they take car on rent, they can take ITC because hiring, renting and leasing of motor vehicles, as the motor vehicle purchase is eligible for ITC. That is, if the motor vehicle purchase is eligible for ITC, on this renting also they can take ITC. Is that clear? That is about this. Then look into some points. While determining the capacity, the driver seat should be included or should not be included? It should be included. That is, the 13 is including driver. Further supply means either purchase and sale of motor vehicles or motor vehicles used in the business of renting, hiring or leasing. That's all. I purchased a motor vehicle and I have sold it. Then also it will come under further supply. I purchased a motor vehicle and gave it on renting. That will also come under further supply. Further supply does not mean only sale. Further supply can be even renting also. Then next, third point. Suppose if there is an insurance company which has given the insurance to the motor vehicles and the motor vehicle met with an accident. Now the repair bill will be in the name of the insurance company. Agreed? You purchased a motor vehicle and that motor vehicle met with an accident. You will give it to the service center. Now the service center will raise repair bill in your name or in the name of the insurance company. It will raise in the name of the insurance company. Can the insurance company take ITC with respect to that? Yes, there is no restriction. Generally insurance is repair and maintenance, etc. and all is block credit. But this is not applicable to the insurance company which is giving insurance to the motor vehicles. That is third point you see. Repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. Then number 4, hiring, renting and leasing of motor vehicles as a statutory obligation by employer to employee is also eligible for ITC. What is that? there is a IT company which is working in night shifts. As per government order, they have to mandatorily provide cab facility to their employees. So they received a renting of cab service. Generally, if they buy a car for transporting their employees, they cannot take ITC. So the renting of car is also not eligible for ITC. However, in this case, as it is a statutory obligation, they can take ITC. That is this. Generally, rent a cab. If the motor vehicle purchased is not eligible for ITC, rent a cab is also not eligible for ITC. However, if it is under a statutory obligation, they can take ITC with respect to this. And the statutory obligation can be under any law. Ambulance and caravan are not motor vehicles for transportation of persons. Means where it will come? It will come under other motor vehicles and ITC will be available. Why? Because ambulance is not for transporting people. Suppose if you want to go urgent, say there is a festive holiday, you want to go to your hometown and none of the bus is available, can we book an ambulance? No, na? So we cannot, because ambulance is only for first aid, to provide the first aid during the journey to the hospital. Then same way, caravan is a place for like a temporary accommodation for the actors, etc. and all. So whenever they go for outdoor shooting, they will not have proper place to take rest. That's why they take the caravan. But that is not for transportation. That is like a movable short-term accommodation. So that is also other motor vehicles, and they can take ITC with respect to that. Got it? Next we have two circulars. So we'll take a break and then we will continue with that. We'll take a break for 15 minutes and then continue. Okay, listen. So in break 2, students asked me this doubt, whether transportation of employees or directors will come under transportation of passengers. No. Transportation of employees and transportation of directors is not transportation of passengers. So therefore, don't put it under transportation of passengers. Then why, sir, ITC available? Because bus capacity more than 13, that's why ITC available. Suppose in aircraft, if they transport directors, that will not come under transportation of passengers. Suppose in car, if they transport employees, can they take ITC? No. Instead, if the car they are transporting employees under a statutory obligation, then they can take ITC. Now, look into one circular related to insurance. Insurance company, how the ITC can be availed, etc. and all. First, with respect to motor vehicles, insurance company will give the insurance, and if any accident happens to the motor vehicle, then the vehicle will be sent to the service center or garage, and the service center will raise the invoice to the insurance company. Only then insurance company can take ITC. What if the invoice is in the name of the insured? Insured means the owner of the vehicle. If the motor vehicle purchase is eligible for ITC, on that repair expenditure also they can take ITC. Broadly speaking, there are two types of reimbursement models. One is cashless model. Cashless model means you took the insurance, the moment vehicle met with an accident, you can go to the service center and you can hand over the vehicle, you don't have to pay 1 rupee also out of your pocket. Everything insurance company only will pay, and the bill will be raised to the insurance company, and insurance company can take ITC, no doubts. Very, very simple. You are not spending anything, that is called as cashless claim. Cashless claim means 1 rupee also you don't have to spend. Fully the insurance company only will take care, and the bill will be in the name of the insurance company, and insurance company will make the payment, they will take ITC. But the problem arises in case of reimbursement model. In reimbursement model, what will happen? First you will spend, and then the insurance company will reimburse you. Now in this case, what is the ITC to the insurance company? Still ITC is available to the insurance company provided the invoice is the name of the insurance company. And what if insurance company is not paying fully? Suppose if the bill is for 1 lakh and the insurance company has given only 60,000, then to what extent insurance company can take ITC? Only to the extent of 60,000. Okay, say this, whether ITC is available to the insurance companies on the expenses incurred for repair of motor vehicle. If it is a reimbursed mode of claim settlement, in reimbursement mode of claim settlement, insurance company can avail ITC even though expenses initially incurred by insured. However, very, very important point, invoice for repair should be in the name of the insurance company. Suppose if repair cost is beyond the approved claims, suppose if the repair cost is somewhere like I told you, so 1 lakh and the approved is only 60,000, ITC to the extent of amount reimbursed by insurance company but not the entire repair cost. What will be your answer if the insured, the invoice is the name of insured? If the invoice is in the name of insured, insured can take ITC only if the motor vehicle purchase is eligible for ITC. ITC not available to insurance company as conditions are not satisfied. But what about insured? He can. Why? Because we have seen repair expenses he can take ITC if the motor vehicle purchased is eligible for ITC. Then another circular is related to demo vehicles. Usually dealers will buy the demo vehicles from the manufacturer and keep it for display for test drive, and lot of potential customers will visit the showroom and do the test drive of the vehicle, and if they like the vehicle then only they will make a purchase. So whether this demo vehicle they can take ITC or not. First, this will come under capacity does not exceed 13. Further supply, no, this is not in further supply because they are not selling the demo vehicle. If the vehicle they wanted to buy, the other vehicle only they will sell, the demo vehicle they will not be selling. And they will sell the demo vehicle when? After some years when the new model is launched, this demo vehicle they will be selling, but not now. So it is not for further supply now. Number 2, it is not for imparting driving skills, it is not used in the business of transportation of passengers. That's why this particular dispute came, but for which CBIC is giving a clarification that even though this demo vehicle is not sold now, but this demo vehicle is useful for making the sales. As this demo vehicle is useful for making the sales, we can enjoy the ITC with respect to the demo vehicle purchased. And this demo vehicle is inventory or asset. Where it will come? Is it inventory or fixed asset? It is fixed asset. It's not inventory because they are not going to sell it now, so it will be capitalized. When it is capitalized, they have to ensure one thing. What is that? They should capitalize excluding the GST component. If they capitalize including the GST component, they cannot take ITC. Say this. ITC is available on demo vehicles if they are used for promoting further supply of vehicles. If demo vehicles are capitalized, ITC is available unless depreciation under section 32 is claimed on the tax component. Also, sale of such capitalized demo vehicles, GST payable in terms of 18(6). If demo vehicles are used for non-business purpose or a part of marketing services for manufacturer, ITC is blocked. So what is this 2 points? Sale of such capitalized demo vehicles, GST is payable under 18(6). There is one section 18(6) which says that whenever we are purchasing capital goods and that capital goods we avail the ITC, whenever you are disposing of the capital goods, that is selling the capital goods, so much of the ITC availed minus 5% depreciation we need to give for every quarter or part thereof for which we have used, and GST on sale value of such capital goods, whichever is higher is the GST payable. So when 18(6) will be applicable? When 18 subsection 6 is applicable, come on, you are purchasing some capital goods. On purchase of that capital goods, please look into page 113. Please look into page number 113. So you are purchasing capital goods, and that particular capital goods on which ITC is availed, capital goods are supplied on which ITC is availed, GST payable will be highest of the following. So the GST payable will be highest of the following. What is that? ITC availed minus 5% for every quarter or part thereof from the date of invoice till the date of supply. Okay, minus 5% for every quarter or part thereof, from when to when? From the date of purchase till the date of sale. Or see the price at which it is sold into GST rate, whichever is higher should be taken. But this section is not applicable in case of refractory bricks, molds and dies, jigs and fixtures which are sold as scrap. If there are some refractory bricks, molds and dies, jigs and fixtures which is sold as scrap, then it will not be applicable. In such case, GST is payable on the normal sale value. Okay. Next, related to this, I gave one question in the next to next page. Have a look into this in page number 115. You purchased capital goods on 8/10/2019 for rupees 10 lakhs excluding GST at 12%, and they were disposed of on 5/5/2021 for 6 lakhs excluding GST at 12%. Compute the GST payable. So these are capital goods on which ITC availed and disposed of. See the number of quarters for which it is used. 8/10/2019 means which quarter? And here quarter should be calendar quarter. Means October, November, December 2019. So in 2019 it is 1 quarter. In 2020 4 quarters, full year. In 2021, so Jan, Feb, March, April, May, so 2 quarters. So total how many quarters? 7 quarters. 7 quarters into 5% means 35%. So ITC avail, that is first 1 lakh into 12%, that is 1 lakh, so 10 lakhs into 12%, 1 lakh 20 minus 35%, 78,000. So much of the ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on sale value. What is the sale value? 6 lakhs. 6 lakhs into 12%, 72,000, whichever is higher. Which is higher? 78,000 will be taken as the GST payable. Is that clear? Now, what will be your answer if such goods are not capital goods? 18(6) will not be applicable. 18(6) will not be applicable. 18(6) is applicable only in case of capital goods. If they are not capital goods, you need to take normal transaction value, section 15. That is the price at which such goods are sold. What is the price at which such goods are sold? 6 lakhs. 6 lakhs into 12%, 72,000 will be taken. Then, what will be your answer? If such capital goods are disposed without consideration and value under section 31, that is open market value. Open market value is 4 lakhs, under rule it is. Okay. So, this 4 lakhs is open market value. Usually, when the transaction value is not available, we will take open market value now. So, that open market value is 4 lakhs. Now, what we should do? A, same, ITC minus 5% for every quarter or part thereof, same, 78,000. B, instead of 6 lakhs, you take the open market value. What is the open market value? 4 lakhs. 4 lakhs into 12%, 48,000, whichever is higher is 78,000. What will be your answer? If such capital goods are disposed of without consideration and the value cannot be determined under rules, then B point is not possible. A is possible, ITC minus 5% is 78. B will be sale value into GST. We don't have sale value. So, only A is the answer, that is 78,000. What will be your answer if such capital goods are sold after 5 years? Then A will be 0. Why A will be 0? 5 years means how many quarters? 5 years means how many quarters? 1 year, 4 quarters. 5 years means 20 quarters. 20 into 5% is 100%. So, ITC availed minus 100%, fully it will become 0. So, B will be GST on sale value. So, only one value will be there, that is 72,000. What will be your answer if they are refractory bricks which are sold after 4 years as scrap for a value of 1 lakh? There are 3 goods, that is refractory bricks, molds and dies, jigs and fixtures, which is sold as scrap. In that case, we need to pay GST on sale value. What is the sale value? 1 lakh into GST 12%. So, 12,000 will be the GST payable. Is it clear, pa? So, now coming back to this circular, if you purchase demo vehicle on which ITC availed, when you sell that demo vehicle, you have to pay GST in terms of 18.6. Got the clarity now? So, come back to page 105. If you purchase the demo vehicle and on the demo vehicle you have availed the ITC, whenever the demo vehicle is sold, usually they sell this demo vehicle to travel companies. If you observe, every car dealer, white color only they will keep as demo vehicle. Have you observed? Different colors will not be kept. So, they will tell this is the demo vehicle, sir, whichever color you want you choose. But different color vehicles they will not keep. You know why? Because this white color in future they can sell for travel companies. Because travel operators, usually all travel operators will use white color only in a travel vehicles. So, due to that reason, they use demo vehicles as white color only. And thereafter, when new model is launched, so the old model will be sold to the travel companies, which they will be giving it on rental, etc. and all. Okay. Next, if the demo vehicle is used for non-business purpose, means what? So, if the dealer is buying this demo vehicle and he is only using it, rather than giving it to the customers for test drive, he is only using it. Can he take ITC? No. Already we know if any goods are purchased used for non-business purpose, we cannot take ITC, correct? Suppose if he is using it for marketing purposes, not for test drive, just marketing, that is display. If you see in shopping malls and all, Phoenix Mall or Express Avenue Mall, in the ground floor they will be keeping this car for display. Even in airport, railway station and all also, they will keep the cars for display. These cars are available for test drive. For example, you went to Phoenix Mall, you saw one car, so nice. So, can you ask for a test drive? Sir, mall I will go and come, like Beast movie, I will go to mall, like that if you ask. You know, will they give it to you? No. So, it is not available for test drive. So, can you take ITC with respect to that? No, you cannot take ITC with respect to that. Reason, it is not given for test drive, it is only for marketing purpose, display. As a part of marketing service for the manufacturer, ITC is blocked. So, with this we completed motor vehicle related block credit. Now, we are moving on to the second one, that is construction related block credit. In construction related block credit, remember, you are into the business of construction, okay, and you can take ITC. The restriction is only to the owner, it is not to the builder. The restriction is only to the owner of the property. So you are the owner of the property. You are purchasing any goods for construction, or you are receiving any service for construction including works contract service, you cannot take ITC. What is the example of goods purchased for construction? Cement, paint, building material, etc. You cannot take ITC. Any service, that construction service, interior decorator service, etc. you cannot take ITC. Even works contract. What is the difference between construction and works contract? In construction, they will do only construction work, they will not give you any material. You have to buy all the material required. But in works contract, they will only buy the material and they will construct and hand over the property to you. That is works contract. These are all blocked credits, you cannot take ITC. Clear? So what is a block credit for construction? To the owner of the property. To the owner of the property, what are the block credit? Any goods purchased for construction. Number 2, any services received for construction. Number 3, works contract service. However, we have 3 exceptions. Means we can take ITC. What is the first exception? If these goods or services are received by the builder for providing the work of construction, can the builder take ITC? Yes. The restriction is only to the owner of the property, not to the builder. So builder can take ITC. Got it? Next, number 2. If the construction expenditure is for plant and machinery, then IT is available. So the restriction is only for construction of building, not plant and machinery. Example, if you receive construction service for construction of lifts, escalators, these are plant and machinery, can we take ITC? Yes. What is plant and machinery? Any equipment, apparatus, machinery, etc. But plant and machinery excludes 2 things. What are they? Number 1, telecommunication towers and pipelines laid outside the factory gate. If you receive construction services for telecommunication towers or pipeline laid outside the factory gate, you cannot take ITC with respect to that. But any other plant and machinery, you can take ITC even though it is immovable in nature. Third exception you see, if the construction expenditure is charged to P&L, you tell me, as you studied accounting, so when the construction expenditure will be charged to P&L? Instead of capitalizing the construction expenditure, when will you charge construction expenditure to P&L? If it is repairs or renovation, correct? If it is new construction or additional floor and all, you will capitalize. But when it is repair expenditure or renovation expenditure, you will charge it to P&L. So at that time you can take ITC, that is that. So any service, works contract service, any service, works contract service or goods purchased or received in relation to construction of immobile property, ITC not available on those inward supplies. Works contract service involves transfer of property in goods as well as provision of service for a single consideration. Exception, the above discussion is not applicable to supplier. That is, if a works contractor, that is builder, receives construction service, then they can take ITC. Construction of plant and machinery, even though immovable, plant and machinery excludes telecommunication towers and pipelines laid outside factory. Previously it was plant or machinery, but now they changed it to plant and machinery. Only plant, also we can take ITC, only machinery also we can take ITC, but now they changed it to plant and machinery. Okay, because plant means there was a confusion, even building also will come under plant. Usually we say power plant, like that. Building also will come under plant. That's the reason why plant and machinery is purely machineries, If construction expenditure is charged to P&L, then also ITC can be availed on above inward supplies. Next, there is one circular related to this. Generally, telecom companies will lay down ducts and manholes for the purpose of optical fiber cable network. So today we are using broadband, fiber net. So for the purpose of broadband and fiber net, even for telecom towers, there is a beneath the ground one optical fiber network will be there. This optical fiber network, what they do, first they dig the manholes and they lay down the pipelines. Through that pipelines they send the optical fiber cables. Now for making these manholes and pipes, they need to receive construction services. Can they take ITC on that construction services? Is it plant and machinery? Yes, it is plant and machinery. But plant and machinery excludes what? Telecommunication towers and pipeline laid outside factory. Is it telecommunication tower? No, no. This is optical fiber cable. This is not telecom towers. Is it pipeline laid outside the factory gate? That is for the manufacturer. Here they are not manufacturer. Which means can the telecom company take ITC on this? Ducts and manhole expenditure? Yes, that is this. Ducts and manholes which are integral part of optical fiber cables qualify as plant and machinery and can avail ITC on the same, even though used by telecom companies, as only telecommunication towers are excluded from the meaning of plant and machinery. Even they do not fall under pipelines laid outside the factory gate. Then next, only hiring, renting or leasing a motor vehicle is blocked ITC. What about hiring of buildings? If I take building on rent, is it blocked ITC? No. Is renting of furniture blocked ITC? No. Is renting of cameras, computers, etc. blocked ITC? No. Only motor vehicles renting I said as blocked ITC. So other items is not blocked ITC. And generally when we say works contract, that is only in the context of immovable property. ITC available on construction of pipelines inside the factory. Plant and machinery excludes what? Pipelines outside the factory gate, but pipelines inside the factory gate will be eligible for ITC. And ITC available on rails. Why rails? Train. Why train is eligible for ITC? Sir, train is not a motor vehicle. Train is not a motor vehicle. Motor vehicle means that which is used in the road, vessel and aircraft. That is only block credit. Where train is in the block credit? Train is not in the block credit. So we can take ITC. Even 2 or 3 wheels capacity up to 25 cc also not motor vehicles. So up to 25 cc means what? Bicycles. Bicycles with a small motor fixed. Sir, if you take scooty, these are all minimum 100 cc. Correct? So you take Access, Activa, etc. 100 cc, 125 cc. Minimum it starts. XL Super like that one moped is there. That also 75 cc. But less than 25 cc means definitely it is a bicycle. There are some bicycle with a small motor fixed, like little bit initially you pedal it, so it will go at a small speed. So that is only up to 25 cc, that is eligible for ITC. A company in Bengaluru, lot of software companies have purchased that bicycles and have given it to the employees. Don't think bicycle means what's 1,000 rupees, 2,000 rupees, where? No, 25,000 rupees. 25,000 rupees to 30,000 rupees is the cost of one bicycle. And that bicycles, they have purchased it because Bengaluru traffic is so high. Wherein, so if you start morning 8 o'clock, you will reach the office by 12 o'clock. Then afterwards, what they will work? So that's the reason why they were asked to come to the office by 9 using these bicycles. And these bicycles are purchased by the company and given to the employees. Can they take ITC? Yes. Generally, any vehicle purchased for giving it to the employee, you cannot take ITC if it is a motor vehicle. But as this bicycle is up to 25 cc, it is not a motor vehicle, eligible for ITC. Got it? Next, look into third one, that is other blocked credits. In this other blocked credits, we have membership of a club, health and fitness center eligible for ITC or not? No. What is membership of a club, health and fitness center? Usually gym membership, there is GST. Can we take ITC? No, we cannot take ITC on gym membership. And membership of a fitness center, health, etc. even any club, social club like Lions Club, Rotary Club, etc. Can we take ITC? No, even though it is business expenditure. Usually it is personal expenditure, but even if it is business expenditure, we cannot take ITC. Lot of actors who take membership of gym, the producer will pay the bill. Producer will pay. And when producer is making the payment, can the producer take ITC? Actually for producer it is a expenditure, business expenditure. But he cannot take ITC because membership of a club, health and fitness center is blocked ITC. Suppose if the employer has to take the membership of a club, health and fitness center under a statutory obligation, then whether IT is available? Yes, that is the exception. See there. Provided by employer to employee under a statutory obligation, that is the exception. Then second, travel benefit extended to employees on vacation. An employee is going on a vacation. That expenditure is borne by the company. Can the company take ITC on that expenditure? No. But what is the exception? Same. Statutory obligation by employer to employee. Then, non-resident taxable person. Already we discussed. Who is a non-resident taxable person? Person from outside India to India who is not having any fixed place of business in India. Cricketers are NRTP, correct? I told you. Cricketers who visit India to play matches, IPL matches, are called as NRTP. Are they earning money? Yes, amazing money they earn. On that, are they required to pay GST? Yes. Now, can they take ITC on the inward supplies? So, how many months it will go IPL matches? 2-3 months? Yes or no? For 2-3 months they will be in India and they will receive lot of inward supplies. Can they take ITC? No. Only on one they can take ITC, that is on import of goods. What is the goods imported by cricketers? Kit. Their kit. Because when it comes to cricketers, so they will have lot of attachment towards that cricket kit. They will ensure that they will be bringing it from there to here. So any bat is okay na? So no, they will not. So they will have sentiment, etc. and all. And say for example, using one bat, if they have made a century, etc. and all, they preserve it. They preserve it, and every cricketer will have a very big box, and in that lot of cricket kit will be their bats, multiple bats, their pad, helmet, everything will be there. That particular kit will be imported to India, and on that import, IGST paid alone can be taken as ITC. On remaining, they cannot take ITC. That is this. Exception, import of goods by NRTP. Then, food and beverages, outdoor catering, beauty treatment including cosmetic, plastic, hair transplantation, life insurance and health insurance. You remember it in 3 simple words. Food, beauty, insurance. Food, beauty, insurance. Food, related to food. Food and beverages, outdoor catering. Beauty, beauty treatment including cosmetic, plastic, hair transplantation. Then insurance, life insurance, health insurance. Too much food if you eat, beauty gets spoiled, insurance is required. Okay. So food, beauty, insurance. These 3 block credits. However, for these 3, we have 3 exceptions. Exception number 1, inward supply, outward supply in the same category. Example, I have a canteen and I am selling food and beverages in my canteen. I buy the food and beverages. Can I take ITC? Yes. Because inward supply also food and beverage, outward supply also food and beverage, I can take ITC. That is inward supply, outward supply in the same category. Got it? Number 2, inward supply part or component of outward supply. Example, I am in the business of transportation of passengers by airways. Now I will be providing food to my passengers. Even railways, this Vande Bharat Express, they will be providing food to their passengers. Now they buy the food and beverages. Can they take ITC? Yes. Why? Food and beverages is inward supply, which is a part of outward supply. So they can take ITC with respect to this. Inward supply is part of composite or mixed outward supply. Number 3, statutory obligation. For example, as per Factories Act, every factory has to mandatorily provide food facility to their workers. They have to provide food to their workers. And for which they receive outdoor catering service. Can they take ITC? Yes. Even though outdoor catering is block credit, but it is under a statutory obligation, so ITC available. Then see the remaining. If there is a person who is purchasing from a person opting for composition scheme, you are making purchase from a person opting for composition scheme, can you take ITC? No. First of all, you are not supposed to pay GST to them. Even if you pay GST, you cannot take ITC. Second, if you are buying any goods for your personal consumption, can you take ITC? No. Suppose if you are buying goods for obligation under CSR, CSR obligation, corporate social responsibility obligation, can you take ITC? No. For example, you wanted to provide blankets to the poor people and beggars during winter season. So therefore, you purchase the blankets under CSR obligation, you have purchased it, you can do that. But on purchase of blanket, there is GST paid. Can you take ITC on that? No. So that is for use in obligation under CSR. Then last point, if you have purchased some goods and those goods are lost, stolen, written off, destroyed, or given as gifts or free samples, you cannot take ITC. Goods lost, stolen, destroyed, written off, or disposed by way of gifts or free samples. But remember a very, very important point. If that gifts or free samples constitute supply, then you can take ITC. Example, I am just writing the example here itself. There is a employer. There is a employer. That employer is purchasing smartphone. Purchase of mobile. There is an employer who is purchasing a mobile. And what is the price of this mobile? The price of this mobile is 80,000 plus, what is 18% GST on 80,000? 18% on 18,000, how much? 14,400 is GST. Got it? And what employer is doing with that mobile? He is gifting it to employee. He is not using it for his business, but he gifted it. Gift of mobile. Gift of mobile to employee. Now, is this gift of mobile to employee supply or not a supply? Supply or not a supply? Supply. Why it will become supply under 71C? Generally, gift by employer to employee, if the value does not exceed 50,000, is not a supply. But if value exceeds 50,000, if value exceeds 50,000, then it will be supply. Means employer has to pay GST. Now can employer take ITC with respect to this? Yes. The employer can take ITC with respect to this. Why? Generally, any goods which are purchased and given as gifts or free samples, they cannot take ITC. But if that gift or free samples treated as supply under 71C, then ITC not required to be reversed, means they can enjoy the ITC on the purchase. What if employer purchase a mobile for 50,000 plus GST 9,000? Now can the 9,000 be taken as credit? No. Why? Because value exactly 50,000, gift exactly 50,000 is not a supply, so they cannot enjoy the ITC on that. Done here, understood? So look into the next one. There is one circular related to replacement of parts during warranty period. This replacement of goods during warranty period, we have in detail some provisions, but this is the shorter version of it. I'll give you one example, concentrate. I'm purchasing one, say, one torchlight, rechargeable torchlight I am purchasing in my shop, and this torchlights I took the ITC because that is my inventory. Now you purchase the torchlight from my shop, it was working fine. Thereafter what happened? So when you took it to home and you charged it, the next day it was not working, and definitely it is covered under warranty. So what you will do? You will return that torch to me and take the another one. Now this another one, I am giving it for free or am I charging it to you? I am giving it for free. Can I take ITC? Can I take ITC? Yes, I can take ITC, no issue. If any goods are purchased and given as free replacement during warranty period, ITC is available. Is it clear, pa? Now, as I took the ITC, won't it become disposal of business asset on which ITC is available? No, 71C is not applicable in this case. Even though ITC avail, even though it is my business asset, but don't invoke 71C, don't apply 71C, means it is not a supply. So tell me, what are the two provisions you need to remember? First, what is the situation? If any goods are purchased and replaced during warranty period, can I take ITC on the goods purchased? Yes. Whether that replacement under warranty period is supply or not a supply? Not a supply, not a supply, okay. Whether a part or entire product is replaced during warranty, ITC can be availed on goods purchased for warranty, and not necessarily the entire product, even a part. What happened? I purchased one Bosch washing machine 2 years before, not 2 years, 3 years before I purchased, and it was covered under standard warranty of 5 years. And what happened? So this drum will be there, na, that washing machine drum. So that did not work. There was lot of noise because some issue was there inside. And I called one technician, and he said, sir, we need to replace the entire sensor, sir, and for which you need to spend 10,000 rupees. That washing machine was 40,000, and 10,000 rupees I need to spend on this. I said, no, not required, you leave it, because it is covered under warranty and I have to take some pain. I took that. I called customer care, I showed them bill, it is covered under warranty, etc. and all. Then one technician from company side came and they replaced it for free. The entire drum, they replaced it for free during warranty period. Now this drum they would have purchased, correct part, they would have purchased. Can they take ITC? Yes. Whether the part is purchased or the entire product is purchased and replaced during warranty period, they can happily take ITC. There is no restriction. That is this. Irrespective of whether any consideration is charged or not, they can take ITC. Where the distributor uses his stock for replacement, manufacturer replenishes the stock, on which manufacturer can take ITC. Now listen. Now instead of this example directly between me and you, now you are a dealer, I am manufacturer, and you have a customer. I sold the product to you, you sold the product to the customer, and the customer is telling that is defective, so you replaced from your stock. When you replace from your stock, I need to refill that stock, correct? Now I am sending that stock to you. Can I take ITC? Yes, I can take ITC, no issue. You don't have to reverse any ITC, I can take ITC. Now this stock I am replacing, is it supply or not a supply? Not a supply. That is this. Where distributor uses his stock for replacement, manufacturer replenishes the stock. What is the meaning of replenishment? Refilling or restoring, okay, on which manufacturer can take ITC. Then amount paid for extended warranty. Usually for electronics there is a concept of extended warranty. That is, lot of mobiles, this extended warranty concept is there. I purchased one iPhone, and iPhone 15 Pro Max, and it was some 1,60,000, 1,59,990, 1,60,000 rupees per. At the time of purchase, that shopkeeper told me, sir, if you pay 10,000 rupees extra, you will get, already 1 year warranty is there, extra 1 more year warranty you will get, plus at the same time, this warranty is for physical damage, everything. So I thought, okay, fine, 10,000 rupees only, I took that. I thought it is wasteful expenditure. And exactly 2 years was ending. Some issue came in my mobile, normal issue only. Battery was draining out. I took it to the Apple center. They said, sir, 2 years warranty is there, sir. You please break your mobile and bring. I didn't understand. You break your mobile and bring? And they said, yes, sir, break your mobile and bring. Don't worry, we will give you new mobile. But break it in such a way that repair is not possible. Are you sure? Yes, sir. So I took that mobile and I played bowling and all in my home. So how much ever we can break, that much I broke. So like this flip and all I did, lot of things. All this video I kept for my, enjoyment. So no one will play with iPhone like that, na. So like that I did, and I destroyed that left, right, center. And then I took it and gave it to the service person. So he said, he was laughing at me, and he said, okay, sir, just wait for 2 days, we will give you the new one. I got brand new. After 2 days, I got the brand new one. Yes. So this again 2 more year warranty also I got. So 1 year over. So now again I am going to break it, and then again I will be getting. But at that time, if iPhone 15 Pro Max is not there in the stock, they will be giving me, so some other model, latest model, whichever is available, they will be giving me. 16 Pro Max I will be getting. Got it? So therefore, people who buy iPhone are smart. Got it? So like this, one time investment, what you will do? Android mobile you will buy 40,000 rupees like that. 2 years you will replace like that. One iPhone, 10 years also we can use. Got it? That is the power of additional warranty. This additional warranty is taxable or exempted. Taxable, no doubt it is taxable. But at what rate? If the additional warranty is at the time of sale of product from the same person, that is at the same time by the same dealer, then it will be taxable at the rate applicable to the product. Suppose if the product is 18%, additional warranty also 18%. If the product is 5%, additional warranty also 5%. Got it? If you pay for the additional warranty at a later point of time, what is the rate applicable to the additional warranty? It's an independent transaction. So therefore, it will be treated as a separate transaction and always 18% will be applicable. So you need to be smart here. If the product rate is 5%, additional warranty you buy immediately at the same time from the same person. So additional warranty also 5%. If the product rate is 40%, additional warranty don't buy at that time, because cars and all is 40%. So don't buy additional warranty at that time, buy additional warranty later, so you will pay 18%. At the time if you buy, you will pay 40%. Got it? Say this. Amount paid for extended warranty taxable at the rate applicable to goods if the warranty is taken from the same supplier at the time of purchase of goods. If the amount for extended warranty paid to another supplier, it is treated as what? Separate supply. Suppose if you pay to the same person at a different point of time, same person but at a different point of time, then also it will be treated as a different transaction. So total 4 combinations. Same time, same dealer. Same time, different dealer. Okay, same time, same dealer. Same time, different dealer. Different time, same dealer. Different time, different dealer. Only in the first case it is composite supply. Other 3 cases it will be individual supplier, separate supply, taxable at the separate rate. Okay. You remember these points now? These points will be tested in exam through some illustrations which I gave in page number 116 onwards. Have a look into that. Next, circular on replacement of parts or goods during warranty and applicable rate on additional warranty. Already we discussed all these points. Usually goods sold are under the condition that it shall be replaced or repaired on account of defects during warranty period. Reversal of ITC shall not arise even if replacement of parts is without any consideration and 71C is not required to be invoked. What if they charge a nominal consideration? Sometimes what they do, some nominal consideration they will be charging during replacement of parts. If the part value is 10,000, they will collect some 1,000 rupees like that. Then that 1,000 rupees only will be treated as consideration. If any consideration is charged with respect to such replacement, then supply is 71A and GST is payable on such consideration. Even then reversal of ITC shall not arise. For example, sleek modular kitchen supplier provided interior decoration services to Mr. X, a customer, and the customer has paid a consideration of 8 lakhs plus GST 18%. Now sleek purchased the part for replacement to customer during the warranty period. So there is some issue with respect to that, because usually modular kitchen and all, lot of cabinets will be installed, and in house, so whether husband or wife, whenever they have anger on other, they will show it on the cabinet. Okay, so that draw they will take, suddenly they will push it like that, because anger we need to show now. So on what we will show? On the other person if you show, that will become physical abuse and we will end up in some case and all. So but on the equipment we can show, because that equipment don't have any voice and all, so it will not speak. Otherwise that equipment also will scold left, right, center, and when it is done, it's not out of experience and all. So generally I am telling you, generally every house the same issue, that cabinet and all will be gone, it will be damaged. And when it is covered under the warranty period, they will replace the cabinet. When they replace the cabinet, that is 50,000 plus GST, can they take ITC with respect to that? Yes. it is not a supply, and ITC of 6,000 not required to be reversed, they can enjoy the ITC. Issue number 2. Next illustration. There is a car manufacturer and a car dealer and a buyer. Car manufacturer sell the car to the dealer and car dealer will pay 12 lakh plus GST. The dealer will make sale of car to the buyer including warranty 3 years, for which buyer has paid 15 lakhs plus GST. Now, in this case, the dealer has provided free after sale service of 3,000, because usually whenever you purchase a car, the first 2 services will be free. Is it really free? No, it's not really free. They will not collect it from the buyer, but 3,000 rupees they will get from the manufacturer. And during this first service, they would have replaced some parts also under warranty, that is 2,000 rupees. Understood the situation here? What happened? You are the dealer. Please step into the shoes of the dealer. I am manufacturer, you are dealer. What you did? You provided free after sale service to your customer. How much? 3,000. Also, you replace the part during the warranty period, that is 2,000. Now, situation 1. Dealer procured the parts for replacement by third party and charged consideration from the manufacturer. Now, you need to replace that part. What you did? You purchased from the market and you replaced it. And now, you will charge me 5,000 rupees, correct? How 5,000? 3,000 rupees for the after sale service, 2,000 rupees for the part purchased and replaced. Now, from your side, you tell me, what is the first thing that you did? You purchased a part. What is the part purchase? 2,000 into GST, say 18%. So, 2,000 into 18%, 360 you will take as ITC. And now, you will recover how much from me? 5,000. On that 5,000 into 19%, that is, 5,000 into 18%, that is 900 rupees, you will pay GST to government. Is it clear? So, see the answer. From the point of view of dealer, we don't know in exam from whose point of view they will ask the question. From point of view of dealer, what is the treatment? First, you are collecting from me 5,000 plus GST 900, and that 900 rupees you will pay to government. Plus you are also purchasing the part 360, 2,000 into 18%, 360 you will take ITC, no reversal of ITC. And from my point of view, you tell me, manufacturer, what manufacturer will do? Dealer raised invoice to manufacturer for how much? 5,000, and on that 900 rupees, I will take ITC. Is it clear? Manufacturer will get a invoice for 5,900 and that 900 can be taken as ITC by manufacturer. Are you understanding this? Suppose if they modify the question like this. If replacement of part are received by the dealer from manufacturer, means you did not buy it from the market. Please concentrate. You did not purchase it from the market. You received it from me. Got it? So, how much you will recover from me now? 3,000. Why 3,000? The part you got it for free from me. Now, 3,000 only you will recover from me. On the 3,000 into 18%, 540, you will pay GST to government. Please look into the answer from the point of view of dealer. After sale service 3,000, 540, 3,000, 540, and 540 you pay to government. From my point of view, tell me, manufacturer, what he will do? I am buying the part and I am giving it. So, can I take ITC on the part purchase? Yes. Not only on that, you are recovering 3,540 from me. On that 540 also I can take ITC. 540 can be claimed as ITC by manufacturer, even 360 can be taken as ITC by manufacturer, and manufacturer is not required to reverse ITC. Another case. Suppose if 100 numbers I have already sent to you, 100 numbers of that part already I have sent to you, 100 numbers of the spare part supplied by manufacturer to the dealer. What is the price at which I am sending to you? 2,000 rupees excluding GST 18%. Out of that 100, one number you took for replacement during warranty period. Now from your point of view, you tell me, first what has happened? I sent you 100 numbers, means I would have billed you for 100 into 2,000, 2 lakh plus GST 36,000, I would have raised you invoice for 2 lakh 36,000. But out of that 100 numbers, one part you took and replaced on my behalf, correct? Actually I should have done, you did. Which means you will pay me for 100 numbers or you will pay me for 99 numbers. You will pay me only for 99 numbers. Now I need to give you one credit note under section 34. First I raised you invoice for 100 numbers. Now I will give you credit note for one number. So therefore for that one number you will reverse the ITC. Got it? See there. Dealer shall pay 2,36,000 to manufacturer and 36,000 dealer can take ITC. ITC must be reversed by the dealer based on credit note for one part 2,360, 360 you need to reverse the ITC, and now you will recover from me 3,000 separately for after sale service and you will pay GST 540. From my point of view, first I am raising you invoice for 2 lakh plus 36,000 and second I will give you credit note for 2,360, so to the extent of 360 my liability will be reduced, and you raise me invoice for 3,540, that 540 I will take ITC. Got it? Suppose I am just refilling the stock, then simple, it is not a supply, I told you already. So dealer replaces the part during warranty period out of his own stock and gets replenishment of the said part from the manufacturer. From dealer point of view, not a supply, and that movement of goods is under delivery challan. Manufacturer also GST not payable, IT is also not required to be reversed. And this is the treatment for extended warranty. I told you total 4 situations. Same time, same supplier. It will be treated as composite supply. Same time, different supplier. Different time, same supplier, or different time, different supplier. All these 3 cases, it will be treated as what? Separate supply and chargeable at 18%. For that I gave the example here. There is a MI TV manufacturer. Television is taxable at 28%. They sold it to retail showroom, their retail showroom, and the retail showroom is giving television plus extended warranty, or they can sell it to Chroma, one another retail showroom, and in this case situation 1 you see, MI retail showroom sells television along with extended warranty for 28,000 to Z. Television 26,000, extended warranty 2,000. Same time, same dealer. Correct? Check the question here. Same time, same dealer. So it will be treated as what? Composite supply, and the rate applicable to TV will be taken, that is 28% will be taken. MI retail showroom sells television for 26,000 to Z, and after 1 month sold extended warranty for 2,000. Same dealer but different time. So it will be treated as independent supply. So 26,000 is taxable at 28%, 2,000 will be taxable at 18%. Then Chroma sells television for 28,000 to Z and Z pays 2,000 to manufacturer for extended warranty. Means it is not by the same dealer. After that is free warranty, that warranty, additional warranty is not given by the same dealer. The dealer who is selling TV is not giving warranty, means different dealer. So separate supply 18%. Chroma sells television for 26,000 and after 1 month sold extended warranty for 2,000. So different time. So again it is a separate supply of services. So these are the illustrations related to this particular circular that we have discussed. With this we completed section 17. Now look into the last section, that is section 18. We will see some questions and then come back to this. Please take your practice manual. Look into question number 35. Question number 35, page 99. Question number 35, page 99. Messrs. Purvi Limited, a registered supplier of various goods and services, provided the following information pertaining to GST paid on inward supply for the month of August 2024. Purchased goods which are used for activities relating to his obligation under CSR. Can we take ITC? No. Reason? As per section 17 subsection 5, goods purchased for CSR obligation is blocked ITC. So we cannot take ITC. Purchase raw material worth 5,90,000 including GST in 5 lots. 3 lots of raw material worth 3 lakhs received in the current month, and remaining lots will be received in the month of September. So when can we take ITC? September. So right now in August, can we take ITC? No. So what is the reason that you will write? As per section 16, when goods are received in lots against an invoice, ITC can be availed upon receipt of last lot or installment. In this case, the last lot is in September, but right now we are computing ITC for August. Therefore, ITC not available for August month. Then 3, company paid for outdoor catering expenses for the lunch of its factory employees during the lunch hours. As per the policy of the company, there is no legal obligation to provide such lunch facility to the employees. Can they take ITC? No. Why? Outdoor catering is block credit, and in the present case it is not covered under exceptions. It is not statutory obligation. It is not inward supply, outward supply, same category, or inward supply part of outward supply. So ITC not available. Purchased goods from Messrs. Home Traders, all goods and invoices were received by the company in August 2024. But one invoice out of these invoices has not been furnished by the supplier in the statement of outward supplies. The GST paid on invoice not furnished is 50,000, and this total is 2 lakhs. How much ITC can be availed? 1,50,000 only can be availed. Why? Because if the supplier has not reported it in GSTR 1, it will not come in 2B. So as per section 41 read with 36 sub rule 4, only that ITC reflected in GSTR 2B can be availed as ITC. In the present case, as the supplier not reported the details of invoice in GSTR 1, consequently it will not be reflected in 2B, and ITC is not available with respect to 50,000. So only 1,50,000. Purchased raw material to manufacture finished goods. Such finished goods to be sold to potential customers under the scheme of buy one get one free. Can they take ITC on 1,50,000? Yes, because buy one get one free will be treated like a composite supply. So which means that free one is also taxed at the rate applicable to the main one. So due to that reason, we can take ITC. Generally, purchased goods distributed as gifts or free samples. As per section 17 subsection 5, purchased goods distributed as gifts or free samples, we cannot take ITC. However, if that gifts or free samples constitute supply, ITC can be available. In this case, buy one get one free is treated like a composite supply. So both the products will be taxable at the rate applicable to the principal supply. So we can take ITC with respect to the purchased goods. So 1,50,000 and 1,50,000, 3 lakhs is the total ITC. Understood? But answer you will get, you will write. Only place where you will make mistake is the explanation. Properly, if you are not giving explanation, you will not get full marks. Okay? Then look into question number 36. Veer Trading Private Limited is registered under GST in Jaipur, Rajasthan. It is engaged in wholesale trading of various sports items. This VTPL furnishes the following information regarding its inward supplies during the month of February 2025. Particulars: amount excluding any tax. As per the policy of the company, the MD of the company has taken membership of local sports club on behalf of the company. The company paid fees monthly. Applicable rate of GST is 6% each. Tell me whether ITC available or not available. Why? As per section 17 subsection 5, membership of a club, health and fitness center is blocked credit. In the present case, it is not under a statutory obligation. So ITC is not available. It is only policy of the company, not statutory obligation. Statutory obligation means government should obligate. Got it? Then number 2, purchased equipment from original equipment manufacturer as on X-Works contract basis on 26 February 2025. As per the terms of contract, the goods are to be delivered by OEM to transporter on behalf of the recipient at OEM's place of business. The OEM handed over the equipment to transporter on 28th February, but the equipment was physically received on 2nd March. Now we are right now computing for February. Can we take ITC? Yes. So what is that you will write? As per section 16 read with CBSE circular, when goods are handed over to the third person on behalf of the recipient or registered person, the date on which third person has received the goods or services, the registered person deemed to have received the goods or services. In this case, when goods are handed over to the transporter on behalf of this VTPL, it is deemed that the goods are received by VTPL, they can take ITC. So that is 20th February, they can take ITC. Third one, on 5th year of its incorporation, VTPL arranged an event from Messrs. Daksh Event Company for customers meet. Messrs. Daksh Event Company charges single price of event charge as 2,50,000, which is inclusive of food charges of 40,000 as per the general trend followed by the industry. Applicable rate of GST is 9% each for the event and 14% for food supply. Please concentrate. On 5th year of its incorporation, VTPL arranged an event from Daksh Event Company. Daksh Event Company charges single price for the event. So there are two supplies. One is event management. Second is supply of food. Event management and supply of food, two supplies. Both are taxable, correct? Don't sleep. Idiots, don't sleep. If you sleep, you will fail. Concentrate. So there are two supplies. One is event management. Another one is supply of food. Event management is taxable at what rate? 18%. And that food supply is taxable at the rate of 28%. These two are naturally bundled or not naturally bundled? Naturally bundled, because general trend in the industry is that they will only conduct the event and they will only supply the food, which means it is naturally bundled. That line is there. And what is the principal supply? Event. Event is the principal supply. So event is taxable at what rate? 18%. So can they take ITC? Yes. They can take ITC on this 2,50,000. So on 10 lakhs, this is amount excluding tax. On this 10 lakhs, how much ITC they can take? 6%. That is 10 lakhs into 6%, 60,000 CGST and 60,000 SGST. Same way, 2,50,000 into 9%, how much? 22,500, 22,500, we can take ITC. But you know, this exam, our intelligent students have written 10 lakhs and 2,50,000 as ITC. Everything they wrote correctly. 10 lakhs, 2,50,000, because of which 1 mark also they did not give. Okay. So therefore be careful. ITC is what they are asking, and what is given here is the amount excluding the tax. So ITC should be taken. Next point number 4. And you understood the explanation for 3 na? What is that? First, first we need to see event as per section 8. Event management service and supply of food as a part of event management is a composite supply, and it is taxable based on principal supply, that is event management. And event management is not a blocked ITC, and it is used in the course or furtherance of business, therefore ITC is available. Accordingly, 22,500, 22,500 ITC they can take. Next 4. Purchased truck for transportation of goods. Truck for transportation of goods. Is it blocked ITC? No. So CGST, SGST 14%, claimed 2,10,000, that is 14 lakhs at 15% as depreciation under Income Tax Act. So what is the value? 14 lakhs. 14 lakhs. 14 lakhs into 15%, 2,10,000 they claimed as depreciation. Means while computing the depreciation under Income Tax Act, they included GST or they have not included GST? They did not include GST. So can they take ITC? Yes. As per section 17 subsection 5, motor vehicles other than used for transportation of passengers, vessels and aircrafts is eligible for ITC. And as per section 16, they are not computing the depreciation on tax component, therefore ITC is available. Accordingly, 14 lakhs into what is the rate of GST? 14%. 14 lakhs into 14% is how much? 1,96,000 CGST, SGST. So this is the total eligible ITC. Understood? Next. Look into question number 31. Question number 31. Veda Limited procured the following goods in the month of January 2024. Goods used in constructing an additional floor of the office building. The cost of construction of the additional floor has been capitalized. What is your answer? ITC available or not available? Why? Reason. As per section 17 subsection 5, any goods purchased for construction of immobile property is blocked ITC, and if it is charged to P&L, ITC available, but in the present case it is capitalized. So ITC not available. Trucks used for transportation of inputs in the factory, ITC available. Why? Because trucks are not motor vehicle for transportation of persons, vessels or aircrafts, it is other motor vehicles. So ITC available and it is used in the course or furtherance of business. Inputs used in trial runs, yes. Why? Nowhere in the block credit, and it is used in the course or furtherance of business, so ITC available. Confectionery items for consumption of employees working in factory. Confectionery means food. Confectionery means food items. Okay. So nicely they framed a sentence. They did not tell food anywhere. They said confectionery items. Confectionery means bakery. Bakery items, baked products. So confectionery items for consumption of employees working in the factory. Food and beverages blocked credit, and it is not covered under the exceptions because it is not under a statutory obligation. So it is available or not available? Not available. Cement used for making foundation and structural support to plant and machinery. Can we take ITC? Yes. Why? Plant and machinery. Generally construction, any goods purchased for construction of immobile property is blocked ITC. However, plant and machinery is an exception where ITC is available. So 9,550 ITC available, and total 11,000 plus 8,350 plus 9,550, 28,900. On an average, every 2 attempts they are asking once a question on blocked credits for 5 marks, like this. They will give some inward supplies and they will ask a question, compute the ITC available, like that. Okay. So on blocked credits, how many questions that you have, so you try to solve all those questions. Okay. You be strong on that. Then we will complete this last section with this input tax credit is over. Look into this. Input tax credit in special circumstances, page number 109. Section 18(1) says that availment of ITC on closing stock. So whenever you are converting from unregistered status to registered status, that is you are an unregistered person. Say you commence business on 8/8/2024 and you are liable to get registered on 1/10/2024, and within 30 days you made application for registration and you got the registration certificate. Now from the date you are liable to get registered, you have to pay GST on outward supplies and you can enjoy the ITC. So before this date, what is before this date? That is before 1/10, that is on 30/9/2024, whatever closing stock is there, on that closing stock you can take ITC. You would not have taken ITC at that time. Why? Because at that time you were an unregistered person. With effect from 1/10, you are liable to get registered, you need to pay GST on outward supplies. So from where you will get outward supplies? Using your closing stock only you can make outward supplies. So on that closing stock, GST paid can be taken as ITC. What is that closing stock? Raw material as such held in stock, raw material in the form of WIP and raw material in the form of FG. Capital goods, no, you cannot take, only these 3. Raw material as such, raw material in WIP, raw material in FG. And all these 3 raw materials should be purchased within 1 year prior. And on this, whatever GST paid, you can avail as ITC. What is the time limit within which it can be availed as ITC? Within 30 days from the date on which registration certificate is granted or extended time. But this can be availed as ITC, not in 3B. Generally, we will avail ITC in 3B, but in this case, the ITC will be availed in form GST ITC 1. Form GST ITC 1. And in this case, matching required or matching not required? Not required, because logically, at the time when you have purchased, you are an unregistered person. So therefore, the supplier cannot report it in B to B under GSTR 1. So it will not come in 2B. Even if it is not there in 2B, it's okay. You can enjoy the ITC in this case. And there is one procedural point. If you are availing ITC more than 2 lakhs, you need to get a CACMA certificate. If the amount of ITC does not exceed 2 lakhs, just a self-declaration. Understood? And related to this, they have asked one question. We will see that later. But from 18.1a to 18.1b, next page you have 18.1b. You read and tell me what are the differences that you can find. 18.1a, liable to get registered and made application for registration within 30 days. Sir, making application for registration within 30 days is important. What if you are not making application within 30 days? Then you will not get this benefit. You will not get this benefit. This section itself is not applicable, means you cannot take ITC on closing stock. Very, very important condition is that you should have made application for registration within 30 days. Okay. And 18.1a is you are liable to get registered and made application for registration within 30 days. 18.1b, voluntary registration. And any other difference? Closing stock date. 18.1a, you need to see the closing stock before the date you are liable to register. But 18.1b, you need to see the closing stock before the date you got registration certificate. Rest of the information is same. Got it? So what is the difference between 18.1a and 1b? Situation. There liable to get registered, here voluntary registration. There before the date you are liable to get registered, closing stock. But here before the date you got registration certificate. Then 18.1c already we discussed. To whom 18.1c is applicable? Composition scheme to normal scheme, regular scheme. And what is the benefit under 18.1c compared with 18.1a? Please compare and tell me the difference. 18.1a, you cannot take ITC on capital goods. But 18.1c, you can avail ITC on capital goods after reducing how much? 5% for every quarter or part thereof. And any other difference? First difference you told me between 18.1a, 1b and 1c is that there capital goods you cannot take, here you can take capital goods after reducing 5%. Anything else? Matching, very good. There matching not required, but here matching is required. Next. One more point. Situation okay. Difference. Registered person. So he should be a registered person. At that time, in 18.1a, 1b, previously he was unregistered person, but here he is a registered person. Registered person who is under composition scheme going for normal scheme, means he already registered. Then go to 18.1d. Compare between 18.1c and 1d and tell me what are the differences you can find. 1c and 1d. 1c is situation, composition scheme to normal scheme, regular scheme. But 18.1d, exempted supplies to taxable supplies, and remaining information is same, correct? Everything same. Capital goods, matching required, he is already registered person, everything else is same. Can you remember it like this, pa? So if you read in one place, remember the differences, you don't have to learn everything again. And I gave the differences in this table. 18.1a, 1b, 1c, 1d, mainly situation difference. 1a, liable to get registered and applied for registration within 30 days. 18.1b, voluntary registration. 1c, registered person migrated from composition scheme to normal scheme. And 1d, registered person making exempted supplies became taxable. In 1a and 1b, they can take ITC on inputs as such in stock, inputs in WIP in stock, inputs in FG in stock, matching not required. But here, matching required and extra they can take credit on capital goods. Which date? 18.1a, before the date they are liable to register. 1B before the date they got registration certificate, 1C before the date of migration, and 1D before the date of conversion. Then what is the time limit in all these 4 cases? The goods should have been purchased within 1 year prior. So means invoice date to the closing stock date, it should be within 1 year. And on inputs fully we can take ITC, whatever GST paid. But on capital goods we need to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion. And we need to file one declaration in ITC 1 for availing this ITC, and that should be filed within 30 days or extended time by commissioner. And this declaration shall be certified by practicing CSMA if the claim of ITC exceed 2 lakhs. Then next, 18 subsection 3. 18 subsection 3 talks about transfer of ITC. When, listen, it's a theory question. Whenever there is a transfer of business, it can be any form, sale, merger, amalgamation, demerger, anyway. Whenever there is a transfer of business with specific provision for transfer of liabilities, means what? All assets and liabilities should be transferred. When all assets and liabilities are transferred, then whatever unutilized ITC that is there in my books will be transferred to your credit ledger. Is it clear? When there is a change in constitution of a registered person on account of sale, merger, demerger, etc., with specific provision for transfer of liabilities, means what? Both assets and liabilities should be transferred. Then the ITC will be transferred to the amalgamated, that is transferee. But how to transfer this ITC? Through one form. What is that form? ITC 2. And this should be certified by CSMA always, whatever may be the amount. ITC 1 is for availment of ITC on closing stock, ITC 2 is for transfer of ITC. ITC 1 CSMA certify if the ITC exceed 2 lakh, but here whatever may be the amount, always CSMA certification is required. In case of demerger, how the ITC will be transferred? For example, AB Limited is getting demerged into A Limited and B Limited. Now, AB Limited is having some ITC. Say they have a ITC of 1,50,000. How it will be transferred to A Limited and B Limited? Now, see the assets ratio of A Limited and B Limited. What is the assets of A Limited? Say 30 crores is the assets of A Limited and 20 crores is the assets of B Limited, which means in 3/5 and 2/5 ratio it will be transferred, correct? So 1,50,000 into 3/5, how much? 1,50,000 into 3/5. 90,000 will be given to A Limited and 60,000 will be given to B Limited. You understood? In what ratio it will be transferred? Pa? Assets ratio. Assets ratio. Say this. In case of demerger, credit shall be transferred to the new entities. Credit shall be transferred to the new entities in the ratio of net assets, whether IT is availed or not on such assets, post demerger. Then transfer or change in ownership of business will include transfer or change in ownership due to death of sole proprietor. Suppose if the sole proprietor is dead and his son is taking over the business, that will also come under transfer of business. And transferor and transferee should be in the same state. So for example, I am in Tamil Nadu, you are in Karnataka, ITC cannot be transferred. So you should register in Tamil Nadu. Next, one more point you see. Whenever a single registration is separated into multiple registrations, that is, so far in Tamil Nadu, say I have single registration for 3 places of business. Now, for every place of business, I am obtaining a separate registration. From single registration, now 3 separate registrations are there. Now, what will happen? ITC from the single registration will be given to these 3 separate registration, again in assets ratio like demerger. Got it? But here it is a different form, that is ITC 2A. See the last paragraph. When a single registration gets converted into multiple registrations within the state, then also ITC against the single registration can be distributed to multiple registrations. How? By filing form GST ITC 2A. And in which ratio it should be transferred? Assets ratio. Assets ratio. Then ITC2 should be certified by CACMA, but 2A is not required to be certified by CACMA. Then look into this example. Sir, which date assets ratio should be taken? Immediately after demerger, assets will be there, na, that ratio. But ITC balance, whenever you are transferring that ITC balance, say this, in case of demerger, balance in ITC as on the date of transfer and ratio of assets on the date of demerger to be considered. For example, demerger in March 24, but ITC transferred in December 24. Which date assets should be taken? Assets of March, but the balance in ITC of December 24 should be taken. Is it clear? This can be tested in MCQ, be careful with respect to this. Then next one, section 18.4 and 29.5, reversal of ITC on closing stock. So this is in 3 cases we will reverse the ITC on closing stock. Already 18.1C and D we discussed, na? Take that 18.1C 1D. What is 18.1C? Composition scheme to regular scheme. Now reverse. What is reverse? Regular scheme to composition scheme. Then 18.1D. Exempted supplies to taxable. Now reverse. Taxable supplies to exempted supplies. Then one more case, cancellation of registration. In all these 3 cases, we should reverse the ITC on closing stock. There we avail the ITC on closing stock. Here we will reverse the ITC on closing stock. What is that closing stock? Input as such, input in WIP, input in FG. Whatever ITC avail, that much you need to reverse. In case of capital goods, also you need to reverse. How? Total ITC avail divided by 60 months into balance life. You see what is the total ITC and the life of the capital goods is considered as 60 months. If you used it for 2 years, what is the balance life? 36 months. For the 36 months, we need to reverse the ITC. And how this ITC should be reversed? By filing ITC 3 form. And suppose if you don't have the invoice information, you can take market value, and when you take market value, that should be certified by CACMA. Inputs and capital goods can be purchased anytime. If ITC not availed, then you don't have to reverse. If capital goods are purchased and used before 5 years, now you don't have to reverse because already 5 years is over, nothing is there in the balance life. And if invoice is not available, take market value and get it certified by CACMA. Details of reversal should be reported in ITC 3. Suppose if still there is a balance in ITC, that will be lapsed. For example, you need to reverse 1,50,000, but the balance is 2 lakhs. Still 50,000 is there, na? That will be lapsed. What if there is a shortfall? That shortfall you have to pay. For example, you need to reverse 1,50,000, there is only 1 lakh. So that 50,000 you need to pay. And we need to do the computation separately for CGST, SGST, UGST and IGST. This 18.6 already we discussed related to this. And this circular on replacement of parts also we completed. Look into last one small area. With that, input tax credit chapter is over. Clarification on return of expired medicines. This is one very old circular. They have not tested in exam at all. Maybe surprisingly they may ask this, not important and all, but it is there in syllabus, we need to know. What is it about? Please listen. First, in case of medicines, always there is an expiry date. And when the medicines are sold by the manufacturer to the shopkeeper and the medicines are expired, what shopkeeper will do? Will return the medicines. What is the treatment of this? Sales returns. Simple, the manufacturer will give credit note, correct? First I sold pa, I will give invoice. When you return it, I will give credit note. But the challenge is that there is a time limit for issuance of credit note. What is the time limit for issuance of credit note? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Now what happens here? Say 2nd of January, I have sent the goods to you. 2nd January 2026, I sent the goods to you. The goods got expired on 2nd of January 2027, 1 year. But as the 2nd January 2026 is in financial year 2025-26, I should have given the credit note by 30th November 2026, but the 30th November 2026 is expired, got it over. And so 2nd January you are returning the medicines to me, so I cannot give you credit note. In that case, what is the treatment? Simple. You will raise invoice on me as if you are selling it back to me. First I will raise invoice to you for sales. Now it is like you are making sale to me. So what will happen? Simple. When I make sale to you, you took the ITC. Now again when you are raising the invoice to me, you will create a liability. So your ITC will be matched with your liability. Simple pa, I am raising you invoice for 1,12,000. Now 12,000 you took the ITC. Yeah. Now you are returning that 1 lakh medicines. Means you will raise invoice to me for 1,12,000. Means ITC 12,000. Your liability also 12,000. Knocked off. So for you no problem. For me, initially I paid GST 12,000. Correct? Now when you are returning it, you will raise invoice to me. I will take ITC of 12,000. Got it? If I destroy these medicines, then that ITC I cannot take. Drugs or medicines which are expired shall be returned to supplier. Usual trade practice in the pharma sector. First option, supplier may issue credit note, treating it as sales returns. Thereby supplier liability will be reduced and recipient shall reverse ITC. Option 2, however, if credit note cannot be issued on account of expiry of time limit, recipient can treat it as fresh supply made to supplier, and supplier can avail ITC on receipt of such expired medicines. If they are destroyed, then ITC needs to be reversed. That's it. So we completed entirely ITC, all the points. Look into MCQs related to this. Page 83. Page 83. Input tax credit is not available in respect of services on which tax has been paid under composition levy. What is your answer? ITC not available in respect of service on which tax is paid under composition scheme. Correct? Yes. ITC not available in respect of free samples. Yes. ITC not available in respect of goods used for personal consumption. Yes. So all the three. 1, 2, 3. Next. In which of the following situations, recipient needs to add the input tax credit availed by him to his output tax liability? When? If the recipient is not making payment to supplier within 45 days, 90 days, 180 days. So option C. Then if recipient has, if the goods are received in lots or installments, so when the ITC can be availed? Upon receipt of last installment. Upon receipt of last installment. So option B. For banking company, this is not applicable for now. This is omitted. Because I told you 17 subsection 5 banking company point is omitted. 17 subsection 4 banking company, that provision is omitted, not there. A supplier takes deduction of depreciation on GST component of the cost of capital goods as per the Income Tax Act 1961. The supplier can avail only 50% of the said tax, or cannot avail ITC, or avail 100%. Not avail. Why? Because they are claiming depreciation on tax component. Next. ITC of motor vehicles used for making dash is allowed. ITC of motor vehicles used for making dash is allowed. What is it? Transporting of goods allowed? Yes. Taxable supplies for transportation of passengers? Yes. Imparting training? Yes. So all the three. Mr. A has a tax invoice dated 21 of services received by him. Its input tax credit is lost if ITC is not availed on or before dash, if they are filing and return by 25/12. What is the time limit for availment of ITC? Which financial year? 23-24. For 23-24, what is the time limit for availment of ITC? 30th November 2023. Sorry, pa, it's not 23-24, 2022-23. It is 20th January 2023. So 22-23 is the financial year. So 30th November 2023 or date of filing annual return. What is date of filing annual return? 25th December 2023, whichever is earlier. Which is earlier? 30/11/2023. ITC shall not be available in respect of goods used for personal consumption. Correct? Yes. Membership of a club provided by employer to employee as per company's internal policy. Yes. Travel benefits extended to employees on vacation as per company's internal policy. Yes. So all these three cases ITC not available. Mr. Raghu avails services of Mr. Raja, a chartered accountant, as under audit of financial accounts 55,000. Can they take ITC? Yes, because it's not in the block credit, used in the course or furtherance of business, so ITC available. Tax audit and annual filing, yes. Income tax return filing of Mr. Raghu's wife, no. Why? Personal expenditure, ITC not available. All the above amounts are exclusive of taxes and applicable rate of GST is 18%. So they have booked the entire expenses in the books of accounts. Raghu is eligible to take ITC of these two only. 55 plus 10, 65,000. 65,000 into 18%. How much? 11,700. To that extent only they can take ITC. Then, see, these are some small questions which you can try. Look into question number 13. Question number 13. This test your knowledge questions are there, na, study material. All those I have included in this book. Okay. Harshgeet Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information pertaining to purchases made or service availed by it during the month of July. So raw material to be received in the month of September, 2,50,000. Can we take ITC? Why? You can take ITC only on receipt of goods. In this case, the goods are received in September, so therefore you cannot take ITC in July month. Membership of club availed for employees working in the factory. No, ITC not available. Why? It's a blocked ITC. So membership of club, health and fitness center, blocked ITC. Nowhere it is given that it is under a statutory obligation. Inputs to be received in 5 lots, out of which 3rd lot was received during the month. No, you cannot take ITC because you can take ITC only on receipt of last lot. Trucks used for transportation of raw material. Yes, because it is other motor vehicle, so ITC available. Capital goods, out of 3 items, invoice for 2 items is missing and GST paid is 80,000, means 1,50,000 minus 80, only 70,000 we can take ITC, because when, as per section 16, the person availing ITC should be in possession of tax paid document. If the invoice is missing, they cannot take ITC with respect to that. Then 14 is block credit. You can try 15 also. Then 17 you can, 18 also, 19. Look into question number 20. So whatever questions that I am skipping, all those are repeated questions just based on block credits that you can try for practice. Look into question 20. Granites Textiles Limited purchased a needle detecting machine on 8th July from Makija Engineering Works for 10 lakhs excluding GST, paying GST at 18% on the same. It availed the ITC of GST paid on the machine and started using it for manufacture of goods. The machine was sold on 22nd October for 7,50,000 excluding GST as second hand machine to LT Private Limited. The GST rate on such supply is 18%. State the action which Granites Textiles is required to take, if any, in accordance with the statutory provisions. This is what 18 subsection 6, because they are purchasing a machine, that is capital goods, on which ITC availed, and they are selling that capital goods. Now read the question and tell me, when are they purchasing and when are they selling? When are they purchasing the capital goods? 8th July 2017, means in 2017 how many quarters? That is July, August, September, October, November, December. So 2 quarters. Then 2018, when are they selling? 22nd October. So how many quarters? Jan, Feb, March, April, May, June, July, August, September, and October, November, December. October also is there. So 4 quarters, means how much? 6 quarters. 6 quarters into 5%. 6 quarters into 5%, 30%. So now A, ITC availed. What is the ITC availed? 10 lakhs into 18%, 1,80,000. 1,80,000 minus, so 30%. What is 1,80,000 minus 30%? 1,26,000, or GST on sale value. What is the sale value? 7,50,000 into 18%, that is 1,35,000, whichever is higher. 1,35,000 will be taken as the GST payable. Got it? Then question number 21, again on blocked credits. 21, 22 also you can try. 23. Look into question number 29. Question number 29, it's a May 24 exam question. As per the CGST Act 2017, Vishnu Limited was not mandatorily required to get registered. 18(1)(a), you are not liable to get registered, and you are liable to get registered and you made application for registration. 18(1)(a) we discussed na, that one. They were not mandatorily required to get registered, however, it applied for voluntary registration. So 18(1)(a) or 1B? 1B, voluntary registration, and applied for registration on 12th February 2024. Registration certificate has been granted by department on 24th February 2024. You tell me, which date closing stock should be taken? 23rd February, very good. Before the date you got the registration certificate. So they have given the closing stock as on 23rd February 2024. Vishnu Limited is not engaged in making interstate outward taxable supplies. The CGST and SGST liability for the month of February is 31,000 each. They provide the following information of goods held in stock. Capital goods procured on 5th February 2024. Is it within 1 year prior to 23rd February? Yes. Rate of GST is CGST, SGST 6% each, being intrastate supply. Can we take ITC or we cannot take ITC? We cannot take ITC. 18(1)(b), 18(1)(a), 1B you cannot take capital goods credit. So you cannot avail ITC on capital goods. Then inputs contained in finished goods stock held were procured on 13th February 2023. Is it within 1 year prior or beyond 1 year? Beyond 1 year prior to the closing stock date. Closing stock date is 23 February 2024 and 13 February 2023 is beyond 1 year. So again we cannot take ITC with respect to this. Value of inputs received on 10th October 2023 contained in semi-finished goods held in stock. Is it within 1 year prior? Yes. And this is inputs in semi-finished goods. We can take ITC. So 2,50,000 into 6%, 6%. How much? See, 2,50,000 into 6% and 6%. So 15,000, 15,000. First and second case nil, third case 15,000, 15,000. Next 4. Inputs procured on 1st February 2024 lying in stock of semi-finished goods Rate of GST 7.5% each being intrastate supply. Is it within 1 year prior? Yes. We can take ITC 1,50,000 into 7.5%. How much? 11,250 and 11,250. Then next, inputs procured on 8th February 2024 lying in stock of finished goods. Is it within 1 year prior? Yes. We can take ITC 60,000 into 18% IGST. How much? 10,800. So how much is the ITC that we can take? 26,250, 26,250 and 10,800. And for this month, there is some liability of CGST, SGST 31,000 each. First, which credit we should exhaust? IGST. How much is the IGST? 10,800. You will divide equally between CGST, SGST. So 31,000, 31,000 minus 5,400, 5,400. Then CGST, SGST credit you will adjust. So the net GST payable will be nil. Is it clear, Pa? So that is what we need to write. On that 18, they make a question like this. And remaining questions and all we completed in this. Whatever questions that I skipped, all are these repeated questions. I mean, same concept, blocked credit, or the same concept repeated questions that you can take for practice. But unique questions, everything that we did. Okay. So we'll take a break, and afternoon session we will discuss one easy chapter, that is place of supply. Okay. So that's the agenda for afternoon session. Place of supply as well as time of supply we'll try to complete. We'll meet at 2:15. Yes, thank you. Okay, we'll start with the next chapter, that is place of supply. Please look into page number 72. Page 72. First we have three sections, section 7, section 8 and section 9. Section 7 talks about meaning of interstate supply. If location of supplier and place of supply is in two different states, two different union territories, a state and a union territory, then it is interstate supply. But there are certain transactions which are always treated as interstate supply, called as deemed interstate supply. So look into this section 7 in the next page. Section 7, meaning of interstate. Location of supplier, place of supply is in two states, two union territories, a state and a union territory. But there are certain transactions which are deemed as interstate. Always it will be interstate. What are those transactions? First, import of goods and import of services. Number 2, export of goods and export of services. Number 3, supplier in India, place of supply outside India. Supplier is in India, but the place of supply is outside India. Number 4, supply to SEZ or by SEZ. Either you are supplying to special economic zone or the special economic zone is making sale to you. Then supply beyond territorial waters and up to 200 nautical miles, because up to territorial waters, that is from the landmass of the country, up to 12 nautical miles is known as territorial waters. Beyond 12 nautical miles, up to 200 nautical miles is India only, but in that place, if the supply takes place, then also it will be deemed interstate, that is beyond territorial waters and up to 200 nautical miles. What if it is beyond 200 nautical miles, that is supply outside India, that is anyhow covered under 75A, supplier in India, place of supply outside India. And if you determine the place of supply under section 13 and that is in India, then also it will be deemed interstate. When we will determine place of supply under section 13, if either the service provider or the service recipient is in India and the other outside India, then it will be section 13. Then it will not be treated as intrastate supply, it will be interstate supply. For example, look into that below. There is an architect which is in who is in Tamil Nadu, and this architect in Tamil Nadu is providing services to Elon Musk in US in relation to his property in Tamil Nadu. Now what is the location of supplier? India. What is the location of recipient? Outside India. So now the place of supply is determined under section 12 or 13, place of supply will be determined under section 13. And once the place of supply is determined under section 13, what is that place of supply? In case of service in relation to immobile property, place of supply will be location of property. Where is the property located? Tamil Nadu. So supplier also Tamil Nadu, place of supply also Tamil Nadu. Logically speaking, it is intrastate supply, but as the place of supply is determined under section 13, it will be deemed interstate supply. It will not be intrastate, it will be deemed interstate. So now tell me, what are the transactions which are regarded as deemed interstate? Come on, first, location of supplier. First, import of goods, import of services. Number 2, export of goods, export of services. Next, supplier in India, place of supply outside India. Next, supply to SEZ, supply by SEZ. Then supply beyond territorial waters and up to 200 nautical miles. Then last, place of supply under section 13 and that is in India. These are the transactions which are deemed as interstate. The moment you see these transactions in question, you put it under IGST column. Okay. Then look into the previous section. So we completed section 7, look into section 8. Section 7 is interstate supply. This 7 and 8 of which act? All these sections that we see in this chapter will be IGST Act. Section 7 of IGST Act we saw, now look into section 8 of IGST Act. What is the meaning of intrastate supply? If location of supplier and place of supply is in the same state or same union territory. But here there is one interstate supply. Suppose if it is supply of goods to or by SEZ, it is interstate, and import of goods, that's already we discussed. Extra one more point, supply of goods to tourist. Whenever you are making supply of goods to a tourist, who is a tourist? Tourist is a person who is coming from outside India to India. To that person, if you make sale, he will be leaving India. So for that purpose, he will get a refund. There is something called as tourist refund scheme. So whenever you make sale to him, it will be treated as deemed interstate. So this is also one of the deemed interstate. So this is about section 7 and section 8. Now look into this first page itself, page number 72. What is the meaning of India for the purpose of GST? India extends up to 200 nautical miles from the baseline. That is, from the baseline of the country, up to 12 nautical miles is known as territorial waters. And from the baseline up to 200 nautical miles is known as exclusive economic zone. So up to this 200 nautical miles is known as India. Beyond 200 nautical miles is known as high seas, that will be outside India. Now, if the supplier is in the land, place of supply is also in the land, then it will be either intrastate or interstate, determined under section 7 or section 8. If the supplier is in the land and place of supply is in the territorial waters, then it may become either intra or inter, determined under section 9. But if the supplier is in the land and place of supply is beyond territorial waters and up to 200 nautical miles, this area, then also it will be deemed interstate. That's what I said, supply beyond territorial waters and up to 200 nautical miles. Suppose if supplier is in the land and place of supply is beyond 200 nautical miles, that is outside India, supply outside India is also deemed interstate. Understood the logic here? Now, we need to understand what is the meaning of export of goods and export of services. Not important and all, just for your information we will learn. What is the meaning of export of goods? Taking goods from India to outside India. And what is the meaning of export of services? Total 5 conditions. Where the supplier should be in India, where the recipient should be outside India, how the consideration should be foreign exchange, and what is the place of supply outside India. Generally the consideration should be in foreign exchange, but in 2 places the consideration can be in Indian rupees. What is that? Services to Nepal and Bhutan. Next one, money credited in rupee escrow account. So outside India, Indian government will have a bank account in a foreign bank, that is called as escrow account. In that escrow account, if the money is credited and from that account it may come to India in Indian rupees, still it is consideration in foreign exchange. So 2 cases, the money may be received in Indian rupees, it will be considered as foreign exchange only. That is this, services to Nepal and Bhutan, payment credited in special rupee escrow account maintained by bank outside India. Then supplier and recipient are not 2 establishments of the same person, means head office and branch office. Head office in India, branch office outside India, it will not become export of service. What if that branch office is separately incorporated as per the law of that country? Then it will become a different person. Okay, and this export of goods and export of services is not important for exam. You don't have to bother about it, by heart it, etc. and all. Just once we read, that is sufficient. Then deemed interstate supplies, just now we saw few transactions as deemed interstate. What are they? I told you, export of goods, export of services, import of goods, import of services, supply of goods to SEZ or by SEZ, supplier in India, place of supply outside India, supply of goods to a tourist, supply of goods or services beyond territorial waters and up to exclusive economic zone, supplier in India, place of supply also in India, determined under section 13. These 7. Then 2 more, we have security lending scheme. Under security lending scheme, that is in RCM we discussed, there the lender of the securities and borrower of the securities, you don't have to bother where they are. Security lending scheme is always deemed interstate supply, that is this. Then in supply chapter, we have a concept of priority sector lending certificate. One bank will be selling the priority sector lending certificate to another bank, that is also deemed interstate. Apart from these 9 points, any other transaction, if you don't know intrastate or interstate, it will be classified as deemed interstate. Advance you have received, but you don't know whether it is intra or inter, then also it will be deemed inter. This may be useful for short note question. So last question they may ask for 5 marks. Write any 5 transactions which are deemed as interstate supply. Any 5 transactions out of this if you write, that is sufficient. Okay. Next, supply in territorial waters. Whenever supply takes place in territorial waters, how to determine whether it is intrastate or interstate? You see the nearest coastal state as the location of supplier or place of supply. I gave an example, but I am just discussing that example, please listen. You are a marine engineer from Tamil Nadu and there is a ship which is in the Bay of Bengal. You go to that ship and provide the repair services. Now in this case, if that ship is nearest to Tamil Nadu, then place of supply will be Tamil Nadu and the nature of supply will be intra. Suppose if the ship is nearest to Andhra Pradesh, then the place of supply will be Andhra Pradesh. Means what should be taken as a place of supply? The nearest coastal state. The nearest coastal state, because you are supplying in waters. When you are supplying in waters, then see the nearest coastal state. That nearest coastal state will be taken as the place of supply, and accordingly you need to determine the nature of supply. Is it clear? That is with respect to this. So we have seen section 7, 8, 9. These 3 sections are there in study material, but not much important about it, okay, but it is there, we need to learn. Now look into place of supply. Place of supply, we have only 2 sections, section 10 and section 12. Section 11 and 13 you don't have in syllabus, that you will learn in CA final level, that is in case of import and export, and in case when one in India, other outside India, that is not there in syllabus. What you have is only section 10 and section 12. When section 10 of IGST Act will be applicable? 7 is what? 7 is what? Meaning of interstate supply. 8 is what? Intrastate supply. 9 is what? Supply in territorial waters. 10 is place of supply in case of goods. 11 is not there. Then 12, place of supply in case of services. These 5 sections only you have in syllabus related to IGST Act. What are the 5 sections? 7, 8, 9, 10, 12. 7, meaning of inter. 8, meaning of intra. 9, supply in territorial waters. 10, place of supply in case of goods. 12, place of supply in case of services. Now we are focusing on place of supply in case of goods. Total, we have 5 situations per. 10(1) A, B, C, then D and E. So total 5 situations. What is that situation? First one, supply involves movement of goods. First look into the situation. Supply involves movement of goods. Means what? Under the contract of supply, we move goods from one location to another location. For example, you are from Andhra Pradesh, I am in Tamil Nadu, you placed the order with me, so I delivered the goods in Andhra Pradesh. Means under the contract of supply, goods travel from one location to another location, then it is supply involving movement of goods. 10(1) A. 10(1) B is bill to ship to transaction. Remember easily, B for bill to ship to transaction. What is bill to ship to transaction means? I raise invoice to one person but deliver the goods to some other person. That is bill to ship to transaction. 10(1) B. 10(1) C, supply does not involve movement of goods. Means what? I am not sending the goods. You are only coming to my place, purchasing the goods and taking the goods. When the supply is over at my place, so supply does not involve movement of goods. So 10(1) A is supply involves movement of goods. 10(1) B, bill to ship to transactions. 10(1) C, supply does not involve movement of goods. 10(1) D, assembly or installation at site. So generally when you buy some AC or machineries, they will install at your location. In that case 10(1) D, supply involves assembly or installation at site. Last, supply of goods on board a conveyance During the journey, you will be purchasing some goods. During your train journey or flight journey, you will buy some goods. Like for example, when you travel in train, so they will be selling lot of goods to you, biscuit packets, chips packets, beverage bottles, etc., water bottles. All these are supply of goods on board a conveyance. You understood the situation, pa? So tell me what is the situation. 10(1)(a), supply involves movement of goods. 10(1)(b), bill to ship to transactions. 10(1)(c), supply does not involve movement of goods. And 10(1)(d), assembly or installation at site. 10(1)(e), supply on board a conveyance. In case of supply involves movement of goods, we have two divisions, B2B and B2C. B2B means what? Sale to registered person. B2C means what? Sale to unregistered person. If it is sale to registered person, what will be taken as place of supply? Ending point will be taken as place of supply. If it is sale to unregistered person, B2B ending point. B2C, we don't know anything. So location of recipient in the records of supplier, otherwise location of supplier. For example, say this. As I told you, first case, you are from Tamil Nadu. You are from Tamil Nadu. I am also from Tamil Nadu. But you ordered me to deliver the goods to Andhra Pradesh. Got it? So now in this case, your place only, but you ordered me to deliver the goods in Andhra Pradesh. So supply involves movement of goods. B2B or B2C or B2B. What will be taken as the place of supply? Ending point. In this example, what is the ending point? Andhra Pradesh. That will be taken as the place of supply. What if you are unregistered person? If you are unregistered person, location of recipient in the records of supplier. What is the location of recipient in the records of supplier? Tamil Nadu. Tamil Nadu. You are from Tamil Nadu, but you ordered me to deliver it to Andhra Pradesh. So if you are registered, Andhra Pradesh. If you are not registered, location of recipient in the records of supplier, that will be Tamil Nadu. Suppose I don't have your details, then location of supplier only will be taken as the place of supply. Clear pa? B2B, ending point. B2C, location of recipient in the records of supplier, otherwise location of supplier. Then next, 10(1)(b), bill to ship to transaction. Easily you remember, for bill to ship to transaction, billing address will be taken as the place of supply. What is the place of supply? Billing address, not the shipping address, billing address. Then 10(1)(c), supply does not involve movement of goods. Again same, B2B, B2C. B2B, location of goods at the time of delivery. B2C, same, ditto as above. That is location of recipient in the records of supplier, otherwise location of supplier. For example, lot of this ice cream shops will be there, I mean on wheels, quality walls ice cream, etc. One small vehicle will be there. In that vehicle they go to different locations and they will be selling the ice cream. In that case, supply involves movement of goods or supply does not involve movement of goods? Does not involve movement of goods. They don't know who the hell you are. They will be going, taking the vehicle to different locations. You need to go to that shop and buy. Got it? They will come to you. They will come to your place and you place the order. You will call that person. So he will come to your location and deliver. No. Wherever he is located, you will go and buy. So supply does not involve movement of goods. B2B or B2C? B2C, because you are unregistered person. So what will be the place of supply? Location of recipient in the records of supplier. Whether your details will be there available with him. Suppose if you are asking, Anna, ice cream means, Papa, you are from which place? What is your address? Everything he will ask or what? If he is asking, then it will become crime and all. Got it? So why will they ask all those things? They don't have any details. You ask ice cream, he will give ice cream and he will go. So location of recipient not available in records of supplier. So what should be taken? Location of supplier. That is this. So B2B, location of goods. B2C, location of recipient in the records of supplier, otherwise location of supplier. Then 10(1)(d), assembly or installation at site. Location where the goods are assembled or installed will be taken as place of supply. Then 10(1)(e), supply of goods on board a conveyance. For example, you are traveling in a train from Chennai to say Mumbai. Chennai to Mumbai. During this journey, you are purchasing some biscuit packets or food items, etc. And where the goods are loaded, suppose if the goods are loaded in Chennai, Chennai is a place of supply. If the goods are loaded somewhere in Bihar, then Bihar will be taken as a place of supply. You understood or not? So in the journey, wherever the goods are loaded into the conveyance, that will be taken as place of supply. Starting point of the goods. For the first point, it is ending point. For the last point, it is starting point of the goods. Can you remember this table, pa? Yes. Now, suppose if there is a conflict between 10(1)D or E versus ABC, which will prevail? 10(1)D and E only will prevail. I'll give you one example. Please look into this. So there is one person, A Limited. A Limited is located in Tamil Nadu. A Limited is located in Tamil Nadu. B Limited is having registered place of business in Maharashtra, and B Limited is having a branch in Karnataka. B Limited is having a branch in Karnataka. Now A Limited, B Limited is entering into contract with A Limited to supply the generator. Okay. So sale of generator, but where the generator is installed, installation of generator is in Karnataka. Installation of generator in Karnataka, and the invoice is raised to Maharashtra. Understood the question, pa? A Limited is in Tamil Nadu. They are raising invoice to B Limited of Maharashtra for sale of generator, but where the generator is installed in Karnataka. Now, will it come under 10(1)B, bill to ship to transaction? No, why no? Yes, definitely, because B Limited in Maharashtra, B Limited in Karnataka will have two separate registrations, correct? Two separate registrations means two separate persons. They are raising bill to B Limited Maharashtra, but delivering the goods to B Limited Karnataka. So therefore, it will come under bill to ship to transactions. In case of bill to ship to transactions, we need to determine the place of supply under section 10(1)B. What will be taken as the place of supply? Billing address. What is the billing address? Maharashtra. Even as they are doing installation, it will come under supply involving installation at site. Supply involving installation at site. In case of supply involves installation at site, which section will be applicable? Section 10(1)D. If you apply section 10(1)D, what is it? What is the place of supply? Location of installation. What is the location of installation? Karnataka. So here billing address, whereas if you apply 10(1)D, it is location of installation. Okay. Now tell me which is the correct answer. 10(1)D only will prevail, 10(1)B will not prevail, because 10(1)D is the specific provision. When there is one specific provision and one general provision, specific provision only will prevail over general provision. Is that clear, pa? Understood? So whenever there is a conflict between 10(1)D or E versus ABC, ABC are general provisions, so D or E is specific, that will only be applicable. Clear? That's what I have given. In case of conflict between 10(1)ABC over 10(1)D or E, then D or E shall prevail. Specific provision prevail over general provision. Now look into one circular related to e-commerce transactions to unregistered person. Usually you have Amazon account, and in that Amazon account you gave your address, and that address will be Chennai address, Tamil Nadu Chennai address. You went to somewhere in Kerala, and there you wanted to order a product to your location. Using the same Amazon app, you can order in Kerala also, correct? Wherever you are located, you can place the order. So you went to Kerala, and there you place the order. But in the app, the billing address is Tamil Nadu, but the delivery address is Kerala. You understood? So therefore in Amazon app, for you, there are two addresses. One is billing address, another one is delivery address. What is the billing address? Tamil Nadu. Tamil Nadu. What is the delivery address? Kerala. What should be taken as the place of supply? Supply involves movement of goods or does not involve movement of goods? Definitely involves movement of goods, because in case of Amazon, Flipkart, etc., when you place the order, they deliver the product to your location, which means supply involves movement of goods. B2B or B2C, you are unregistered or registered? Unregistered. So what should be taken as the place of supply? Check the provision and tell me. Supply involves movement of goods, 10(1)(a). If it is B2C, what should be taken as the place of supply? Location of? Are you able to find where it is? Sir, supply involves movement of goods. B2B is ending point. B2C is location of recipient in the records of supplier. Now, in the records of supplier, how many addresses are there? Two addresses. What are the two addresses? Tamil Nadu address and Kerala address, which should be taken. As per CBIC circular, we need to take delivery address. This is opposite to 10(1)(b). 10(1)(b) says billing address, but this circular says delivery address should be taken. Sir, both are contradictory. What is the difference between 10(1)(b) and this circular? 10(1)(b) is different person. Billing address is different person. Shipping address is different person. But this circular is applicable in case of e-commerce transaction, where same person, you only have one billing address and delivery address. But 10(1)(b) when it is applicable, separate persons, different person when it is there, 10(1)(b), bill to ship to transaction. Same person, different address, unregistered person, different address, then in that case this circular will be applicable. Is it clear, pa? Say this. What is the place of supply in case of sale to unregistered person through e-commerce platform? Usually place of supply is location of recipient in the records of supplier. In the absence of the detail, location of supplier. If there is same billing and delivery address, no problem, that address only will be taken. But if billing and delivery address is different, then we need to take delivery address as the place of supply. Delivery address means, should they mention detailed address? No, just the state, if it is mentioned, that is sufficient. Name of the state on the invoice is sufficient to be considered as recording the address of the recipient. You don't need the entire address, just the state is sufficient. So that is about place of supply in case of goods, we completed. Now we are moving on to place of supply in case of services. For this place of supply in case of services, please concentrate. We need to remember certain provisions through simple logics. Okay. Depending upon the situation itself, we will try to remember the provision. Please concentrate. First listen. Can you all get up and sit once? Sit. Listen. Generally, in case of services, there is specific provision and general provision. We need to remember specific provision. The balancing figure is general provision. What is that general provision? Location, B2B, location of recipient. B2C, location of recipient in the records of supplier, otherwise location of supplier. Ditto, same whatever we have learnt. What is the general provision, pa? B2B, location of recipient. B2C, location of recipient in the records of supplier, otherwise location of supplier. Okay, va? When we will apply general provision? When we don't know specific provision, then we will apply general provision. Okay, va? Next, concentrate. In three places, specific provisions we are discussing now. In three places, we need to check B2B, B2C. What are the three places where we need to check B2B, B2C? TOT, TOT. T for training and performance appraisal services. Training and performance appraisal services. O for organizing an event. T for transportation of goods or passengers. In these three places only we need to check B2B, B2C. In other places we don't have to check. Only one provision only. And wherever in these three places B2B comes, location of recipient will be taken as the place of supply. Okay, va? Again I am repeating. What is the first point that we need to learn in place of supply in case of services? General provisions. when general provisions is applicable in the absence of specific provision. So if you don't know anything in the question, at least if you apply general provisions, 90% your answer will be correct. Okay. So general provision is what? B2B, location of recipient. B2C, location of recipient in the records of supplier. Suppose if it is not available, location of supplier. Okay. Then now we are moving on to specific provisions. In that specific provisions, there are many cases. But in 3 services, we need to check B2B, B2C. What are the 3 services? TOT. T for training and performance appraisal. O for organizing an event. T for transportation of goods or passengers. There only we need to check B2B, B2C. In other places, don't get confused. In that case, B2B, what will be taken as a place of supply? Location of recipient. So you need to remember only B2C provisions now. Now, say this. Whenever, see, based on situation, you try to remember. Immovable property services. What will be the place of supply? Location of immovable property. Easy, yeah? Immovable property services, location of property. Okay? Then, event related services. Location of event. Easy? Then, transportation of goods. Starting point of goods. Transportation of services. Starting point, transportation of passengers. Starting point of passenger. Services on board a conveyance. Starting point of conveyance. Okay, wow. Through situation itself we are trying to remember. First one what I said. Property related services. Location of property. Event related service means what? Admission to event, organizing an event. Location of event. Then transportation of goods. Starting point of goods. Transportation of passenger. Starting point of passenger. Services on board a conveyance. Starting point of conveyance. Okay, wow. Then, so related to training and performance appraisal. Just think, training and performance appraisal. The location where the training is happening means location of performance. Correct? Wherever that event, that particular training is happening, wherever that performance appraisal is happening, that will be taken. Then next, food, beauty, treatment, etc. What will be taken as place of supply? Logically think. Wherever the service is provided, wherever the service is performed. Okay. So property related services, location of property. And food and beauty, performance location. Training and performance appraisal, location of performance. Event related, wherever the event is held. Transportation of goods, starting point of goods. Transportation of passengers, starting point of passenger. Service on board a conveyance, starting point of conveyance. Next, telecommunication services. How the telecommunication service will be, including broadband or DTH, etc. Either it may be fixed line or mobile. Correct? If it is fixed line, what is the place of supply? Think logically, what is the place of supply? Location where the equipment is installed. If it is mobile postpaid, billing address. If it is mobile prepaid, how will you recharge your mobile? How will you recharge your mobile? Either you will do online recharge or you will go to one shop and do the recharge. If you do online recharge, whatever location of recipient in the records of supplier. Suppose if you go to the shop and recharge, that shop location will be taken as place of supply. Fixed line, equipment location. Mobile postpaid, billing address. Mobile prepaid, dealer address. Online recharge, general provisions. Then advertisement services to government. What will be the place of supply? Each state where the advertisement is provided. That's it. Again I am repeating. If it is property related services, location of property. And we have skipped B2B, B2C in these places. Why? Because we already know when B2B, B2C will come. When B2B, B2C will come, TOT, training and performance appraisal, organizing an event, transportation of goods or passengers. There only we need to check B2B, B2C. So there B2B means location of recipient. So that is over. So that's the reason we are not touching it. Now remaining provisions we are seeing. Property related services, location of property. Event related services, location of event. Transportation of goods, starting point of goods. Transportation of passengers, starting point of passenger. Service on board a conveyance, starting point of conveyance. And then, so if it is food and beauty services, wherever it is performed. If it is training and performance appraisal, again, wherever the training is conducted, that is location of performance. If it is telecommunication, fixed line, installation location. Next, postpaid mobile, billing address. Prepaid through the shop, shop's location, dealer address, otherwise general provisions. Finally, advertisement service to government, each state where the advertisement is provided. Now, two exceptions, please concentrate. If it is property related services, location of property, correct? Event related services, location of event. If the property or event is outside India, then location of recipient, that is the exception, okay? Only two places. What are the two places? Property related services, organizing an event, say this. Property related service, if property is outside India, location of recipient. Organizing an event, if the event is outside India, location of recipient. Only in these two places. That's it. We completed place of supply in case of services. You have to remember it like this easily. Next, IGST rules related to place of supply. This is applicable in case of multiple place of supplies in a single transaction. For example, advertisement services to government, what is the place of supply? Each state where the advertisement is provided. What if the advertisement is in multiple states? Why a single contract? For example, in central government may give advertisement to a news channel to telecast the advertisement in their multiple channels across the country. Then each state where the advertisement is provided, but multiple states is there, how will we divide? For that they gave rules of apportionment. Like how in overheads chapter in costing, when you have common overheads, you will divide it between production departments and service departments, na? Like that. The common value, how will you divide it between the states? For that, rule 3, multiple situations are there. Suppose if it is advertisement on train, you would have seen many trains, they would have put the stickering work. That is advertisement on train. What is the base of apportionment? Length of track in each state. Suppose if it is advertisement on train tickets, see the number of stations in each state and divide it based on that. Suppose if it is advertisement in television, first you divide it between the TV channel based on viewership data. Then one particular channel may be telecasted in more than one state, then you divide it based on population census. Got it? So two apportionment is there. First you will divide it between the channel based on viewership. Thereafter you will divide it between states based on population. Okay. Suppose if it is advertisement in internet advertisement, you cannot control because we don't know which will go to which extent. So we are clueless. The moment it is advertisement in internet, because advertisement in internet, sometimes it will not become viral. Sometimes easily it will spread, and from Jammu and Kashmir to Kerala, everyone will know about that information. Correct? Because, so this Kumbh Mela, like that one event happened. In that, one girl, she went there to sell some, beads, etc. and all. So unfortunate, okay. She was going there and she was selling. Suddenly, some person over there took her video and she became so viral and she became crushed and all. Because nowadays we don't know who and all will become crushed, okay. So she became so viral, and from Jammu and Kashmir to Kerala, everyone came to know, and in Kerala one person so took her and married also. You understood? Like that we don't know who will become popular in what. So that's why the moment advertisement goes in the internet, which means it will be across the country, so divide between all the states based on internet subscriber data. Is it clear? So advertisement on train, length of track in each state. Advertisement on railway tickets, number of stations in each state. Advertisement on TV channels, number of viewers. And internet deemed to be across the India, number of internet subscribers. Suppose if it is advertisement through SMS, telecom subscribers as published by TRAI. Apart from this, any other case, we need to divide the income based on expenditure ratio. Revenue recognition, AS9. How you will recognize your income? Based on your expenditure, matching concept. This is rule 3. You understood rule 3? Mostly MCQ only they will ask. They will give a situation and they will ask which is the correct base of apportionment, like that. You will not get a practical question and all on this. Then rule 4. In case of service in relation to immobile property, what is the place of supply? Services in relation to immobile property, what is the place of supply? Location of property. What if the property is in more than one state? Then rule 4 is available to divide it between the states. If it is accommodation services, see the number of nights stayed in each state. If it is accommodation in a houseboat, see the number of hours in each state. Apart from that, any other immobile property service, see the carpet area in each state and divide it based on that. So accommodation and its ancillary services, number of nights stayed in such property. Accommodation in houseboat, time spent in that boat. All other service in relation to immobile property, area of immobile property in each state. Then next, location, that is organizing an event. For organizing an event, what is the place of supply? Location of event. Nowadays, people are spending lot of money on marriages. After this Ambani son's wedding, so now people are lavishly spending on marriage, because now we also should get married like this, because now we are also Ambani, like that feeling will be there. So for Ambani son's marriage, he spent 1% of his wealth, 1% of whatever net worth he has. Our people, 100% of their net worth they will spend in marriage. If not sufficient, they will borrow and also they will spend. And that too in the name of marriage. Now there is a fashion. Engagement will be in one location. Marriage will be in one location. Reception will be in another location. You got it? And thereafter, we have this Sangeet, like that one ceremony, and Haldi, Haldi, like that one ceremony, like that different things. Ad Mehendi, Haldi rendu undadane. Illiya, different. Okay, different function. Then first night in one location, like that. எப்படியோ நீ அது சொல்லுவ, அதான் நானே சொல்லி. ஸோ அது வெயிட் பண்ணலாம் கொஞ்சம். For that, event management not required. Okay, no one required, automatically it will happen. Okay, so I'm talking about event management service. First night also event management not required. Okay, let's respect that. So all other things in different locations it is happening. What will be the basis of apportionment? Simple. As an event manager, they will receive a single amount, and the events are in multiple locations. For each event, some expenditure will be incurred. So based on expenditure ratio, our revenue should be recognized. Okay, so GAAP, that is expenditure ratio. Then services in relation to telecommunication or internet, fixed line, what will be taken as place of supply? Location where it is installed. Suppose if it is a lease line connection, internet line used by banks and all, banks will not use public internet line. If banks are using public internet, easily we can take the data of ATM, etc. and all, and we can steal lot of money. But they use a private network, a separate lease line they will lay down. So multiple states and branches will be connected. Now what is the base of apportionment? See the number of installation points in each state, and that will be taken as the basis of apportionment. Got it? So just the basis of apportionment, like your overheads chapter. Rent based on carpet area, electricity based on number of lighting points, like that you divide, na? Same logic. Okay, but there randomly you will do something, but here you have to follow this ratio only. Okay, so with this we completed everything. Now look into some illustrations. See this illustration 1. Parth of Pune, Maharashtra enters into an agreement to sell goods to Bakul of Bareilly, Uttar Pradesh. While the goods, so there are two people here, Parth of Pune, Maharashtra, and Bakul of Bareilly, Uttar Pradesh. Uttar Pradesh. Now, while the goods were being packed in Pune godown of Parth, Bakul got an order from Shreyas of Shimogga, Karnataka. So, Shreyas of Karnataka. Okay. And what is happening here? Bakul agreed to supply the said goods to Shreyas and asked Parth to deliver the goods to Shreyas at Shimogga. You are required to determine the place of supply in the above situation. So, Parth will raise invoice to Bakul and will deliver the goods to Shreyas. Will deliver the goods to Shreyas. Okay. This is invoice A. Invoice A. Again, Bakul is making sale to Shreyas na. See, rather than Bakul delivering the goods, Bakul is asking Parth to deliver the goods. Then Bakul will raise invoice to Shreyas. No, that is invoice B. Now, for invoice A, it is sale by whom to whom? Sale by Parth to Bakul. How to determine the place of supply? Which section? 10(1)A, 10(1)B, 10(1)C, 10(1)D. Which one will be applicable? 10(1)B. Why? Bill to ship to. Because they are raising invoice to Bakul but delivering the goods to Shreyas. So therefore, it is a bill to ship to transaction. And how to determine the place of supply? Place of supply under section 10(1)B. What is the place of supply under 10(1)B? Billing address. What is the billing address? What is that billing address, pa? Uttar Pradesh na? Bakul Uttar Pradesh. So Uttar Pradesh will be taken as place of supply. What is the location of supplier? Maharashtra. Place of supply? Uttar Pradesh. Therefore, it is interstate supply. Understood? Now, this is the first part. Now, there is a hidden transaction. What is that hidden transaction? Invoice B. That invoice B is between sale by Bakul to Shreyas. Now, what is it? Supply involves movement of goods, or bill to ship to transaction, or supply does not involve movement of goods. Supply involves movement of goods. The goods are moving from one location to another location. But anyone can cause the movement of goods, either by seller or by buyer or transporter or any other person. So here, supply involves movement of goods. In case of supply involves movement of goods, what is the place of supply? Supply involves movement of goods. Supply involves movement of goods. Section 10(1)A. Place of supply under section 10(1)A. We don't know whether Shreyas is registered or unregistered. Correct? Say this. We don't know whether the Shreyas is registered or unregistered. So to Shreyas of Shimogga, Karnataka. That much is only there. We don't know the registration. So if they are registered, what will be the place of supply? Ending point. What is the ending point? Ending point, that is Karnataka. If they are not registered also, it is Karnataka. How? Location of recipient in the records of supplier is Karnataka. So anyway, it will be Karnataka. Again, it will come under interstate supply. So that is the answer we need to write for this question. Got it? Next. Clear, Nayar? I just gave it a paragraph wise and here I explained it in chart form. Look into the next illustration. Chennai is the starting point of aircraft. Mumbai, starting point of goods, means they loaded the goods in Mumbai, and Delhi is the starting point of passenger, and the aircraft ended in Dubai. Okay. So here for passenger ticket, that is transportation of passenger, what is the place of supply? Should we check B2B, B2C for transportation of passenger? For transportation of passenger service, should we check B2B, B2C? Yes or no? Yes, we should check. So B2B, what will be taken as a place of supply? location of recipient. B2C, what will be taken as the place of supply? Starting point of passenger. What is the starting point of passenger? Delhi will be taken as place of supply. Got it? Then, with respect to services on board a conveyance, should we check B2B, B2C? No. Only for TOT we should check. Service on board a conveyance is not there. So therefore, only one provision, that is starting point of conveyance. What is the starting point of conveyance? Starting point of conveyance, Chennai, that will be taken as the place of supply. Then with respect to goods sold on board, supply of goods on board a conveyance, section 10(1)(e), what will be the place of supply? Starting point of goods, where the goods are started. So that will be taken as place of supply. Got it? Next, look into illustration 3. Indian Railways provides right to display advertisement in Shatabdi Express to ABC Advertising Agency Karnataka, for which ABC Advertising Agency Karnataka pays 4 lakh per month. Is it advertisement services provided to government? Is it advertisement services provided to government or by government? By government. It is not there in the specific provision, correct? Which one is there in specific provision? Advertisement services to government. We will discuss list. In that list, which one is there? Advertisement services to government is there. But by government is not there. So therefore, which provision will be applicable? General provision. In the absence of specific provision, it will be general provision. So as per general provision, what will be the place of supply? Location of recipient. What is the location of recipient? Karnataka. Is it clear? Now second transaction. ABC Advertising Agency provided advertisement service to central government, for which they got a consideration of 20 lakhs. Is it advertisement services by government or to government? To government. And is it covered under specific provision? Yes. What is taken as the place of supply? Each state where the advertisement is provided, but this train is going from Chennai to Mysuru, covering 3 states, Tamil Nadu, AP and Karnataka. Means all the 3 states, advertisement will be provided. One train, when it starts from Chennai to Mysuru, it stops in multiple locations, means different states people will see that advertisement, correct or not? So then, how to apportion it? Already we discussed. In case of advertisement on train, length of track. So see the length of track, 200 kilometers, 40 kilometers and 120 kilometers. So this 20 lakhs we need to divide in this ratio. Got it? Accordingly, for this amount, Tamil Nadu is the place of supply, Andhra Pradesh is the place of supply for this amount, and Karnataka is the place of supply for this amount. Understood? Then illustration 4. Indian Railways provides right to print ad on the back side of the ticket to ABC Advertising Agency, for which ABC Advertising Agency pay 10 lakhs. Is it specific provision or general provision? General provision. Why? Because it is advertisement service to government. So location of recipient. Now, ABC Advertising Agency provides advertising service to central government with respect to 80 lakh tickets in stations in Andhra Pradesh and Tamil Nadu, for which they got 8 lakhs. So it is advertisement service to government. What is the place of supply? Each state where the advertisement is provided. Where is it provided? Andhra Pradesh and Tamil Nadu. So 2 states. How we will divide it between 2 states? Number of stations. See the number of stations in each state, and based on that we need to divide. Sir, whether this data will be given? Yes, the data will be given in the question. Only thing, there will be multiple data in the question. We need to know which is the correct data and answer accordingly. And we need to apportion the consideration and accordingly the place of supply. Then look into illustration 5. ZTV Maharashtra provides advertisement services in all their channels to central government, for which they received a consideration of 40 crores. It is advertisement services to government, each state where the advertisement is provided. But as they provide it in multiple channels, what is the base of apportionment? First, what we should do? Divide it between the channels based on viewership data. So after dividing it between 5 channels, one channel may be telecasted in more than one state. Say channel number 2 is in AP and Tamil Nadu, then again divide between AP and Tamil Nadu in the population ratio. And channel 5 is in Maharashtra and Karnataka, divide it in the population census ratio. Then next one, measures PQR advertising agency provided advertisement in Facebook to state government of Tamil Nadu for which they received a consideration of 40 lakhs. This is advertisement service to government through internet. I told you, deemed to be across the country. Means we need to divide it between all states and union territories. Based on what ratio? Internet subscribers ratio. Then look into illustration 7. XYZ advertising agency provided advertisement through SMS to central government in Tamil Nadu, Karnataka and Kerala, for which a consideration of 80 lakhs is received. How this 80 lakhs needs to be apportioned? This is advertisement services to government. Each state where the advertisement is provided is 3 states. Now take the telecom subscriber data in each state and you divide based on that. Apart from this, any other mode of advertisement expenditure ratio. Look into illustration 8. Mr. Vamsi, a contractor in Andhra Pradesh, provide repair and renovation service to Breeze Hotels, for which Breeze Hotels will pay a contract price of 2 crores. How this 2 crores needs to be divided? Because these hotels, they have total 4 hotels. So it is accommodation service? No. Is it accommodation in houseboat? No. Any other service in relation to immobile property? How will you divide? Based on carpet area. Based on carpet area, we need to apportion. Then, measures Club Mahindra is providing tour operator services. Is providing tour operator services to Mr. Praveen, for which Praveen is paying 80,000 as consideration. This is accommodation for 6 nights in Tamil Nadu, Karnataka and Kerala. So, accommodation service more than one state. How will you divide? Based on the number of nights stayed in each state, based on that ratio. Then, measures ABC, houseboat operator, provides accommodation in a houseboat to Mr. Ramesh Tourist, for which 8,000 is the consideration. For accommodation in houseboat, what is the base of apportionment? Number of hours in each state, based on that. Then, Act FiberNet provides internet lease line to State Bank of India, for which branches, covering branches Karnataka, AP and Tamil Nadu, for a consideration of 12 lakhs. How this 12 lakhs needs to be apportioned? See the number of installation points in each state, and based on that we need to apportion. Understood? I have already given that in theory, just in numbers I have given for you to easily remember this. Then look into this clarification, CBIC circular. What will be the place of supply in case of advertisement on hoarding? Please listen. Today, lot of advertisements we see on the hoardings. Actually, what happens there? How the contract will be? First, I am the property owner or landowner. You are the advertising agency. I will allow you to place your hoarding over there, to install your hoarding. And once you install the hoarding, you will put the contact number. Anyone wanted to advertise there, they can contact you. So one client of yours approached you to put their advertisement in that hoarding. Got it? Now, between me and you, what is the service? What is the type of service between me and you? That is owner of the property and the advertising company. What is the service? Renting of immobile property. So, service in relation to immobile property, location of property will be the place of supply. Okay, va? Now, between you and the client, please listen, wait. Between you and the client, you are not doing any designing work. He is only doing the designing. You just gave the space for him to put his advertisement. Hoarding is yours, but he only should print the banner and he should only come and do the installation. You are just allowing him to use the space. Now what is it? Is it advertisement service or renting of immobile property? Renting of immobile property only. So service in relation to immobile property. If you design the advertisement, you print the banner and you are installing, then it will come under advertisement services. For advertisement service, it will be general provisions. Only advertisement service to government is specific provision. Normal advertisement service is general provision. Is that clear? Say this. Place of supply for supply of services with respect to advertising sector. What you did? You just gave the space. You just gave the space. Or you gave right to use the space on the hoarding. Got it? You are not doing advertisement. You are just allowing them to put their advertisement. So that is service in relation to immobile property. Suppose if you are providing advertisement services, means what? You are only printing, you are only installing it there, then it is advertisement services, then the place of supply will be as per general provisions. Clear? So with this we completed place of supply chapter. It's a small topic. Now look into some questions related to this. What's the page number, pa? Page number 56. Say this. Place of supply, look into the MCQs. Mr. Radheshyam, a chartered accountant registered in Delhi, wished to purchase an office in Bengaluru. Mr. Radheshyam took financial services from ICICI Bank registered in Chandigarh, in which he is the account holder, to procure loan for an office property situated in Bengaluru. He paid 20,000 as processing fee for this loan to the bank. What will be the place of supply for the bank in this situation? Please read the question carefully. First, you need to identify what is the service. You need to identify what is the service. Okay. Read the question and tell me what is the service. What is the service? Banking service. Correct? Sir, banking is giving the service. He is a chartered accountant, wishes to purchase office space in Bengaluru. So he took financial services from ICICI Bank. Banking services. For banking services, do we have any specific provision? No. So, general provision. What will be the place of supply as per general provision? B2B or B2C? B2B, 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 registered in Delhi, registered in Delhi. So, B2B, registered in Delhi, B2B. So, for B2B, what will be the place of supply? Location of recipient, that is Delhi. Got it? So, banking services, first you need to identify what is the services. So, it is banking services. Banking services to B2B, general provisions. So, as per general provisions, what will be taken as the place of supply? Location of recipient. Location of recipient, that is Delhi, is the place of supply. Got it? Second, Mr. Hira, a registered person in Gurgaon, avails architect services of Sweet Homes Private Limited, registered in Mumbai, for a property situated in London. What will be the place of supply of Sweet Homes Limited in this case? What services it is? Architect services. For architect services means property related services. Correct na? So, property related services, what will be the place of supply? Location of property. But we have an exception. What is that? If the property is outside India, property outside India, what is the place of supply? Location of recipient. Location of recipient. What is the location of recipient? Mr. Hira, a registered person in Gurgaon. So, Gurgaon will be taken as the place of supply. Got it? What if in this question property is in Gurgaon? Then also Gurgaon, location of property. If the property is in Mumbai, Mumbai, location of property. Then third, if NM Shipping Company located in Chennai charges ocean freight for transportation of goods to California for a customer located in Bengaluru, the place of supply of service will be, what is the service here? Transportation of goods. Transportation of goods. For transportation of goods, should we check B2B, B2C? Yes, but here it is B2B or B2C? B2C. Customer is given. Nowhere it is given that they are registered. B2C. What should be taken as the place of supply? Respond here. Check the book. If you don't know, check the book and tell me. So, starting point of goods. Starting point of goods. So, what is the starting point of goods? For transportation of goods, from where to where? See, goods are taken to California. Goods are taken to California, okay. But ending point is not the place of supply. Starting point, some where? From Chennai. So, Chennai will be taken as the place of supply. Sir, why can't we take Bengaluru? They gave ocean freight. From Bengaluru, where we have sea. You understood? If Bengaluru sea is there, then you are right. Starting point will be Bengaluru. But sea we don't have. Ocean freight like that is given. So, ocean starts from Chennai only na. So, therefore, Chennai is the place of supply. 4. Mr. X, a resident from Pune, conducts training for employees of P Limited, being a registered person under GST, based out in Chennai at a resort in Darjeeling. The place of supply in this case is, what is the service? Training and performance appraisal. Training services. For training services, should we see B2B, B2C? Yes. For training and performance appraisal, we need to check B2B, B2C. Here in this case, it will be B2, B2B or B2C? B2 registered person. P Limited being registered person. Okay. So, B2B. My advice to you, all of you, is that better, if you see in Amazon, there will be magnifying lens like that will be available. Okay, seriously. So, like a magnifying lens, please buy that. Hardly it is 100 rupees or 150 rupees only. So, very good one it is. You keep that on the top of the question and you read. Seriously, I am telling. Okay. So, registered person, how clearly it is given. P Limited, a registered person like that. And you are telling B2C like that. B2C. Training service B2B. What is the place of supply? Location of performance. Location of performance. What is the location of performance? Pah. Super pah. Samma. Good. Location of recipient. What is the location of recipient? Registered person based out in Chennai. What if he is unregistered? That is P Limited is unregistered. Location where it is performed, that is Darjeeling. Okay. Training in Darjeeling. Nice, no? We should also have exam oriented batch in Shimla. Then see this 5. A Limited in Delhi has been awarded a contract by B in Karnataka. A Limited in Delhi has been awarded a contract by B in Karnataka, and B does not specify any details of supplier of goods in the contract. And A himself chooses C, located in Rajasthan, as supplier, and asks C directly to send the goods at the Karnataka site. A does not have any warehouse or does not store goods anywhere else in the state. Thereafter, A uses the goods for installation at the site. A does not have any contract for installation in Karnataka. What is the place of supply in case of transaction between C and A and between A and B? Now read the question carefully and tell me, who is the seller? Who is the seller? Who is selling the goods? A. A is selling the goods. A of Delhi has been awarded a contract by B, and A himself chooses C in Rajasthan as the supplier. So, A is wrong. C is the supplier. C is the supplier. A himself chooses C in Rajasthan as the supplier. So, C is the supplier. C of Rajasthan. C of Rajasthan is raising invoice to A of Delhi, but delivering the goods where? Award a contract by B in Karnataka. So supplier asks C directly to send the goods at the Karnataka site. So Karnataka site, B in Karnataka. So means C will raise invoice to A and A will raise invoice to B. So invoice number 1 by C to A. That's why they are asking C and A. Then second invoice by A to B. So invoice 2 by A to B. And the goods are delivered by C to B. From C point of view, C, the transaction. From C point of view, C and A. It is what? Bill to ship to na. For bill to ship to, what will be taken as a place of supply? Billing address. What is the billing address? Delhi. So Delhi, there are two options where Delhi is there. Okay. Then again we need to determine. Between A and B, what will be the place of supply? Karnataka. Why Karnataka? A supply involves movement of goods and that is 10(1)(a). But compared to that, which is the more specific provision? Installation. Location where it is installed. Where is it installed? In Karnataka. That will be taken. So the answer will be Delhi and Karnataka. Got it? Then sixth one. A located in Bengaluru, Karnataka facilitates supply of food grains between B of Kerala and C of Japan. B supplies goods to C and on completion of the transaction pay commission to A. What is the place of supply in this case to A? So A is facilitating supply of goods, means A is acting as a consignment agent or a commission agent, correct? Read the question again. A in Karnataka facilitates supply of food grains between B in Kerala and C in Japan. B is selling the goods to C, but this job is done through A, means A is acting as a agent, consignment agent or commission agent. So it's a service, correct? Don't bring it under goods, service. For services, commission agent service, do we have any specific provision? No. So for commission agent services, we need to apply general provisions. And to A, who is the recipient? Pays commission to A. B supplies goods to C and on completion pay commission to A, means B is the recipient, correct? And B is in Kerala, general provisions. So place of supply is location of recipient in the records of supplier. There is no B to B, that's why. Records of supplier. What is the location of recipient in the records of supplier? That is Kerala. See this, B supplies the goods to C and on completion of the transaction pay commission to A, means B is giving commission. So B is the recipient and Kerala will be taken as the place of supply. Got it? Then 7. Grand wedding planners. Actually place of supply chapter is small, but when you are applying the provision, it will take time because you need to properly read the question, analyze it and arrive at the answer. These two chapters are like that only, place of supply as well as time of supplying. Chapter is small, but for arriving at the answer, it will take time. So that's why when you are applying it, be careful. First you need to find what is the service. Is it anywhere in the specific provision? If not, general provision. If it is in specific provision, then the specific provision. Now, Grand Wedding Planners Chennai is hired by Mr. Ramesh, unregistered person based in Hyderabad, to plan and organize this wedding at Chili's, Africa. What is the place of supply? First, what is the service? Organizing an event. Organizing an event, should we check B to B, B to C? Yes, but here it is B to C. B to C, what will be taken as the place of supply? Location of event. But the exception is there. If event is, only in two places that exception is there. Property related service, organizing an event. If the property is outside India, event is outside India, location of recipient. So location of recipient, that is, what is the location of recipient? Hyderabad. So Hyderabad will be taken as the place of supply. Then 8. ABC, a statutory body located in New Delhi, commissions ST located in Mumbai for an advertisement on Pradhan Mantri Awas Yojana to be displayed in the cinema hall in Chennai and Hyderabad. What is the place of supply with respect to the commission? What is it? Advertisement services to government. When I say advertisement service to government, statutory body is also included. That is government authority, government entity, everyone is covered. So advertisement services to government. Advertisement services to government. What will be taken as place of supply? Respond. We have a specific provision. Each state where the advertisement is provided. Where the advertisement is provided? Chennai and so Chennai and Hyderabad will be taken as the place of supply. But how it will be divided? Based on number of cinema halls in each state. Correct? Who said, yeah? I did not tell like that. We don't have any provision. Train ticket, TV, internet, SMS I said. Any other case? Very good. Expenditure ratio. So what is the cost of advertisement in Chennai and cost of advertisement in Hyderabad? In that expenditure ratio it should be divided. Okay. Next. 9. Aflatun Spares Private Limited located and registered under GST in Haryana supplied spare parts to Lakshmi Khurana, an unregistered person located in Rajasthan. Lakshmi Khurana booked the courier himself with Black Dot Courier Private Limited registered under GST in Delhi for delivery in Rajasthan. Black Dot Courier Private Limited picked up the goods from Haryana, handed over by Aflatun Spares Limited and delivered the courier in Rajasthan while passing through the state of Uttar Pradesh. Determine the place of supply of service provided by Black Dot Courier Private Limited. What is the service? Service is what? Hey, seriously, no. Clearly it is there, yaar. Service provided by Black Dot Courier. Courier service means what? Transportation of goods. Courier is transportation only, napa. Correct? Or are they tying it to one pura and that pura is taking? No, transportation only, right? How they will send courier? Or from here we will throw and someone will catch over there or what? So it is a service, transportation. What happened? Any problem? Sleepy, huh? Sleep. No issue. Transportation of goods. For transportation of goods, should we check B2B, B2C? Yes, B2B here. How you know it is B2B? Who is the recipient? Who is the recipient? Lakshmi Khurana. Clearly given that it is unregistered. Then how it is B2B? It will be B2C. For B2C, what should be taken as a place of supply? Transportation of goods. Starting point of goods. What is the starting point of goods? Pick up the goods from Haryana. That is, Haryana will be taken as the place of supply. Option A. Then 10. Mr. Javed, an unregistered person residing in Hisar, Haryana, went to Delhi for seeking admission of his child, Mr. Arjun, in CA Intermediate. Mr. Javed got the demand draft generated at ICICI Bank Limited, located and registered under GST in Shahilbad, Uttar Pradesh against cash for depositing the registration fee to the ICI. Mr. Javed does not have bank account and the bank does not have the policy of KYC requirement for customer requiring demand draft and not having account with any of its branch in India. Determine place of supply of service provided by ICICI Bank Limited, Uttar Pradesh to Mr. Javed. First, what is the service? Banking services. Do we have any specific provision? No. So, general provisions. General provisions, B2B or B2C? B2C, super. What will be taken as the place of supply? Location of Location of? Wrong. Location of supplier. Why location of supplier? Sir, location of recipient is not available in the books of supplier. They don't have a bank account and the bank don't have the policy of KYC requirement, which means that location of recipient not available in the records of supplier. So, location of supplier. What is the location of supplier? Where the bank is located? Uttar Pradesh. So, Uttar Pradesh will be taken as place of supply. Got it? Then so let's see some latest questions related to this. Look into page 68, the RTP September 25. From where 26 came, I don't know. Page 68, question number 30. Nice only. If we know what are the questions for September exam, May exam and all, I will print the question paper and sell it for 1 lakh rupees. Life settled. Okay. Say this. Determine the place of supply in respect of the following independent cases. Question paper 1 lakh you will not buy, yeah? No. Wow, very good, yeah? What genuine people are you are. So question paper if available also you will not buy for 1 lakh. So you will prepare and go. Okay. Oh, 1 lakh is too much, sir. 5,000 or 1,000 rupees. See this. Determine the place of supply in respect of the following independent cases. Brief reason should form part of your answer. Mr. U from Mount Abu, Rajasthan, an unregistered person, ordered one laptop as a gift for his father from e-commerce site Zilu, registered in Mumbai, Maharashtra, to be delivered at his parents' house located in Ahmedabad, Gujarat. Mount Abu, Rajasthan was mentioned as the permanent address of Mr. U at e-commerce site Zilu. We discussed one CBIC circular. Whenever any goods are supplied through e-commerce platform to unregistered person, if the delivery address and billing address is same, no issue. Otherwise, we should take delivery address. What is the delivery address here? Ahmedabad, Gujarat. So the place of supply will be delivery of goods, that is Ahmedabad, Gujarat. Tell me what is the explanation that you will write. As per section 10(1)(a) read with CBIC circular, in case of supply involving movement of goods to an unregistered person, location of recipient in the records of supplier is the place of supply. If the goods are sold by e-commerce or through e-commerce platform to an unregistered person and there is different billing address and delivery address, the place of supply shall be the delivery address. In the present case, in the e-commerce site Zilu, there are two addresses. One is Rajasthan, another is Gujarat. So the delivery address will be taken as the place of supply, that is Gujarat, Ahmedabad, Gujarat. Got it? Number 2, Mr. Oman, a tourist from Australia, visited India in the month of September. He got repaired his camera during his visit to Udaipur, Rajasthan, and by Mr. R, who also visited Udaipur at the same time. Mr. R is registered at New Delhi. Mr. Oman provided address of his friend who resides at Mumbai, Maharashtra, to be mentioned in the bill issued by Mr. R for repairing the camera. Repair services to camera. Do we have any specific provision? No. So, general provisions. General provisions, B2B or B2C in this case. B2C, because he is a tourist from outside India, so there is no details, registration, so it is B2C. In case of B2C, what should be taken as place of supply? Location of recipient in the records of supplier. What is the location of recipient in the records of supplier? Mr. Oman provides address of his friend who resides at Mumbai, Maharashtra. So Mumbai, Maharashtra will be taken as place of supply. Understood? Then look into question 29, above question. examine the following independent cases and determine the place of supply under GST law along with the relevant legal provisions. Mr. Mukul, a bank manager, is transferred from Kolkata, West Bengal to Jodhpur, Rajasthan. His family resides at Ranchi, Jharkhand. He hires Fastman Couriers Private Limited, a registered company in Kolkata, to transport his household goods from Ranchi to Jodhpur. Now tell me, first, what is the service? Transportation of goods. B2B or B2C? B2? Bank manager. Bank manager. Bank manager means definitely he is not registered, he is an employee. So B2C. B2C. What will be taken as the place of supply? Starting point of goods. What is the starting point of goods? To transport his household goods from Ranchi, Jharkhand, that will be taken as the place of supply. Why not a supply? Who said household items means not a supply? Transportation of household items, do we have any exemption? Transportation service we discussed now. Transportation of goods by road, courier agency, etc. Do we have any exemption? No. Whether it is household goods or whatever it may be, it is taxable. You know where we discussed this? E-way bill we discussed. E-way bill not required is what we discussed. For transportation of household goods, E-way bill not required is what we discussed. But it is supply. Then, Messrs. Ravi Builders of Pune, Maharashtra hired Messrs. Builder and Company, an architectural firm registered under GST law at Ahmedabad, Gujarat, for designing an architectural plan for a 21-floor building to be constructed by them in Canada. What is the service? Immobile property. Architect service means service in relation to immobile property. What will be taken as the place of supply? Location of immobile property. But where the property is located? Canada. So, location of recipient, that is architectural firm Builder and Co, and recipient is Ravi Builders, Pune, Maharashtra. So, Pune, Maharashtra is taken as place of supply. Then this question number 28 is related to that e-commerce transaction. Already we discussed one question. Look into question number 27. 28 you take for practice. Briefly examine the place of supply in the following independent cases. Miss Shanti, unregistered resident of Gujarat, went to meet her parents at the native place Patna, Bihar, and buys a medical insurance policy for her parents from an insurance company, M&T Insurers of Patna. The location of the recipient of service in the records of M&T Insurers is Patna. What is the service? Insurance. For insurance service, do we have any specific provision? No. So, general provision, B2B or B2C? B2C. So, location of recipient in the records of supplier. The location of recipient in the records of M&T Insurers is Patna. So, Patna will be taken as place of supply. Then next B. Lakan Singh Transports Private Limited, a goods transport agency registered in Noida, Uttar Pradesh, is hired by Ram Trade Links, registered supplier in New Delhi, to transport its consignment of goods from its warehouse in Delhi to the house of a buyer located in Roorkee, Uttar Pradesh. Now, what is the service? Transportation of goods. Should we check B2B, B2C? Yes, it is B2B. For B2B, what should be taken as a place of supply? Location of recipient. So, they are providing service to Ram Trade Links, registered supplier in New Delhi. So, New Delhi will be the place of supply. Next, C. Mr. Karan, Mumbai, takes a post-paid mobile connection in Mumbai from the service provider Freesia Limited and gives his residence address at Mumbai as the address for billing with the said company. What service? Telecommunication service. Post-paid mobile. Post-paid mobile, what should be taken? Billing address. What is the billing address? Mumbai. That will be the place of supply. Then look into question number 17. Question number 17, page 64. With reference to GST law, determine the place of supply with reasons in the following independent circumstances. Miss Kanika of Kolkata, West Bengal, visited to Jodhpur Law University, Rajasthan, and paid her college fees by purchasing a demand draft from bank located in the university campus. Miss Kanika did not have any account with the bank. Now, what service it is? Already we discussed banking services. Banking services we need to take general provisions. General provisions B2B or B2C? B2C. And location of recipient in the records of supplier, but that is not available because she is not having a bank account. So what will be taken? Location of supplier. Where is the supplier bank located? In the university campus, Rajasthan. So Rajasthan will be taken as place of supply. Then second, Mizu Machine Limited, registered in the state of Andhra Pradesh, supplied a machinery to KN Wind Farms, registered in the state of Karnataka. However, this machinery was assembled and installed at the windmill of KN Wind Farms Limited, which was located in the state of Tamil Nadu. What is it? Supply of goods. Supply of goods. Supply of goods that requires assembly or installation. So what should be the place of supply? Location of installation. Where is it installed? Tamil Nadu, state of Tamil Nadu. So that will be taken as place of supply. Yes, remaining questions you can try. All like this way only. First you need to see the service. Then is it specific provision or general provision? Accordingly, what is the place of supply? Okay. But please do it without seeing the answer. If you see the answer, you will never get an opportunity to make a mistake. So you should commit the mistakes. Then only you will not commit the mistakes in exam. So if you commit mistakes now, you are learning out of your mistakes so that it will not be repeated there in exam. Got it? So now many times you said registered as unregistered, unregistered as registered. Now you came to know, okay, we need to focus there. So clearly in question we need to check for registration. Like that. Only when we do mistakes we will learn out of it. Okay. Then we will see one question. One comprehensive question we will discuss, please take that. Question number 29, page 216. Question number 29, page 216. It's a 10 marks question. You don't have to do the answer, but at least if you know where it will come, that is sufficient. Okay. Say this. Mr. Karan, a registered supplier in Kochi, Kerala state, has provided the following information of supply received or made during the month of February 2025. There are lot of transactions given here, and from the information given above, you are required to compute the net minimum GST payable in cash after deduction of ITC by Karan for the month of February 2025. You don't write explanation, but at least the numbers you write so that you will be in touch with the flow of the question. Okay. So come on, take your book, take your notebook, same way 3 pages. Explanation not required, just the numbers we will write. Okay. Computation of gross GST payable under FCM. First statement, computation of gross GST payable under FCM. Please write, then only you will get that flow. Computation of gross GST payable under FCM. That is the first statement. And in that, prepare a table, particulars, value, CGST, SGST, IGST. Particulars, value, CGST, SGST, IGST. That's the first page, first statement. Next page. Computation of GST payable under RCM on inward supplies. Computation of GST payable under RCM on inward supplies. Computation of GST payable under RCM on inward supplies. There, just particulars, CGST, SGST, IGST. Next, third page, third statement. Computation of ITC availed. Computation of ITC availed. In that particular CGST, SGST, IGST. Now look into the screen. First transaction on 5th February 2025, supplied goods to Zara Enterprises, an unregistered partnership firm in Bikaner, Rajasthan. Discount of 10% offered to Zara Enterprises on this invoice price of 2 lakhs as per pre-agreement but not recorded in the invoice. Discount given for this invoice by way of credit note on 28th February 2025. What is your answer? First, it is outward supply or inward supply? Outward supply, outward supply. What is the value? 2 lakhs. Are they giving a discount? Yes. Pre-supply or post-supply? Pre-supply, no, post-supply discount, because they are giving discount through credit note, post-supply discount. But whether the terms are agreed before at the time of supply? Yes. So is it allowed as deduction? Yes. Are they giving credit note same month or next month? Same month, means automatically you reduce the liability in this month itself. So 2 lakhs minus 10%, how much? 1,80,000. 1,80,000 should be taken as the value. Now, intrastate supply or interstate supply? First, what is the location of supplier? Kochi, Kerala, and they are making supply to an unregistered person. So unregistered person means location of recipient in the records of supplier. What is the location of recipient in the records of supplier? Rajasthan, Bikaner, Rajasthan. So it will come under interstate supply. Got it? Now wait. As they gave some additional information, we need to check, do we have any information related to this? But nothing of this sort as of now. So we will proceed to the first statement. Write down in the first statement, sale of goods, in particular sale of goods, amount column 1,80,000, 1,80,000, and in IGST column, because it is interstate na, in IGST column 1,80,000 into 18%, because the rate of GST is 9%, 9%, 18%, so 18%. How much? 32,400 in IGST column. Okay. Second transaction you read. Made a supply of machinery to Kool & Company registered in the state of Kerala. The machinery was installed at the factory site of Kool & Co. in the state of Tamil Nadu as per agreement. So it's outward supply. Yes. And it will be taxable. We don't have any exemption, taxable under FCM. Now we need to see whether it is intra or inter. What is the place of supply? This is supply of goods requiring assembly or installation. Where is it installed? Tamil Nadu. Where is the supplier located? Kerala. Therefore it is interstate supply. Write down supply of machinery. First statement only. First statement only. Supply of machinery. Value column 6 lakhs. Credit note. That is when, if you are giving the credit note next month. But here same month it is given. That's why we are reducing. Suppose if you give credit note in the next month, what would have done? Full value. 2 lakhs we would have taken. Next month, in next month liability we will reduce. Okay. So 6 lakhs into 18%. What is 6 lakhs into 18%? 1,08,000. That is IGST column, okay, because it is interstate. Now look into third transaction. Provided supply of online educational journals on monthly basis to St. Peter's High School situated in the state of Kerala. Taxable or exempted? Online educational journals and periodicals to category 2 is only exempted, but here it is category 1, therefore it will be taxable. And here online educational journals means services. For services, online educational journals, do we have any specific provision? No. So general provision. What is the general provision? Location of recipient. Where is the location of recipient? Kerala. Therefore it is intrastate supply. Write down in first statement, supply of educational journals, online educational journals. Supply of online educational journals. So value is 70,000, value column 25,000, and CGST 25,000 into 9%, 2,250, 2,250, CGST, SGST. Next, provided renting of his own commercial property situated at Thrissur, Kerala to Safehold Limited of Kerala, in which he is an independent director. So should we treat as renting services or director services? Renting, because he is not providing in the capacity of director, so renting services. Renting of commercial property, we have only one exemption, that is accommodation, 90 days, etc., but this is not done, so it will be taxable. Renting of commercial property, we have two conditions for RCM. What is that? Supplier should be unregistered, but here supplier is registered, so it will be FCM only. Is it clear? And what is the place of supply? So this is service in relation to immobile property, correct? And what is the place of supply? Location of property. What is the location of property? Kerala, therefore it is intrastate. Now you understood how place of supply is impacting. That is, place of supply standalone question also they will give, or they will connect it like this in the first question, okay. So write down, renting of commercial property, renting of commercial property, value 70,000, it is FCM only, okay. If it is RCM, don't take the liability. So 70,000, and it is intrastate, so CGST, SGST, 70,000 into 9%, 6,300, 6,300 CGST, 6,300 SGST. Next, point number 5, supplied a consignment of office uniform to Rasool T Estate situated at Munnar, Kerala. So office uniform means sale of goods, correct? Sale of goods, sale of goods. So supply involves movement of goods, supply involves movement of goods. Rasool Tree Estate situated at Munnar, Kerala, we don't have the registration, so B to C. Supply involving movement of goods, 10(1)A, B to C. Location of recipient in the records of supplier. What is the location of recipient in the records of supplier? Munnar, Kerala, Kerala only, so it is intrastate. Write down, sale of uniform, sale of office uniform. See, for goods and all, you don't have to check FCM, RCM, it is always FCM, because service RCM only we have. So goods always FCM, and goods always taxable. The moment you see goods in the question, goods is always taxable and always FCM, okay. So sale of office uniform, value 2 lakhs, and CGST, SGST, 2 lakhs into 9%, 9%. There is an adjustment, okay, say this. So second, Mr. Karan provided the following additional information. In respect of supply made to Munnar, being hill station, local levy of green tax of 10,000 was charged by Mr. Karan in the invoice made to Rasul T Estate. Whether this 10,000 is included in value? Yes. Why? As per section 15, subsection 2, clause A, all taxes, duties and cess by whatever name called other than GST will be included in the value. This is other than GST, so therefore it should be included in the value. So total 2 lakhs plus 10,000. So 2 lakh 10,000. So take in the value 2 lakh 10,000 and CGST 9%, SGST 9%. How much? 18,900. 18,900. Next. So, fourth one, payment made to Mr. Manish, a contractor of Bengaluru. Payment made means inward supply. Payment made to Manish, a contractor of Bengaluru, for construction of staff quarters within the factory premises at Kochi. Staff quarters capitalized in the books and no depreciation charged. No ITC. No ITC. Why no ITC? Any construction expenditure which is capitalized. So in the third statement, construction expenditure, in the third statement write down particulars, construction expenditure dash dash dash, ITC not available. Construction expenditure, ITC not available, just put dash. What if it is charged to P&L? It is available, and on this construction expenditure should we pay any GST under RCM? No. Mr. Karan provided the following additional information. During the month, intrastate supply for 13,000 was made against redemption of food coupons issued during December 2024 for use against specific pizza available in the food court run by Mr. Karan in Kochi. Coupons were valid till 28/2/2025. See, the time of supply in case of voucher is not there. So therefore, whenever the coupons are redeemed, the date on which it is redeemed towards supply of goods or services only will be taken. So even though the coupons were issued in December, but when these are redeemed, coupons were issued which date? December 2024, but when it was redeemed? During the month. So means during the month only we are selling the food items for which we are getting the consideration. Here the redemption of coupon will be treated as consideration. Got it? So take the first statement, it's an outward supply. Take the first statement, intrastate supply of food. Intrastate supply of food, value column 13,000, value column 13,000, CGST 13,000 into 9% and 9%. How much? 1,170. But at that time the provision was different. At that time we had one provision in case of identifiable voucher at the time of issuance of voucher, non-identifiable voucher at the time of redemption. But for May 26 exam, that provision is omitted. We don't have. So which means we don't have to bother about when the voucher is issued. Always, whenever we are supplying the goods or service against redemption of voucher, the date on which we supply the goods or service only should be taken, and the voucher will be treated like a consideration. That's it. Okay. Then second point we considered. Third point, Mr. Karan was advised by his accountant that since he is a director in the company to whom he let out the property, GST is to be paid by company under RCM. Wrong, because he is not providing the service in the capacity of a director. Assume the rate of GST for both inward and outward supply, except otherwise provided. All amounts given above are exclusive of GST and green tax or any other tax. We considered that. Subject to information given above, condition for availing ITC is complied with. All inward and outward are intrastate except where information is provided to determine place of supply. Assume all inward supplies are used for taxable and there is opening balance of ITC. Go to ITC statement, third statement. Opening balance of ITC. CGST 30,000, SGST column 0, IGST column 1,50,000. Third statement, CGST 30,000, SGST nil, that is 0, IGST 1,50,000. Now, second statement, we don't have anything. We don't have any inward supply under RCM. Now, just first statement, you do the total. First statement, you do the total. How much? 28,620, 28,620 and 1,40,400. Okay. Correct? Next. You got this now? What is the IGST credit you have? 1,50,000. So, therefore, second statement we will strike off and write computation of net GST payable. Because we don't have anything in the second statement. Computation of net GST payable. What is the gross GST payable? 28,620, 28,620, 1,40,400. Now, which credit you need to utilize first? IGST minus IGST credit utilized. Minus IGST credit utilized. How much IGST credit you have? 1,50,000, correct? 1,50,000 you have IGST credit. So, can we take ITC, sorry, 1,50,000 is the IGST credit. We can adjust it towards 1,40,400 first. First IGST credit should be utilized for payment of IGST liability. Thereafter, which liability you will adjust? SGST liability, because we don't have ITC of SGST. That's why we are adjusting against SGST liability. What is the extra you have? 9,600. And then CGST credit you have 30,000. That 30,000 you can utilize it for payment of CGST liability. So, if you see the balance, you have SGST alone 19,020. Okay. Here you can see in the answer working note, even though in IGST column 1,08,000 is given, but it is actually blocked ITC. And supply of online educational journals and periodicals. So, this point is irrelevant because already we considered that. Supply of online educational journals and periodicals. So, this row is irrelevant. Okay. And ITC is 30,000, nil and 1,50,000, that's correct. We adjusted with this. So, 19,020 is the answer. Actually, this is not the answer as per RTP, because in RTP they have not given this point. This point I have modified based on latest amendment. Okay. Because at that time it was issuance of voucher will be taken as the time of supply. They issued a voucher in December, so it will not be taxable now. But I modified it based on the latest provision. Okay. Apart from that, remaining and all as per RTP only. Clear? So, if you are not writing the explanation, at least this way you do. Okay. At 1 or 2 questions you write with explanation and practice. Remaining questions and all you do it this way. Without writing explanation, at least in whichever table it will come, based on this you analyze and write. Okay. See, but you need to break this fear of attempting this first question, because this first question, the moment you see that question, there will be a fear, will I be able to do? Why not? It will take time. Definitely it will take time. Unlike other questions which you are able to arrive at the answer in 5 minutes while reading, but this will take time. So, but you have to spend that time and arrive at the answer. Okay, fine. We'll take a break and then we will continue with a new chapter, that is time of supply. Okay. We'll start with the next chapter, that is time of supply. Please look into page number 64. In this chapter, we need to just remember the provisions and apply that provisions. There is nothing else, but the memory is required here as to what is the due date of invoice, what is the time of supply, etc. and all. First we will see due date of invoice, that is given in section 31. As per section 31 of CGST Act, the due date of invoice in case of goods, we have three provisions: normal cases, supply involves movement of goods, sale on approval or return basis. In case of sale on approval or return basis, the due date of invoice is 6 months from the date of removal or date of acceptance by the buyer, whichever is earlier. So we will just send the goods to the buyer. Today it is not sale because he will use it, and if he likes it he will approve. So at that time only the sale is considered. So at the time of acceptance, suppose if he is not accepting within 6 months from the date of removal, then on expiry of 6 months it is deemed to have been sold. So whichever is earlier will be taken as due date of invoice. This is for sale on approval or return basis. Suppose if it is a continuous supply of goods. What is a continuous supply of goods? There will be successive supply of goods for which payments are settled on periodical basis. If the payments are received based on account statement, so first the supplier will give an account statement to the recipient as to this date, this much I have supplied, like that. So if the payments are based on account statement, then we need to see the account statement date. If the payments are received irrespective of the account statement, means without issuing account statement also the payments has to be received, then it will be payment received date, okay, as the case may be. So due date on which account statement is issued or payments are received, as the case may be. Then normal cases. Normal cases is balancing figure, that is if it is not sale on approval or return basis, it is not continuous supply of goods, then it will be normal cases. For normal cases we need to check whether supply involves movement of goods or supply does not involve movement of goods. If supply involves movement of goods at the time of removal, supply does not involve movement of goods at the time of delivery. Whenever the goods are delivered, that is the due date of invoice. What is the difference between supply involves movement or supply does not involve movement? In place of supply chapter itself we studied, that is under the contract of supply, if we need to move goods from one location to another location, that is supply involving movement of goods. If the recipient is only coming and collecting from our premises, then supply does not involve movement of goods. If supply involves movement at the time of removal, supply does not involve movement at the time of delivery. These are the three provisions related to goods. Depending upon the transaction, we need to apply the respective date as the due date. Then in case of services also we have three provisions. First, normal cases. Second, continuous supply of service. And third, cessation of service. What is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligation is known as continuous supply of service. Example, renting of immobile property, construction activity, or internet services, telecommunication service, all these are examples of continuous supply of services. Now, cessation of service means abruptly stopping the service is known as cessation of service. In case of cessation of service, invoice to be issued immediately upon cessation. For example, there is an actor who signed the contract for a movie and he acted in the movie for 5 days. Now immediately on expiry of 5 days, he stopped acting in the movie. So immediately he should have given the invoice for that 5 days. Got it? That is, whenever there is a cessation of service, immediately upon cessation, with respect to the proportionate amount retained, the invoice needs to be given. Then continuous supply of service, that is a service which takes more than 3 months to complete. In this, first we need to see whether due date of installment is ascertainable from the contract. If yes, the due date of installment will be taken as the due date of invoice. For example, renting of immobile property you take. I enter into contract with you to give my property on rent. Monthly, by 5th of every month you should make the payment, like that I will mention. Means that 5th of every month is the due date of installment. So that itself will be taken as due date of invoice. Number 2, suppose if due date of installment is not ascertainable but payment is linked to completion of event. Example, construction. Upon completion of ground floor, you have to pay this much. Upon completion of first floor, you have to pay this much, like that. We will connect it to the event. So whenever that first floor construction is completed, that is the due date of invoice for that portion. Whenever second floor construction is completed, that is the due date for that portion. Suppose if nothing is there in the contract, there is no due date of installment in the contract, and there is no payment linked to completion of event, then in that case, so as and when the payment is received, whenever the payment is received, that will be taken as the due date of invoice. Then normal cases is balancing figure. If it is not a continuous supply of service or cessation of service, normal cases, what will be taken as the due date of invoice? Banking or insurance services, 45 days from the date of completion. Other cases, 30 days from the date of completion. Banking or insurance sector, 45 days. Other sector, 30 days from the date of completion. Got it? This is the due date of invoice, total 6 provisions. For goods, normal, continuous supply of goods, sale on approval or return basis. For services, normal, continuous supply of service, and cessation of service. Now, look into time of supply in case of goods and services. The provisions related to time of supply in case of goods is given in section 12 of CGST Act. Service is section 13 of CGST Act. 13.1 and 12.1 deals with the purpose of time of supply. Why we determine the time of supply? Mainly to identify the date on which we are liable to pay tax to government. Suppose if the time of supply for a transaction falls in a month, by next month 20th we need to discharge the liability. So that is the objective. So the liability to pay GST is based on time of supply. Then 12.2 and 13.2 deals with time of supply in case of FCM. 12.3, 13.3 time of supply in case of RCM. Previously we had 12.4 and 13.4, that is now omitted, which is not there, they have removed it. And 12.5 and 13.5 deals with time of supply in residual cases, and subsection 6 deals with time of supply in case of interest, late fee or penalty for delay in receipt of consideration. Now, what we need to remember is time of supply in case of goods under FCM, number 1, time of supply in case of service under FCM, then time of supply in case of goods under RCM, time of supply in case of service under RCM, then residual cases, common, there is no difference, common between 12 and 13, and this interest, late fee, penalty is also common between 12 and 13. These 6 points, if you know, the time of supply chapter is complete. Okay, so what are the 6 things that we need to know? Time of supply in case of goods under FCM, then service under FCM, then goods under RCM, service under RCM, then residual cases, interest, late fee, penalty for delay in receipt of consideration. First, we will see time of supply in case of goods under FCM. Section 12 subsection 2 read with one notification, that is notification number 66 of 2017. It is divided into 2, that is person opting for composition scheme or specified actionable claim versus others. If there is a person opting for composition scheme or specified actionable claim, the time of supply in case of goods is 3 dates. Due date of invoice, which already we studied, actual date of invoice, that is the date on which invoice is issued, number 3, the date on which payment is received, whichever is earlier. So invoice date, due date of invoice, actual date of invoice, date of payment, whichever is earlier. This is when person opting for composition scheme or supply of specified actionable claim. What about others? For others, it is only due date of invoice or actual date of invoice, whichever is earlier. Then this is in case of goods under FCM. Clear pa? In case of goods under FCM, specified actionable claims or composition scheme, due date of invoice, actual date of invoice or date of payment, whichever is earlier. For others, due date of invoice or actual date of invoice, whichever is earlier, that's it. Then time of supply in case of services under FCM. First you need to see whether the invoice is given within the due date. If yes, invoice date or payment date, whichever is earlier. If not, completion date or payment date, whichever is earlier. Look into this example. Date of completion is 13/3 and invoice is given on 12/4. Is the invoice given within 30 days? Yes, because 13/3 to 12/4 is within 30 days. So what should be taken as the time of supply? Invoice date, that is actual date of invoice, or date of payment, whichever is earlier is 12/4. Accordingly, next month 20th will be taken as the due date. Suppose if the invoice is given on 13/4, means beyond 30 days, invoice is given after the due date. As invoice is given after due date, we need to take completion date or payment date, whichever is earlier, that is, which is earlier 13/3. Completion date or payment date, whichever is earlier, 13/3. Accordingly, next month 20th will be taken as due date. Now see the problem here. As you are giving invoice for 1 day delay, what happens? Your due date is getting preponed by 1 month. Okay. So if invoice is given within due date, actual date of invoice or date of payment, whichever is earlier. Otherwise, date of completion or date of payment, whichever is earlier. So we completed goods FCM, services FCM. Third one, goods RCM. In case of goods under RCM, we need to see the date on which recipient has received the goods, the date on which recipient is making the payment to supplier, or 31st day from the date of invoice, whichever is earlier. So we need to see from recipient point of view. Why? Because it is a transaction which is covered under RCM. So we need to see from recipient point of view the date of receipt of goods, the date on which payment is made to supplier, 31st day from the date of invoice by supplier, whichever is earlier will be taken. Then time of supply in case of service under RCM. Here there is one point. If invoice is given by supplier or if invoice is given by recipient, there are 2 points. If invoice is given by supplier, date on which payment is made to supplier or 61st day from the date of invoice by supplier, whichever is earlier. If invoice is given by recipient, when invoice is given by recipient, if the supplier is unregistered and the supply is covered under RCM, the recipient has to give invoice to the supplier. In that case, date of payment to supplier or date of invoice by recipient to supplier, whichever is earlier. You understood? Be careful in the question. Only in case of service RCM we have a provision like this. For goods RCM, no problem. Always it will be one provision only. Date of receipt, date of payment to supplier, and 31st day from the date of invoice. But in case of service only, you need to check whether invoice is given by supplier to recipient or recipient to supplier. If invoice given by supplier to recipient, date of payment is common again. But what changes? 61st day, here it is date of invoice to supplier. Then invoice to be issued by recipient to supplier in case the supplier is unregistered and the supply is covered under RCM. And what is the time limit within which the self invoice needs to be given by recipient to supplier? 30 days from the date of receipt of goods or services. Then this is the amendment point, that is vouchers. Generally time of supply in case of vouchers is omitted by the Finance Act. Then what is the impact of vouchers? There is no impact on issuance of vouchers, because vouchers are neither goods nor services. Vouchers are not treated as goods or services. Then whenever the voucher is redeemed, the redemption of voucher will be treated as consideration towards supply of goods or services. That's what we have seen in that comprehensive question. Okay. Time of supply in case of voucher is omitted, and time of supply in case of supply of goods or service against voucher is to be determined as per 12(2) or 13(2) of CGST Act. Then, so related to that, in amendments material, I have given one question. See this, related to vouchers. Look into this question. You may get a question like this. Zenfit Wellness Private Limited, a company registered under GST in Maharashtra, provides taxable wellness and physiotherapy services. On 10th January, Zenfit issued gift vouchers worth 5 lakhs to Corporate Solutions Limited after receiving the full consideration on the same date. Basically, these vouchers which are given is not a supply. These vouchers which are issued by Zenfit Wellness is not a supply, because vouchers are neither goods nor services. Now continue. The vouchers were redeemable by employees of Corporate Solution Limited for availing services within 6 months. Zenfit treated the issuance of vouchers as a taxable supply and paid GST accordingly in Jan 26. Not required now. At the time of issuance of voucher, they don't have to pay GST. Unnecessarily, they paid GST for Jan 2026. Read that paragraph again. The vouchers were redeemable by employees for availing service within 6 months. Genfit treated the issuance of vouchers as taxable supply and paid GST, which is not required by them. Next, out of this said vouchers, total how much worth of vouchers they gave? 5 lakh worth of vouchers they gave. Vouchers worth 3,50,000 were redeemed on 20th February 2026. What does it mean? It means that Genfit got the consideration only on 20th February. You got it? Even though they received the money before, but what is the real date on which the consideration is received? Only on 20th February for that 3,50,000. Literally speaking, 5 lakhs they already got. Beginning itself, 10th January itself they got. See the above line. On 10th January, Genfit issued gift vouchers worth 5 lakhs to Corporate Solution after receiving the full consideration. Even though they received the money on 10th January, but that is not treated as the date of consideration receipt. What will be treated as the date of consideration receipt? Whenever the voucher is redeemed, that will be treated as the date on which consideration is received. That is 3,50,000 is received on 20th February. Vouchers worth 1 lakh were redeemed on 15th April. Means 1 lakh is received on 15th April. I gave a voucher for 5 lakh, but only 4,50,000 is redeemed. What happened to 50,000? See there. The balance vouchers worth 50,000 remain unredeemed even after the expiry, which means we don't have to pay GST on that. That is not a consideration. This is called as breakage of voucher. We would have received money, we would have given voucher, but the voucher is not redeemed, means breakage of voucher, expiry of voucher, no need to pay GST on that 50,000. Is it clear? Next, invoices for the services rendered by Genfit Wellness Private Limited is raised on 18th March 2026 for 4,50,000 to the customers who redeemed or intended to redeem the vouchers against services. Basically here they raised invoice on 18th March. Now what is this transaction? Is it goods or services? Services. Is it FCM or RCM? FCM. For services or FCM, what is the provision? Please check and tell me. What is the provision for service FCM? If invoice is given within due date, then invoice date or payment date, whichever is earlier. If invoice is not issued within due date, completion date or payment date, whichever is earlier. Please check the question here and tell me what is the date on which service is provided. The invoices for the services rendered is raised on 18th March to the customer who redeemed or intended to redeem the vouchers. So invoice date, assuming that invoice is given within the time. They have issued the invoice even before rendering the services. Means well in advance they gave the invoice. Means invoice is given within the time limit. So what will be taken as the time of supply? Invoice date or payment date, whichever is earlier. First 3,50,000, what is the invoice date? For 3,50,000, what is the invoice date? 18th March. What is the payment date? When that redeemed? When it redeemed? 20th February. 18th March or 20th February, whichever is earlier, 20th February. So the time of supply for this will be 20th February. Got it? Then second, for that 1 lakh rupees worth of vouchers redeemed, what is the time of supply? Issuance of voucher, date of, that is date of invoice or date of payment, whichever is earlier. What is the date of invoice? 18th March. What is the date of payment? So 15th April, whichever is earlier. 18th March will be taken. 18th March will be taken as the time of supply. Are you understanding this? What about 50,000? What about that 50,000 worth of vouchers? GST not payable. Why GST not payable? Because it is called as breakage of vouchers. Okay. Next. Means money is received now for that. Yes, money is received for that. But we don't have to pay GST. We don't have to pay GST for that. Then look into the next one. Time of supply in residual cases. See the next. Page 67, time of supply in residual cases. When residual cases will be applicable? When the time of supply cannot be determined as per any of the above provisions, then time of supply will be under residual cases, balancing figure. First we need to see whether in due date of, like, whether returns are required to be filed or returns are not required to be filed. If the returns are required to be filed, whenever the returns are due to be filed, means due date of return. For when residual cases will be applicable? When the time of supply cannot be determined as per the above provisions, then the residual cases will be applicable. And in residual cases, what is it we need to check? Whether the periodical return, are they required to file or not required to file? Who is not required to file periodical return? Unregistered person. Who is required to file periodical return? Registered person. So if periodical return required to be filed, the due date of return. Where periodical return not required to be filed, date of payment of tax. Got it? But it is purely theoretical question only. So if residual cases they give, you need to just write this. Then for interest, late fee or penalty for delay in receipt of consideration. So what will be taken as the time of supply? Interest, late fee, penalty. Empa, green shirt. Concentrate on the class. You came now only, no? Concentrate on the class. Yanga pesittu irukka. So interest, late fee or penalty for delay in receipt of consideration. Whenever there is interest received, this is not interest on loans, advances, deposits, but this is interest on account of delay in receipt of consideration. What does it mean? I raised the invoice to you. You have to make payment within time. You did not pay within time, so I will collect interest. In value of supply chapter, I told you this will be included in the value as per 15(2)(d). But taxable on what basis? Only on receipt basis. Whenever we are actually receiving it, as and when such amount is actually received. These are the 6 provisions we discussed. Goods FCM, goods are services FCM, goods RCM, service RCM, residual cases, interest, late fee. Over, time of supply is completed. Now we have some additional points related to this. Generally, what will be considered as the date of payment? Tell me, what is considered as the date of payment? From supplier point of view, what is considered as the date of payment? Date of entry in their books or date of credit in their bank account, whichever is earlier. From recipient point of view, date of entry in their books or date of debit in their bank account. Whose bank account? Recipient bank account, whichever is earlier. So meaning of date of payment, date of entry in the books or date of credit in bank account, whichever is earlier. Here date of entry or date of debit in bank account, whichever is earlier. Whether GST is payable on advances in case of goods? No, because if you go to the first point, in time of supply, what is it? It is given. For composition scheme and specified actionable claim only, invoice date or payment date, whichever is earlier. For others, it is only invoice date, whichever is earlier. There is no payment date, which means if I receive the money now, even though I raise invoice in the next month, should I pay GST now? No, because invoice date only will be taken as the time of supply. That is this, which means GST not payable on advances with respect to others. Who is required to pay GST on advance? Only composition scheme and specified actionable claim. But in all other cases, that is services FCM, goods RCM and service RCM, date of payment is one of the date. Simple pa, if date of payment is one of the date and if the payment is received now, should we pay GST? Yes. But in case of goods FCM, other than specified actionable claims or composition scheme, date of payment itself is not there in the provision, which means that even if you receive money, you are not required to pay GST now. Only when you raise invoice, you need to pay GST at that time. That is the meaning of that statement. Then next, sometimes we raise invoice for an amount and we receive the excess amount beyond the invoice. Possible? Mostly in case of credit card bills, telephone bills, etc. We raise invoice for an amount and they round off and they will make the payment. Example, say the bill is 1391 and the recipient will round off and pay 1400 rupees. So how much extra he paid? 9 rupees extra he paid. For that 9 rupees, what is the time of supply? He paid now. But this 9 rupees, when you will give invoice? This month, 1391 pa, he paid 1400. Means this month you received 9 rupees. This 9 rupees will be reflected where? Next month invoice. Means invoice next month, payment this month, whichever is earlier will be this month. Means this month itself we need to pay GST for that 9 rupees. But practically it is difficult for us to pay GST like this. That's why we have one proviso. If the excess amount beyond invoice is up to 1000, if the excess amount beyond invoice is up to 1000, say this, up to 1000 received in excess beyond invoice, supplier has option to pay GST based on invoice issued for such excess amount. That is, as and when invoice is issued for such excess amount, GST is payable by supplier to government. Got it? Means not now. 9 rupees is received now. No need to pay GST now. For this 9 rupees, whenever the invoice is issued in future, at that time we will pay GST. That is the meaning of this. So GST payable by supplier to government, and whenever the invoice is issued, based on the invoice issued for such excess amount. And this is applicable to whom? This is applicable to composition scheme dealer, HC block and supply of services, because these people are only required to pay GST on advance. That's why. Next, look into the another area, GST implications on vouchers. So this is based on the CBIC circular. Already I told you that vouchers are neither goods nor services. Why vouchers are neither goods nor services? Vouchers are divided into two. That is prepaid vouchers, which are recognized by RBI. Example of prepaid voucher is that you can buy Amazon gift voucher or Flipkart gift voucher, Myntra gift voucher, and you can gift it to anyone. And they will use that voucher for purchase of anything of their choice. This is known as PPI, prepaid instrument. You are paying money and you are getting the voucher, which is recognized by RBI, which is treated as money. Any instrument recognized by RBI is treated as money. So money is neither goods nor services. So therefore it is not a supply. Understood the first point? Second, suppose if it is not a voucher, which is prepaid voucher. Example, when you go to Reliance Trends, so there you make a purchase. When you make a purchase, they will give one voucher. Next time when you are coming to the shop, 500 rupees off you will be getting. What is this voucher? Is it a prepaid voucher or a gift voucher? Gift voucher, that's not a prepaid voucher, but it will be treated as actionable claim. Why it is treated as actionable claim? Any instrument which satisfies 4 conditions is known as actionable claim. What are the 4 conditions? Number 1, you have right to receive benefit or right to recover a debt. That instrument is transferable. That instrument is legally enforceable. The holder of that right is entitled to receive the benefit. In case of this Reliance Trends gift voucher, whether you have right to receive the benefit? Yes. Can you transfer it to any other person? Yes. Whether it is legally enforceable, tomorrow if Reliance Trends says, no, I will not give you discount, can you go to the court of law? Yes, it's legally enforceable. And the holder of that right, whomsoever is holding that, they will receive the benefit. So this particular voucher, not recognized by RBI, will be treated as actionable claim. But which actionable claims are covered under supply? Only specified actionable claims are covered under supply. Other actionable claims are excluded from supply. So therefore, again, it is treated as actionable claim, not a supply. From these 2 points, what is the conclusion we can draw? Vouchers are neither goods nor services. Therefore, vouchers are neither goods nor services, but treated as consideration against supply of goods or services. So vouchers are treated as consideration against supply of goods or services. That's why in that question, that well fitness services, what I told you, the date on which voucher is redeemed, that date only we considered as the consideration received. So vouchers are treated as consideration against supply of goods or services. Next, generally vouchers are sold by the voucher issuer to the distributors or dealers. Those distributors or dealers in turn will sell the vouchers to corporate consumers or end customers. For example, Amazon gift voucher you take. Amazon is the voucher issuer. 100 rupees voucher, they will not be selling at 100 rupees to the dealer. They will be selling at 80. So why they will sell at 80? Then only the dealer will have the motivation to sell that to customer. So the dealer, they will sell at 80. And this dealer will in turn sell that voucher at 100 rupees. Even though this dealer is making a profit of 20, but there is no GST on this transaction. Why there is no GST on this transaction? Because sale of voucher is neither goods nor services, so there is no GST. Instead of selling the voucher to the dealer, what if the dealer is appointed as an agent and he is given a commission? Then what is your answer in that case? What is the answer in that case? That particular commission will become supply. Okay. So voucher issuer, distributor is appointed as agent. Now this agent will get a commission that will be chargeable to GST. Only sale of voucher is not chargeable to GST, but the commission will be chargeable to GST. Sometimes the voucher issuer will receive advertisement services, co-branding services, etc. Whether all those activities are taxable? Yes, those are taxable. Only sale of voucher is not a supply, but all other activities related to advertisement, co-branding, marketing, technology services, etc. that will be chargeable to GST. Then last point already I told you. In case of breakage of voucher, what is breakage of voucher? Voucher not redeemed. When voucher is not redeemed, will there be any GST liability? No GST liability. Expiry of voucher, as the same is not redeemed, even though the amount is received against such voucher, GST not payable. For example, one student has purchased 2000 rupees gift voucher from Amazon and he attended one free batch last time. He cleared. And what he did, he sent a mail to us that, sir, I attended your free classes, I have cleared, and therefore, so I am attaching this Amazon gift voucher, like that he sent. Maybe some gift he wanted to give, okay. But in expectation of that, we did not give any free classes and all. So, but he gave. I did not see the mail. I did not see the mail. And there is an expiry date for that voucher, 3 months over. And that student WhatsApp me, sir, I sent a voucher, hope you received. Which voucher? So I didn't get any voucher. Sir, I sent a mail. So who asked you to send a mail? So like I did not get any voucher, pa. I did not redeem, like that I said. Thereafter I went to my mail and I searched. Somewhere in the spam it was sitting, okay. Usually if it is in the inbox we will see. It was in the spam. I did not check it. And I saw the date. The date was over. And I cannot make use of that voucher. Means to that student, it is 2000 rupees loss. And Amazon, it is 2000 rupees windfall gain. And on that, whether Amazon is required to pay any GST? No. 1 rupee also they are not required to pay GST. But they got money, sir. Yes. But for what they received money? For selling goods or service they received money, or for the voucher they received money? For voucher they received money. So there is no GST on that. I also sent a mail to Amazon that this voucher got expired, etc. and all. I got a reply. As per the policy of Amazon, if the voucher is expired, we can't do anything with respect to this. Apologize for the inconvenience caused to you, like that. So this is the fact. That is what I mean to say. Whenever there is a breakage of voucher, even though the money is received, but that particular money received, we don't have to pay any GST. So this is the conclusion of whatever discussion we have made. RBI recognized prepaid instruments. So whether GST is applicable? No. Why it is not applicable? Because reason is it is treated as money. What about non-PPI vouchers? Non-PPI vouchers means not recognized as money, are not recognized by RBI. Even then GST not applicable. Why? Because it is treated as actionable claim. Principal to principal sale of voucher, no GST because it is not a supply. And agency distribution, GST applicable? Yes, because it is treated as commission. And additional service also GST applicable. Expired vouchers, that is breakage, no GST, because the supply did not happen because of this. Then look into the next point. Goods under RCM, service under FCM, service under RCM. 3 places. What are the 3 places? Goods under RCM, services FCM and RCM. 3 places. If the time of supply cannot be determined, then we need to check date of entry in the books of recipient as the time of supply. For example, goods RCM, can you tell me what is the provision? Check. Goods RCM, what is the provision? Just turn the pages and see. The date of receipt of goods, the date on which payment is made to supplier, or 31st day from the date of invoice by supplier. What if invoice is not given by supplier? Means you cannot determine the 31st day. Correct? Check that part. Date of receipt of goods. Goods RCM, darling. Goods RCM. Turn the page. You will see that. Turn the page. Section 12, subsection 3. Section 12, subsection 3. Goods RCM. See this. Page number 66. Point number 3. Goods RCM. Visible? If you don't know which place what is there also, then how you are going to read? Goods RCM, I was clearly telling. Goods RCM, check that and tell me. Turn the page and see. So what is the provision? Date of receipt of goods, that is available. Number 2, date of payment to supplier. So that is also available. But what is the third point? 31st day from the date of invoice by supplier. So whether supplier has given invoice? No. If the supplier has not given invoice, then this 31st day from the date of invoice is not available. Means this date is not available. If this date is not available, you cannot determine the time of supply as per this provision. Correct? That's where we have this note. If time of supply cannot be determined as per the provision, see the date on which recipient enters in his books entry. That is, he will recognize the entry now that he purchased the goods. Purchase entry he will make. That date will be taken as the time of supply. If he did not recognize in his books that purchase entry also, then residual provisions will come. What is that residual provisions? If return is to be filed, date of filing return, if that is due date of filing return, if the return is not required to be filed, then as and when payment is made. So that is this. Next, look into the another point. This is import of services from associated enterprises. There is a supplier outside India and there is a recipient in India, and this recipient in India is importing services and they both are associated. Generally import of service is RCM, correct? In case of import of service being RCM, service RCM, what is the time of supply? Check and tell me. Services RCM, what is the time of supply? If invoice is given by supplier, date of payment to supplier, or 61st day from the date of invoice. Suppose if invoice is not given by supplier, date of payment to supplier or date of invoice to supplier. Usually between associated enterprises there won't be any invoice. That's why that provision is not applicable. So they are telling date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier. Time of supply is date of payment to supplier or date of entry in the books of recipient, whichever is earlier. Then that is with respect to this. And here there are 2 circulars, but actually these 2 circulars were not given in your study material. They removed it. It was there before, but in the updated study material, if you see, I'll just show you. Time of supply. So the first circular is related to HAM contract, hybrid annuity model contract. We don't have that circular, they removed. Previously it was there, HAM contract like that. So that they have removed. Okay. Then another circular was related to spectrum allocation services. That circular also they removed. So which means these two circulars on time of supply not in syllabus. So lot of students would have complained ICI that we are unable to clear tax paper like that. That's why a lot of things they have removed. Okay, they are diluting it to a greater extent. Both the circulars are not there. So we completed time of supply chapter, a small chapter. Now look into the MCQs related to this. Page number 45. Page 45. See the first MCQ. In case of taxable supply of services by NBFC, non-banking financial company, invoice shall be issued within a period of, by when? 45 days. Usually what is the time limit for issuance of invoice in case of banking service, insurance service? 45 days from the date of completion. For others only it will be 30 days from the date of completion. So therefore answer is B. Second, the time of supply of service, in case of RCM, where invoice is issued by supplier, what should be taken? The date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. Okay, whichever is earlier. Then number 3, Sham Limited is receiving legal services from a lawyer, Mr. Gyan, registered. Generally legal service is covered under RCM. Sham Limited is receiving legal service from a lawyer, Mr. Gyan, registered. The aggregate turnover of Sham in the preceding financial year was 40 lakhs. Why they gave? Exemption. Because services provided by advocate to a business entity whose turnover during the previous year does not exceed threshold limit is exempted. But here 40 lakhs means it exceeded the threshold limit, therefore it will be taxable. Means this services is taxable under RCM. Service under RCM. Okay. Now continue. The information regarding date of payment, invoice, etc. is as follows. Invoice issued by Gyan on 15th April means services RCM where supplier is giving invoice. Correct? Then what should be taken as the time of supply? Please respond. The date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. What is the date on which payment is made to supplier? Payment is received by Gyan on 5th May, but they entered in the books on 1st May. Usually which should be taken as the date of payment? Date of entry in the books or date of debit in their bank account, whichever is earlier. Which is earlier? 1st May. So date of payment is 1st May and 61st day from the date of invoice. So date of invoice 15th April, you see 61st day. What is 61st day from the 15th April? In April 15 days and May 31 days. So in June the remaining days. What is that? 14th June. So 1st May or 14th June. Which is earlier? 1st May should be taken. Okay. Then next. In case of supply of goods for rupees 5 lakhs, following information is provided. Advance received on 1st April. This is goods, normal goods transaction. Advance received on 1st April. Invoice issued on 15th April. Goods removed on 25th April. What is the time of supply of goods where tax is payable under forward charge? What should be taken? For goods, normal goods FCM, due date of invoice, actual date of invoice, whichever is earlier. What is the due date of invoice? Supply involving movement of goods, the date of removal will be taken as the due date of invoice, correct? So the due date of invoice is 25th April. And what is the actual date of invoice? 15th April. So whichever is earlier, which is earlier? 15th April. So 15th April will be taken as the time of supply. Understood? Just application of the provision. But only thing, you need to know what is the exact provision, then you will get the answer. Then see this, question number 23. So last few exams, there is no question on time of supply. So there is a possibility of a question on vouchers. On vouchers, they can make a question because it is the latest amendment. For May 26, definitely you can expect a question related to vouchers. Look into question number 23, page 54. Supplier invoices goods taxable on reverse charge basis to Saroj & Company 30 days from the date of invoice elapsed on June 3rd. So this is goods RCM. Generally for goods RCM, what is the time of supply? Date of receipt of goods. From this question, tell me what is the date of receipt of goods? May 12. Date on which payment is made to supplier. What is the date on which payment is made to supplier? May 30. And 31st day from the date of invoice. So please check your book. If you don't know the provision, it's okay. No one can remember the provision at the time of reading for the first time itself. So how many number of times you are seeing the book, that many number of times you are getting revised so that it will be registered in your mind. Don't be lazy. If you don't know, if you know the provision, okay. If you don't know the provision, please open the book and see once. Please open the book and see once. At least that way you will be remembering, because the provision, if you know only, you will be able to answer, otherwise you will not be able to answer. The answer will definitely go wrong, okay. So what are the three dates? The date of receipt of goods, May 12. The date on which payment is made to supplier, May 30. And 31st day from the date of invoice. What is 31st day from the date of invoice? 30 days is June 3. Means 31st day will be June 4. So which is earlier? May 12. So May 12 will be taken as the time of supply. Second case. Supplier invoices goods taxable on reverse charge basis. Again goods under RCM. 30 days from the date of issuance of invoice elapsed on June 3rd. So again goods RCM, what should be taken? The date on which goods are received and the date on which payment is made, and 31st day from the date of invoice, June 4. So which is, I think there is one mistake here. So I think this is June 12 and June 30, because above is May 12, May 30. This is June 12, June 30. So June 4, please change that from May to June. June 4 or June 12 or June 30. Which is earlier? June 4. So 31st day from the date of invoice, that is the earlier. Then look into question number 22. Messrs. THARUN'S of Kolkata is engaged in the trading of transmitters on 25/2021. Messrs. THARUN'S has sent 500 units of transmitters for exhibition at Chennai on sale or return basis. Out of the said 500 units, 300 units have been sold on 28/7 at the exhibition. Out of the remaining 200 units, 150 units have been brought back to Kolkata on 25/11 and balance 50 units have neither been sold nor brought back. Now, this particular question is related to sale on approval or return basis. You are taking the goods to the exhibition. When you take the goods to the exhibition, is it considered as sale on that day? No. In the exhibition, if someone is buying, then only it will be considered as sale. Suppose if you are bringing it back within 6 months, no problem. If you are not bringing it back within 6 months, what is the meaning of that? It is deemed to have been sold. Now see there, when the goods are removed, 25/2021. What is 6 months from 25/2021? So June, July, August, September, October, November. By 20th November 2021, the goods should have been brought back or it should have been sold, correct? Now tell me, before 2011, how much is sold? 300 units have been sold on 28/7. So for this 300 units, when we will raise invoice? 28/7. And remaining 200 units, 150 have been brought back to Kolkata on 25/11. Means beyond 6 months. So on expiry of 6 months, we need to raise invoice for 200 units. How 200 units? This 200 units, 150 brought back and 50 not at all brought back. So within 6 months, whatever quantity not brought back, what is the quantity not brought back? 200, it is deemed to have been sold and we need to raise invoice. Okay, then concentrate. Thereafter, on 25/11, 150 units were brought back, but we already raised invoice. You consider it as sales return and you give a credit note. You got it? First you raise invoice for 200 units, considering it as sale. Thereafter, 150 units were brought back. For that, we need to raise credit note, treating it as sales returns. So that is the answer for this. Mark this question as important. Question number 22. Look into question number 21. An order is placed to T&Co Sholapur on 18th August 2021 for supply of fabrics to make garments. Company delivered the fabrics on 4th September 2021 and after completion of the order issued the invoice on 15th September 2021. Then the invoice is issued on 15th September. The payment against the same was received on 30th September. Determine the time of supply for the purpose of payment under CGST Act. What is it? Goods or services? Goods. Goods, nothing is given. So goods under FCM. Goods under FCM, are they composition scheme? No. Is it specified actionable claim? No. So what is the time of supply? Due date of invoice, actual date of invoice, whichever is earlier. What is the actual date of invoice? 15th September 2021. What is the due date of invoice? Supply involves movement of goods or supply does not involve movement of goods? Supply involves movement of goods. How you know that supply involves movement of goods? Company delivered the fabrics on 4th September. So supply involves movement of goods. What will be taken as the due date of invoice? At the time of removal. So when they removed it, company delivered fabrics on 4th September. So therefore, after completion of the order issued, and 4th September will be taken. So 4th September or 15th September, whichever is earlier. So 4th September is the answer. Understood? Second, HM Industries Limited engaged the services of a transporter for road transport of a consignment on 20th May. However, the consignment could not be sent immediately on account of strike in the factory and instead was sent on 20th July 2021. Invoice was received from the transporter on 20th June and payment was made on 25th August. What is the time of supply of transporter service? So this is a GTA service. We don't know whether it is FCM or RCM, correct? So they have given two alternative answers. If it is FCM, what is the answer? If it is RCM, what is the answer? But trust me, for exam purpose, we need to assume it as RCM. Why? Generally for GTA, what is the default option? RCM. So due to that reason, we need to take it as RCM. If you take it as RCM, what will be the time of supply? Services RCM. Invoice is given by supplier. See there, invoice was received from the transporter on 20th June. Invoice is issued by the supplier. Date of payment to supplier. What is the date of payment to supplier? 25th August. And 61st day from the date of invoice. 20th June, what is 61st day? So June 10 days, July 31 days. So August 20 days. So August 20. August 20 or 25th August, whichever is earlier. So 20th August will be taken as time of supply. Got it? Clear, pa? This is services RCM. This is the alternative to which they have taken, but that is not relevant, because I told you, in the absence of information, usually we will take it as GTA services, and that author services, we will consider it as RCM. Then see this question number 19. Royal Fashions, a registered supplier of designer outfits in Delhi, decides to exhibit its products in a fashion show being organized at Hotel Park Royal, Delhi on 4 January. For the occasion, it gets a makeover of its models done by Aura Beauty Services Limited. Ashok Virar, for which consideration is 5 lakhs, has been charged. Aura Beauty Services Limited issued a duly signed tax invoice on 10th February showing a lump sum amount of 5 lakh 19. They made the payment the next day. Answer the following questions. Whether the tax invoice has been issued within the time limit. This is what services? Beauty services. For beauty services, what is the time limit for issuance of invoice? What is the time limit for issuance of invoice for beauty services? 30 days from the date of completion. See this. What is the date on which service is completed? When the service got completed, it got the makeover of its models done on 4th January. So 4th January service is completed. But when the invoice is issued, 10th February, is it within 30 days or beyond 30 days? Beyond 30 days means the invoice is not given within the time limit. What is the time of supply in this case? If invoice not given within time limit? Completion date or payment date, whichever is earlier. So 4th January will be taken, but they have not asked. Suppose if they have asked, we need to write that. Now see the second question. Tax consultant of Royal Fashions objected to the invoice raised, suggesting that the amount of tax charged in respect of the taxable supply should be shown separately in the invoice raised by Aura Beauty Services. However, Aura Beauty Services contend that there is no mandatory requirement of showing tax component separately in invoice. You are required to examine the validity of objection raised by tax consultant. Should the tax component be shown separately in invoice or not required? Always in invoice, the tax component should be separately shown in invoice at any cost. Is it clear? Fine. The remaining questions you try. These are all on time of supply. So we completed this time of supply chapter also, and we are now moving on to TDS, TCS. Please take that. Page number 152. Page 152. TDS and TCS, there are two sections. Section 51 deals with TDS Section 52 deals with TCS. First, let me give you the background of TDS. Please concentrate. Whenever we make sale to some notified recipients, who are that notified recipients? Primarily government department or government agency, like that. Whenever we make supply to government department, that is notified recipients, they will remit money to us whenever we render services to them or whenever we make supply to them, either goods or services. They will remit money to us. While remitting money to us, they will deduct 2% as TDS, just like an income tax. Just like an income tax, they will deduct 2% as TDS under GST. Whatever TDS they have deducted, they have to remit it to GST department under our GSTIN, so that we can take it as TDS credit in our cash ledger, not credit ledger. It will not come in credit ledger, it will come in our cash ledger, and we can adjust it against our liability. Ditto like in income tax. Income tax also the same logic. Whenever we need to get money from a source, at that source the TDS will be deducted and it will be remitted against our permanent account number. Whenever we are filing our income tax return, that TDS we will be adjusting from the tax payable, correct? Here also same logic. Whenever you are making supply to notified recipients, they will deduct 2%, they will remit that 2% to government against our GSTIN, so we can take it as credit and adjust against our liability. What is the intention behind this? The intention is that if the supplier tries to suppress the turnover, then there should be a kind of cross-check mechanism. For example, I made sales to you for 10 lakhs and you are deducting 2% on 10 lakhs. What is 2% on 10 lakhs? 20,000. Correct? 2% on 10 lakhs is 20,000. So you are remitting 20,000 to government. Now I am showing 8 lakhs as my turnover. Immediately I will get a notice. What is that? Boss, your recipient has remitted 20,000. For 2% if it is 20,000, for 100% it will be 10 lakhs, but you are showing less than that, so you need to pay GST on that extra money. So they will give a notice, they will levy penalty, etc. and all, and they will recover. Mainly to catch the supplier who is trying to suppress his turnover, who is trying to reduce his turnover, they brought in this concept of TDS. Is it clear? So when TDS will be applicable under GST section 51? Whenever the supply is made to notified recipients. So say this, TDS under section 51 of CGST Act, supply to notified recipient. Who are the notified recipients? Government, that is central government, state government, union territory, local authority. Okay, then next, so who are the notified recipients? Government, that is central government, state government, local authority, union territory, all government. You remember government. Along with government, you also remember government, society, then public sector undertaking, PSU, then government body or authority where equity participation is more than or equals to 51%. So all these are government and its family members, correct? Government, then government society, government body in which government has invested more than or equals to 51%, and PSUs. Okay. Apart from this, one more transaction is there, sale of metal scrap by registered person to registered person. Registered person receiving metal scrap from another registered person. These are the 5 cases where TDS under section 51 is applicable. Is that clear? So tell me, what are the cases where TDS is applicable? Supply of goods or services to government, government society, government body in which government has invested more than or equals to 51%, then PSU, and supply of metal scrap by registered person to registered person. Got it? These 5 cases. Next, what is the rate at which TDS will be applicable? 2%. If it is interstate supply, 2% towards IGST. If it is intrastate supply, 1% CGST, 1% SGST. And non-applicability, this is very, very important for theory. What are the cases where TDS under section 51 is not applicable? First, what is the intention of TDS? To find the supplier who is showing lesser turnover. What if the supplier is unregistered? Should we find the turnover of the supplier? No. So TDS is, what is the first point? Supplier is, then what if the supplies are exempted or non-taxable? No need to find the turnover of the supplier. So therefore TDS is not applicable. Supplies are exempted or non-taxable. And what is the threshold limit for application of TDS? 2,50,000. That 2,50,000 is invoice value or contract value? Contract value. Total value of supply under the contract does not exceed 2,50,000, then TDS is not applicable. Then what if it exceeds 2,50,000? Then TDS is applicable, but please be careful. It is the total value of supply under the contract, which means I enter into contract with you for 1 year to supply the goods, but entire goods I may not supply at a time. I may supply it in parts, but I enter into contract with you to supply for 1 year. Throughout this 1 year, what is the total value agreed? That you need to see. If it exceeds 2,50,000, first delivery may be 1 lakh also. First delivery may be 1 lakh also. On the TDS will be applicable. Is it clear or not? We should see what is the expected supply of goods or services under the contract. Next, supplies between notified recipients other than supply of metal scrap. What does it mean? If government makes supply to PSU, TDS is applicable or not applicable? Not applicable. Between notified recipients. Between these notified recipients, if there is any supply, TDS is not applicable. So government is making sale to PSU, or PSU is making sale to government body, or government body is making sale to government society. Between them, if there is any transaction, TDS is not applicable. However, if there is sale of metal scrap between them, whether TDS is applicable? Yes. That is this. Supplies between notified recipients other than supply of metal scrap. Then recipient liable to pay GST under RCM. Why TDS not applicable when recipient is liable to pay GST under RCM? Sir, liability is on recipient, sir. We don't have to bother about the supplier turnover. That's the reason why TDS is not applicable. Next, last. If it is a intrastate supply, but the recipient is in another state. What is this? Listen. Say this. There is an architect who is in Tamil Nadu. There is an architect who is in Tamil Nadu. Government of Andhra Pradesh is having a building in Tamil Nadu. Possible? Yes. Why not? They can have a building. Any government can have building anywhere. Mostly governments will have buildings in the neighboring states, because whenever their officials are going for any work, so they need to stay in that place for that reason. So there is an architect in Tamil Nadu. Government of Andhra Pradesh has a building in Tamil Nadu. This architect provided services to government of Andhra Pradesh in relation to their building in Tamil Nadu. What is considered as place of supply? This is service in relation to immobile property. What is the place of supply? Location of immobile property, that is Tamil Nadu. Supplier also Tamil Nadu, place of supply also Tamil Nadu. What is the nature of supply? Intrastate supply. If it is intrastate supply, what is the type of GST? CGST, and Tamil Nadu SGST. Got it? Now where the recipient is located? Andhra Pradesh. Can the recipient in Andhra Pradesh deduct 1% towards CGST? Yes. But can they deduct 1% towards Tamil Nadu SGST? No, because they are registered in Andhra Pradesh. How they can remit it to Tamil Nadu government? Due to that reason, there is no TDS. Got it? There is no TDS. So it's intra-state supply. But where is the recipient located? Another state. Now in that case, that recipient in another state cannot remit TDS for this state. Due to that reason, TDS itself is not applicable. Understood? So that is this last point. Location of recipient and place of supply not in the same state. Location of recipient is Andhra, place of supply Tamil Nadu, not in the same state, and it's an intra-state supply, so there is no TDS. Tell me, what are the cases where TDS is not applicable? Don't see your book. Supplier is unregistered, 1 point. Supplies are exempted or non-taxable. Contract value does not exceed 2,50,000. Anything else? Supply covered under RCM. Next. Between notified recipients other than metal scrap. Next. So that is, it is intrastate supply, but the recipient is in the another state. Okay. So these are some 6 points you said, that is non-applicability. Usually any 5 points if you write also, that is sufficient. Okay. Next. TDS is computed on the amount remitted to supplier by recipient. TDS is on the amount remitted. For example, say this. I am supplier and the recipient is government of Tamil Nadu. I raise a invoice for 1 lakh plus 12% GST, that is 1,12,000. Do you think government of Tamil Nadu will give entire 1,12,000 at a time? Impossible. Because there is a concept of retention money for contracts with government. They will not release entire amount. They will retain some 20 to 30%. What if tomorrow they identify that there is a deficiency in the goods or deficiency in the service? How will they recover? That's the reason why they will not release full amount. So they are releasing 75,000 plus 12% GST. That is how much? Please calculate and tell me. 75,000 plus 12% GST. 84,000. Got it? Now tell me, what is the amount on which government of Tamil Nadu should deduct TDS? TDS at 2% on what? Not on 1 lakh, not on 1,12,000, not on 84,000, only 75,000. Remember, TDS under GST is not computed on, TDS is not computed on GST component. TDS is computed only on value component. But that to what value component? That much money which is remitted by recipient to supplier. That's what I have given. TDS is computed on amount remitted to supplier by recipient. And TDS not applicable if it is intrastate supply and recipient is in another state. That already we discussed. Now looking into the next page. Computation and complaints. So while computing TDS, whether GST is included or excluded? While computing TDS, GST is included or excluded? Excluded, already I told you. And this TDS, which is deducted by the recipient, should be remitted to government by when? 10th of the month following every month. And they need to file a return. What is that return to be filed by TDS deductor? GSTR 7. See there. TDS deducted shall be payable to government, and a statement in GSTR 7 shall be filed by 10th of the month following every month. And they need to give a certificate in GSTR 7A. So TDS deductor has to give a certificate in GSTR 7A to the supplier that we deducted this much amount as TDS, like that. But there is no time limit for that. Suppose if the TDS deductor has filed the return late, that is GSTR 7. What is the time limit for GSTR 7? 10th of the month following every month. If they file it late, what is the late fee? See there, 25 rupees per day subject to maximum 1000. This is under each act, means under CGST Act. So same amount of late fee is payable under SGST Act. So 25 rupees per day for every day delay subject to maximum 1000 under each act. Whether they are required to file annual return or not required to file annual return, they are not required to file any annual return. Suppose if they file return late, definitely they will be remitting TDS also late, for which should they pay interest? Yes. What is the rate of interest that they need to pay to government? At the rate of 18% is payable for the period of delay in payment of TDS or TCS. Interest is payable. Understood for all the provision related to TDS? Yes. Now we will see TCS. Listen, I'll give you the background of TCS. Already I told you, but I am repeating again. I am a seller selling goods or services through e-commerce platform, and e-commerce platform is required to deduct 0.5% as TCS, and they will remit it to government, mainly to identify the real turnover of the supplier, because the supplier may try to escape from payment of GST. So to identify what is the real turnover of the supplier, they have brought in this concept of TCS. But TCS under GST is just like TDS concept only, correct? Rather than recipient deducting, here e-commerce operator is deducting, but the name is only called as TCS, tax collected at source. What is the rate at which they need to deduct? 0.5%. Okay. Now say this. Section 52. When TCS is applicable? Come on. When TCS is applicable? Whenever supply is made through e-commerce operator. Suppose if I make supply through my own website, is it called as supply through e-commerce operator? No. Sir, I have a website. I am selling lectures and books through my website. Is it called as supply through e-commerce operator? No. If there is some other website where my lectures and books are listed and it is sold, then it will be called as supplies through e-commerce operator. Is that clear? So only when supplies through e-commerce operator, TCS under section 52 will be applicable. Supplier should be different from e-commerce operator, and such e-commerce operator should not be mere agent, that is payment gateway or logistics operators. Whether Blinkit and Zepto required to deduct TCS? Think and answer. Blinkit and Zepto required to deduct TCS? Yes or no? No. How many of you know? Okay, anyone? Reason? Huh? I didn't listen. Own, very good. In case of Blinkit and Zepto, unlike Amazon and Flipkart, there is no listing facility. It is like if I am a seller, I can list my product in Amazon and Flipkart. You place the order. As soon as you place the order, they will inform me. I will pack it and deliver it to them, and they will deliver it to you. This is normal, correct? In this case, definitely TCS is applicable. But Blinkit and Zepto is not operating that way. I will sell it to them. I will sell it to them. They will have a warehouse in which they keep, and instant they will deliver it. So which means it is their own goods which they are supplying through their platform. So TCS is not applicable. Understood? But in case of Amazon, Flipkart, whether TCS is applicable? Yes, of course it's. That is what? Supplier should be different from e-commerce operator. Such e-commerce operator should not be mere agent. For example, Paytm. I am making sale of goods through my website, and Paytm is the payment gateway through which the payment is collected. Whether payment gateway Paytm will be called as e-commerce operator? No. They are not called as e-commerce operator. Why they are not called as e-commerce operator? Sir, their job is just to collect the money and give the money. They will work like an agent. So this is not supply through e-commerce operator, so they are not required to deduct TCS. Next. What is the rate at which TCS will be applicable? 0.5%. And non-applicability of TCS. What are the cases where TCS is not applicable? Number 1, supplier is unregistered. Number 2, supplies are exempted or non-taxable. Same, intention same, sir. The main purpose of TCS is to find the supplier's turnover. When he is unregistered, why we need to bother about TCS? Second, when the supply is exempted or non-taxable, the tax itself is not there, then why to find the turnover of the supplier? So TCS not applicable. One more point also we studied, whenever 9(5) is applicable, liability itself is on e-commerce operator, we don't have to find about supplier, so TCS is not applicable. So supplier is unregistered, suppliers are exempted or non-taxable, and notified service under 9(5). Last, payment not collected by e-commerce operator. Means payment is directly collected by supplier, e-commerce operator is just doing the delivery, then in that case definitely TCS is not applicable. Got it? Payment is not collected by e-commerce operator. Next, TCS is computed on what? TCS is computed on what? Value including GST or excluding GST? Excluding GST. Whether sales returns is deducted or not? Yes. Payment towards contract value excluding GST minus returns during the month. Because in e-commerce platform, always this sales returns is something which will be there. Agreed? You take Myntra. If Myntra is surviving, it's only because of the return policy. If Myntra says, no, we will not offer return, the moment they tell that, that platform is gone. Agreed? Because lot of people are purchasing garments there only because if it is not fitting, they will be able to exchange. But others are also there who will buy it, wear it, and then they will return. And that's the reason why now Myntra brought in one tag concept. Okay, one tag will be there. You cannot fold it also. It will be so stiff that it will be attached to the dress, and if you cut it, they will not agree for return and all. Okay, so this particular return is something which is there in every e-commerce business. That's the reason why sales during this month minus sales returns during this month. What if it is negative? TCS is applicable or not applicable? Not applicable. Sales is 10 lakhs. Sales return is 12 lakhs. Possible, na? All the sales which are made in the last month, it would have been returned this month. So then sales is 10 lakhs, sales returns is 12 lakhs. Whether this month TCS is applicable or not applicable? Not applicable. So that's what. Payment towards contract value excluding GST minus returns during the month. And by when the e-commerce operator should remit the TCS? By when, pa? Same, 10th. 10th of the month following every month, and they need to file one return. What is that return? GSTR 8. TDS deductor will file GSTR 7. TCS deductor will file GSTR 8. And time limit is same, by 10th of the month following every month. But extra one more point, TDS deductor not required to file annual return, but TCS deductor required to file annual return in GSTR 9B. 9B. They are required to file annual return in 9B. Then late fee also there is a difference, you check. For GSTR 7, what is the late fee? 25 rupees per day subject to maximum 1000. But TCS, what is the late fee? TCS return, what is the late fee? 100 rupees per day subject to maximum 5000 under each act. Why like that? Simple. TDS deductor is, that's why. Got it? So therefore very less late fee. But TCS is private people, na e-commerce operator, let them pay. So 100 rupees for every day subject to maximum 5000. Suppose if they file return late, means TCS also they are going to pay late. Are they required to pay interest? Yes. What is the rate at which they need to pay interest? 18% per annum for the period of delay. Now concentrate. Whatever TDS and TCS deducted by the notified recipient and e-commerce operator will be reflected in the supplier's electronic cash ledger. Got it? Notified recipient deducting TDS and e-commerce operator deducting TCS will be reflected in the supplier's which ledger? Credit ledger or cash ledger? Cash ledger, and that can be used for payment of any liability. It can be used for payment of tax, it can be used for payment of interest, penalty, late fee, for anything the supplier can use. TDS TCS deducted shall be reflected in GSTR 2A of supplier, which is reflected in the cash ledger and is used for payment of GST liability. It can also be used for payment of interest, penalty, late fee, etc. And there is a time limit for rectification of GSTR 8. GSTR 7 cannot be rectified, but GSTR 8 can be rectified. What is the time limit for rectification of GSTR 8? Same time limit, total in 5 places the time limit is same. Time limit for availment of ITC, time limit for issuance of credit note, time limit for rectification of GSTR 1, time limit for rectification of GSTR 3B, and time limit for rectification of GSTR 8. For these 5, what is the time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Same time limit for availment of ITC, credit note, rectification of 1 and 3B, but GSTR 7 cannot be rectified. So we completed TCS, TDS, and we have some other points related to this, and that we will see in our next class. With that, this chapter will be over. So tomorrow, our agenda is that we will be completing this all pending topics. Registration also we will discuss, and we are left with payment process, returns, and then supply under GST, apart from registration. Remaining and all we completed. Now e-way bill, accounts and records and all we completed. Okay. So that's the agenda for tomorrow. We'll try to complete it as much as we can. Mostly I'll try to complete the entire portion, don't worry. Then I just wanted to make one communication with you. That is, so we are having this revision batches for all the subjects, power prep batch like that. Some of you have joined. Others, if you want to join for the revision classes, you please check from our admin. Okay, and that is not the communication which I wanted to make. Important is that we are taking classes now for foundation and intermediate regular batches also at a nominal fees. The entire fees for CA intermediate both groups is 60,000 including GST, which in other places is 90,000, 1 lakh like that. 60,000 including GST, and for foundation we are charging 30,000 only including GST. So reasonable fees. Properly we will take classes. If at all any if at all anyone you know who has entered into CA course, please tell them to consider us also as one of the option. Okay, so maybe we may not be great, we may not be having that much of fun and all, we may not do in the class, and we will not dance, sing, etc. and all, but we teach. We teach the subject. If someone is seriously interested in learning and clearing CA, ask them to consider us. Okay, if someone want to just enjoy with girls, boys, etc. and all, no, please, no. There are a lot of other places they can go there, and if they want to be serious about their career, please ask them to consider us as their option. Thank you. Thank you.